ladies and gentlemen, a warm welcome to all who are with us on Business Today Television on this wonderful Thursday morning. Delhi is awash with rains, a clean city, and of course a lot of strength in the market is what we are expecting thanks to rains both in Delhi and Mumbai. They have been delayed, but we should be seeing good rains now, making up for the deficit. Now let's look at the structure of the market. It's Thursday, so we are looking forward to the weekly expiry of the Sensex. As also, the GIFT Nifty is pointing to a nice uptick of about 141 points. Let's just say 70-80 on the Nifty is what we should definitely have. So Wednesday's close was 24,000 almost. So the start should be somewhere around 24,100, which is really good, because you have over the last 5 weeks or so not been able to kill the 200-day moving average, the 365-day moving average of the Nifty, and that has proved to be a very strong resistance for bulls to overcome. What will help them on its way forward will be the Nifty Bank. A lot of strength coming into the Nifty Bank as well, and that is one index that should do well. So that's as far as the Nifty and the Nifty Bank is concerned. But the broader markets, ladies and gentlemen, is awash with gains. The rally is expanding to sector after sector after sector, and today's focus will be two indices. The Nifty High Beta 50 Index primed for yet another record high, as also the Nifty Infra Logistics Index. All these two will be the cornerstones of a very good rally that we should be seeing coming in their respective constituents. What else is in top shape? Look no further than the Nifty FMCG Index. Ladies and gentlemen, this one still remains much below 200-day DMA and has had a terrible time, but very strong gains coming in yesterday. A 2 percentage point uptick on the Nifty FMCG Index, a 1,000-point rally to 49,806. Three stocks need to be looked within the FMCG space, which is Marico heading towards a fresh record high, Dabur restarting a rally after many months of underperformance, and of course Nestle. These are the three stocks that are in super top shape as far as FMCG is concerned, as also Hindustan Unilever and Colgate Palmolive. There is news on the market that a volume growth this time in the Q1 earnings for the FMCG space should be very good, and since IT is underperforming, Nifty needs something other than the IT index to help it on its way up. What else is buzzing? It's the capital market space. You have to look at three stocks, and all of them from the AMC space. HDFC AMC, Nippon India NAMC, which is called NAM India, and of course you have a strong move which is coming into ICICI AMC. Apart from that, two brokers, Grow Financial Services and Motilal Oswal Financial Services, are in strength, as of course the back-end services provider CDSL. That's the space that we are looking at. Apart from that, look at the real estate space. Strong breakouts happening in Mumbai Realtors, Phoenix Limited, Lodha. Apart from that, down south, Bangalore is represented by Prestige Real Estate. Strong gains there as well. DLF as also Godrej Properties. These are the top 4 or 5 spaces within the realty space which should do really well. And of course, I've saved the best for the last. In the FinServ, mid and small cap FinServ, you should see rallies continuing in AB Capital, Aditya Birla Capital, Federal Bank, AU Bank, Ujjivan Small Finance Bank, and of course the rally is also looking pretty good in Karnataka Bank. So that's the broader structure of the market, ladies and gentlemen. The Nifty and the Bank Nifty may rest, but they are range bound. But lots of action in High Beta 50, Small Cap 50, Infra Logistics, Capital Markets, as also strength coming into the FMCG space. Vaishali Parekh joins us from Prabhudas Leeladhar. Good morning to you, Vaishali, and a very warm welcome. What's the prognosis on the Nifty and the Nifty Bank?
to all of you. I think Nifty is gradually, of course, it has confirmed for now that the strong support is at 23,800, and from there on, Nifty is attempting to bounce. And we maintain our view on near-term basis. 23,800 should act as a support, and well, 24,200, 24,300 is the hurdle that it needs to cross. So for now, we have this range which has been going on for since a long time. But compared to that, of course, Bank Nifty is much better placed. So I think gradually Bank Nifty will go for intraday purpose 58,300, 58,500 also. But long-term bias still looks more positive, going higher. And now 57,000 should act as a support in Bank Nifty.
Okay, fair point. Let's also look at one accident that's waiting to happen today. I'll request the PCR to please fire the chart of Wipro ADR, which I have sent. Remember, each day brings a new crisis for the sector. Yesterday night on Wall Street, Wipro's ADR crashed more than 16%.
Oh my God.
We know what's going to happen today, so that's the pain point. Yesterday, we saw Infosys slip below the 4-digit mark for the first time in many years. It's eroded 50% of its market capitalization in a span of 18 months. Similar kind of falls are seen on TCS as well as Tech Mahindra and many other small cap, mid cap IT stocks. So Wipro is something which you should be watching out with a bit of issue today morning. Let's see how it opens. Vaishali, to you, stocks that look good, where are you finding strength in the first week of the July F&O expiry?
Well, so there are quite a few stocks which now look positive and getting in a trend. Now with crude going down, of course, I do like Interglobe. That is also getting into a new round of momentum, and that's what we witnessed yesterday. For trading purpose, I think IOC can give a good bounce from here on. Breakout stocks were yesterday, of course, delivery, which gave a decisive breakout above 484. But our technical target resistance comes at 510, 520. New buying opportunities, I think Cochin Shipyard, Mazgaon Docks, they are very well placed. So I would be looking at that. And also Geo yesterday was showing some strength. So these are the stocks which look favorable, technically well placed, and I would be focusing on these.
Wonderful. That's the view that is coming in from Vaishali as far as strength is concerned. Let's check with her the sectors which are now showing leadership qualities. FMCG, a view that you may want to offer, Vaishali, on Marico. Anything that looks good to you beyond Marico?
Yes, so whole FMCG counter now looks quite attractive. So Marico, as we had mentioned, it was always outperforming, and it shows yesterday's bullish candle gives us further high price projection of 880 to start with. So Marico is in a good strong uptrend. But besides that, we saw Dabur showing a good strong bullish candle yesterday. So was the case with HUL, Britannia. They are making an effort to get into momentum. So value wise, I think HUL, Britannia, they look very good to me. Dabur yesterday surged by nearly 5%. So a little bit of a dip, maybe at around 430. That would be a good level to consider buying, to look for a target of 460, 470. And likewise, even Britannia, I guess it's pretty much done with its corrective move and now making an attempt to get into momentum. Positionally, I think 5,000 should act as a support and look for a target of 550, 600, 5,800. So I think these are all fair. In fact, even Hindustan Unilever, that has also shown first round of strength setting in. So I would say, technically, if we talk about it, higher bottom formation. So 2100 would act as a support, and positional target would be around 2350 to start with.
Okay, fair point. Anything that catches your interest in the realty space? Where are you watching strength gaining ground within real estate players?
Yes, in fact, quite a few. Yesterday, as a disclaimer, we had recommended DLF. So that is showing good strength. 660 is the hurdle. Once we see DLF going above 660, we can see 680 and so on. Likewise, even Loda, Prestige, all these are good. Godrej properties, they are all showing strength. So yes, the focus is on all of realty sector. And as far as cash is concerned, we are looking at Sobha. In fact, even Hubtown is getting into momentum. Yesterday, we saw good volume picking up in Hubtown. So that is another stock that I would like.
Okay. And our bread and butter, the capital market space is also abuzz with gains. Any preferences there on the long side? How are you looking at the AMCs? Any brokers that catch your attention? What is looking good?
Yes, to start with, it is CDSL. I think that's also getting into new round of momentum. Besides that, it's Angel One, and then HDFC AMC that is looking quite positive. So yes, this category of stocks looks quite positive. So I think buying opportunities are seen in these stocks.
Okay, fair point. Let's analyze the Nifty in its totality, Vaishali. A couple of stocks rallied very sharply in the last week of July, last week of June, as far as markets were concerned within the Nifty. Where exactly is strength when you look at the index overall? What would push the Nifty higher beyond 24,200, 24,300?
Well, of course, Bank Nifty and financials, they continue to show strength. But for Nifty to surge high and show strength, IT index should make a halt. So this is one of the weakness zone. So is the case with metal sector. You're seeing some corrective move coming in metals once again. So that should stabilize and get into new round of momentum. But besides that, I think even energy index, which has taken quite a beating, that should participate as well. So I think for Nifty, really overall, we need a combination of all these sectors to participate. I won't expect much from the pharma sector, though it is in the bull zone. But I think it can take a breather because we've seen this sector doing very well in the recent past. So maybe it can take a breather, or maybe some profit booking can be seen in this sector. So I'm not expecting much from pharma, but yes, the other sectors that we spoke about should participate, at least stabilize and not see further erosion, because the heavyweights, Infosys, TCS, they are being badgered left, right, and center every single day. So poor Nifty, I mean, how can it participate in upward rally?
Absolutely, I agree with you. I think one of the major negatives that we are facing is this absolute downdraft that is coming into the IT space. You know, pick a day. It's persistent. It's KPIT technologies, falling 10, 15, 12% each day. Today will be Wipro's turn. Infosys is also headed below the 4-digit mark. You're absolutely right, Vaishali. There is really no chance for the Nifty to move higher unless you get some kind of a support coming in from the IT space. I so agree with you. So that's the market structure at this point of time. We will also be looking forward to Q1 earnings, which should start early next week, and they might provide a clue as to where IT is headed. But for the moment, ladies and gentlemen, it's extremely oversold. Please don't try to short positionally as far as IT is concerned. Intraday shorts are working. That's much better. Let's look at a couple of stocks, Vaishali, from the Adani stable. Strength in Adani ports, in fact, fresh record high. What are the charts telling you for Adani ports at 1848? This is, of course, a fresh record high, and the market capitalization stands at 4,25,000 odd.
Yes, I think in fact full Adani pack was doing very well yesterday. And talking about Adani port, of course, it's at a new high. I would say 1800 should act as a support now for near-term basis, or rather 1780. But this can go towards 2000 levels if this momentum and volume sustains. So projection is of 2000 levels, because even the indicators are not showing any signs of exhaustion. In fact, it's looking that it's still ready for an up move, and it can go towards 2000. So yes, that's my view for Adani Port.
Okay, fair point. That's how you're looking at the markets at this point of time. Let's look at some other stocks that are buzzing with gains. I see a lot of strength within the Nifty as far as charts are concerned in Eternal 280. Yesterday, the stock rallied 5.5%, and of course, it's been beaten down tremendously. Is there a swing trade in the making for Eternal? Vaishali, where would you be marking an entry point?
Actually tracking this stock right from 250 levels, because that was a cluster of support of quite a few moving averages. So that was acting as a very good support, and it give a breakout, after a long consolidation. So currently it's at 279. It needs to cross, and it's resisting at the 200-day moving average. So buying opportunity should be seen at around 268, 270 levels. But to those who are holding this stock, wait for this to cross 280 levels and sustain above that, and that would give us a next target of 290 to 310.
In terms of weakness, ladies and gentlemen, it's HCL Tech, Infosys, TCS, Tech Mahindra, and Wipro. Absolutely zero ranking in terms of relative strength as far as the Nifty is concerned. There's just nothing buzzing here. What also is big is Hindalco and Coal India. So these are stocks where you can push, looking at ports at that area. What's happening in the F&O space? Let's have a word with Vaishali on how strength is panning out within the F&O space. I would imagine AB Capital is what she finds of interest. Strong intraday, positional, as also long-term charts. Vaishali, 393 on AB Capital. Just last month, it crossed over higher than the 1 lakh crore market capitalization. What are the charts telling you?
Well, absolute strong uptrend, but it would be quite risky to get into the trade. To those who want to get into the trade, 380 would be the stop loss, and one can get into the trade for a target of 410. So yes, of all periodicity, the trend is absolutely strong. But having said that, it has also shown a good run up. So well, keep your stop losses for sure.
Okay. What would you prefer in the NBFC space? What catches your fancy?
Well, there are quite a few. We talk about L&T Finance, we talk about Shriram Finance. Shriram Finance is showing a lot of strength. So this is one of the recommendations since a while that we've given to our clients. And I think that should gradually give us a target of Shriram Finance. I think yesterday it closed at around 1048. Gradually this can go towards 1100 and higher. So this is one of the stocks that we do like. L&T Finance gradually is also surging high, so that is another stock. Of course, Bajaj Finance and Bajaj Finserv have done their bit, but these are the stocks besides these would continue to do well. So they've already caught on in a good uptrend, so view continues to be positive.
Vaishali, where are you negative as far as markets are concerned? Leave IT out of the space. Where are charts just not keeping up?
So as I spoke about a few of the metal stocks, so Nalco is one of the stocks which is showing weakness. And if this
Yes.
selling continues, uh, this can go towards 300 levels. Nalco is one stock which is showing weakness. Besides that, I think, well, it's just begun. I feel Apollo Hospital has shown a good run up. It is showing some sign of exhaustion. So if the levels break, I think we can see some bit of a corrective move coming in. Apollo Hospital, maybe towards 8400, 8300. So these are the few stocks which are showing some clarity
Okay,
that
okay.
yes, downside is possible.
Okay. Let's look at the FNO stocks that we were tracking, of course. We've discussed AB Capital, Adani. Yes, one more space, ladies and gentlemen, that's doing extremely well is the MNC setup. So three stocks stand out: Maruti, Bosch, and Nestle. Take your pick, Vaishali. Which would you want to analyze first? Maruti, post its numbers that came in yesterday, or Bosch? What are the charts telling you in terms of strength?
I would say all three are my favorites. Maruti, of course, has already got in a trend, but I think this is possible to go towards 15,000, from here on. So this is one of the stocks for trading perspective. Bosch, as far as Bosch, it takes its own time, but it is, I think, a good investment buy if you were to ask me, because this stock too has started showing strength right from 36,000 levels, and now it's on a verge of a breakout. Whenever it happens above 42,000, this will be ready for further high levels of 45,000 and so on. So Bosch, I won't say it's a trading bet, but can have in your portfolio. And talking about Nestle, well, we spoke about the whole FMCG basket, so it's time. Nestle also gives us good returns from here on, and it's quite evident from the chartical formation. 1380 was the support, a good consolidation, and now getting into a trend can go towards 1500 and higher.
Fair point. Let's look at some high beta, low ticket items. What are the charts of Karnataka Bank telling you? This is, somewhere priced like 273, 274, and is about 3% off from its 52-week high. What are the charts telling you on Karnataka Bank?
So I think the uptrend continues. It's still ready for higher targets. 265 would be the new support level now that one can look at. Even if I'm looking at the weekly chart, I think this is likely to go at least first to 290. And from there on, of course, it's a breakout level. So we can have a relook from 290 levels. If that is so, we will see higher targets.
Okay, fair point. Any prognosis on KPIT Tech or Persistent? Should we be buyers at these levels or stay away? What are your thoughts on these two stocks that really took it on the chin?
So I looked at Persistent very closely yesterday, and I think for long-term trend to remain intact, if you see the weekly chart, it has come towards a 200 period moving average. And if you see the previous prominent low, that was at 4250. So if we have to have a ray of hope rather in Persistent, then for 4200 should be the near-term support. I'll be a bit lenient in my stop loss, say 4000 to take a long-term bet. Stock should not go below 4000, and if this stock moves above 4500, then I guess the worst is over. So depending on your time horizon, near-term support is 4200. That's how I would look at.
Yes, ladies and gentlemen, but don't be brave here. Don't catch a falling knife. Let the institutional buyers and sensible analysts like Vaishali, put their neck out and let them buy first. You buy after, 2-3 weeks of sustained change in momentum, and then get into it. Remember, we've seen 7-8,000 on Persistent earlier. It doesn't matter whether you get in at 4,000 or 4,500, but you should get in when the trend changes for the better. 8:56, ladies and gentlemen. We are 4 minutes away from pre-open. The Nifty is pointing, the GIFT Nifty is pointing to a smart uptick of about 140 points. Let's just say 70 is what we will get. But from then on, IT will be in pain. Wipro's ADR is uh, showing a 16-17% downtick close yesterday. So that will be in pain. But FMCG, capital markets, realty, small cap 50, high beta 50, infra logistics, MNCs. These are stocks in top form. Let's get back to Vaishali. Vaishali, you mentioned a bit of a weakness that you see in Apollo hospitals. What about the broader sector as far as pharma is concerned? Are you looking at some signs of fatigue and sluggishness at these record high levels?
So, when we were looking at pharma index, 26,000 was the strong resistance. So, that is why I was saying that pharma will take a breather. And yesterday we saw a slight hint from Sun Pharma, Fortis, Dr. Reddy, that there is some corrective move coming in. So, my view would change if we once again see Nifty Pharma going above 26,000, 26,200. But for now, there is some resistance at these levels. So I think it can go into some profit booking.
Okay. Let's look at some reports that are coming in on the sector. It's Bharti Airtel, and this is CLSA. It says ranks Bharti Airtel as outperformed. Target is placed at 2310. Remember, Bharti Airtel is sub 1900 at this point of time. It says citing post-trade leadership driving industry leading RPU. ARPU, average revenue per user, low price sensitivity of postpaid users, fast lane accelerating subscriber gains, and an inevitable sector tariff hike. So all these 3 or 4 points are propelling Bharti Airtel higher. Let's get Vaishali's view in on a possible swing trade on Bharti. Vaishali, your thoughts here?
This is again another stock which doesn't act well for a trading strategy. It is good for a positional trade. And
Yes.
this being one of the frontline stocks, it's quite a favorite of everyone. 1760 was the support, prominent support, and that's what we saw, that the stock has started moving from there on. So gradually, I think it is yet a buy with 1800 as support for trading perspective, and can look for the next target of 1950. Above that, of course, it's 2050 and so on. So yes, it's yet a buy with support of 1800.
Okay, fair point. 8:59, and we are now seconds away from pre-open. Remember, 24,000 is what the bulls closed shop on Wednesday. We are looking at a minor gap up. Let us see how that happens. We are looking at strength in capital markets. We are looking at strength in realty, as also FMCG, auto too, and weakness in IT, especially Wipro. Okay. The first trades are upon us. We will definitely ignore the Nifty. Let's look at how the equity statistics are doing in terms of what the most active counters are. You have a green tick on the Bombay Stock Exchange, 0.5% higher. You have RITES, which was the top gainer yesterday, the railway consulting space, up again about 0.77%. KPIT is down. Eternal is in the green, 1.9% higher. Let's look at why the Nifty is in pain. Wipro. First lower circuit, 10%. That's how it works in the FNO space. So that's 153 for you. What else is pulling the index down? Bharti Airtel 3% lower, ICICI Bank 2% lower, 2.5% lower, HDFC Bank 2.5% lower, Shriram Finance down 1%. So these are painful times. What's in gain? Very little. Indigo 1.8% higher. Infosys climbing back above 1,000 rupees. Let's see how it goes. But it's painful. A quick look at the FNO space. Okay, a 10% uptick on Chola Investment and Finance futures. flat now. Nothing much here, ladies and gentlemen. Nifty flat as flat can be. What we'll do is we'll take a very, very quick break and back with you in a jiffy.
An 11-year-old boy left home for school, carrying his school bag, looking forward to another game of cricket after class. But he never came home. Today, his grieving mother sits holding Vihan's cricket bat, waiting for a son who will never again ask, "Can I go out and play?" This is India's financial capital, where parents believe a school bus is the safest place for their children. On Tuesday, that belief was shattered. A roadside tree crashed onto a school bus in Chembur. 11-year-old Vihan Shivastav never made it home. 5 other students survived with injuries.
During concretization, a little bit of digging is done, and at that time the route was found to be a little hollow, and that's the reason the residents say that they had asked the contractor to ensure that the tree is removed. However, the contractor, being someone who was actually only in charge of doing the roads, he did not take this seriously and went ahead and did the concretization.
Local residents claim they had complained the tree posed danger.
बड़ा था लेकिन पोकल हो गया था आधा, ऐसा लग रहा था कि गिरेगा कभी भी ये।
कंक्रीट वर्क जब चल रही थी, हमने उनको बताया कि हीट के वजह से रूट्स ड्राई हो गई है और ये डिग कर रहे थे कम से कम 1.5-2 फीट। तभी एक डाउट था कि कुछ ना कुछ होने वाला है।
Mumbai Mayor Ritu Taure has ordered a probe. The BMC has constituted an inquiry committee.
कुल मिला के 13 स्टूडेंट वैन में थे, उसमें के जो 12 स्टूडेंट है अभी वो आउट ऑफ डेंजरस है। एक जो बच्चा है वो एक्सपायर हुआ है। जो भी पालिका प्रशासन का उधर अधिकारी है, वार्ड ऑफिसर है, उसके ऊपर जवाबदारी निश्चित की जाएगी।
Even as Mumbai mourned Vihan, another tree crashed onto vehicles in Kurla. And in Navi Mumbai, 2 young women riding a motorcycle suffered electric shocks from an exposed wire near the Nerul LP bridge. Both are out of danger. The mayor has ordered an inquiry.
2 मुली कॉलेजवरून येत असताना इथं ओपन वायरवर त्यांचा पाय पडून त्यांना शॉक लागलेला आहे। नशिबाने त्या सुखरूप आहेत, त्यांना जास्त इजा झालेली नाहीये। नक्कीच अशा पद्धतीच्या घटना यापुढे घडायला नकोत। आम्ही एमएससीबी असो किंवा इतर प्राधिकरण त्यांच्या माध्यमातून हे चूक झाली असेल तत्काळ दुरुस्त करण्याचे निर्देश देण्यात येतात।
A falling tree in Chembur, an exposed live wire in Navi Mumbai, different incidents, but the same uncomfortable questions about civic safety. The monsoon cannot be stopped, but tragedies caused by neglect can be. The question is, will this be another report filed away, or the moment those responsible are finally held to account? With Vidya and Mustafa Sheikh, Bureau Report, India Today.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only on
on
India
Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multibaggers at BTTV.
Fine! Well said! Well said! Well said! SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Good morning and welcome. You're with us here on Business Today. I'm Abha Bakai. Let's take a look at the top news at this hour. The government announces one of the biggest overhauls to EPF rules, employee and employer contributions mandatory only up to an amount of 1,800 rupees a month. Above that, the employer no longer has to match the amount. Get ready for a sea change in your salary structure. Crucial talks between India and Japan may reduce the role of the US dollar in bilateral trade. Plans for a local currency settlement framework that would allow direct yen-rupee transactions. Joint statement after prime ministerial talks could include the proposal. Hero MotoCorp announces an investment of more than 3,200 crore rupees in Andhra Pradesh. The company will build a global parts center in the state. Also announces several social measures. Donald Trump defends his billion-dollar-plus crypto earnings, dismisses allegations that he's using his position to enrich himself, says everyone is profiting from the stock market boom. Wipro ADRs plunge over 17% as AI-led pricing pressure and a weak earnings outlook rattle investor sentiment. A recent JP Morgan downgrade adds to the concerns, with markets questioning the growth prospects of traditional IT services firms in the AI era. As always, first a look at the currency, and on your screen this morning it is further depreciating after a brief move upwards. I think last week, this week it has seen consistent decline, this time moving further towards the 95 mark. There you have it, 94.93 versus 95.25. So just a marginal appreciation from yesterday, but overall continuing to trend downward. That's on the currency this morning. Let's also take a look at the precious metals and what we're looking at there as well. Completely flat. Gold is down just about 300 rupees this morning, and silver, if we take a look at it as well, is also completely flat right now. Let's bring you the latest from US President Donald Trump. They've rubbished claims that he's used his office for profit. Trump, responding to filings that show an income of $1.4 billion last year from crypto and meme coins, has said that every investor had gained from the boom in stock markets and that his portfolio was handled by professionals and not by him. Listen in.
I don't get involved in my personal. We have funds that run my money. And I never speak to any of the people that run the money. But they're at big institutions, and they invest in whatever they invest in. Well, you know why I'm profiting? Because the stock market's gone.
All right, Shailendra Bhatnagar and Avinash Gorakhsakar joining us this morning. Shel, first, let's take a look at the setup because we're just about entering into opening bell.
Well, Abha, frankly, I'm relieved that Wipro is not down 16-17%, just a mild downtick. Strength in Infosys, HCL Tech, Bajaj Auto, TCS, that's really good. And we hope for a positive day and a close above 24,200 as far as markets are concerned on the Nifty. That should be a great relief. Lots of sectors opening up. Capital markets, realty, FMCG in particular. So that's what I'm looking at. Strength.
All right, taking the small wins then. Close above 24,000 yesterday and looking at 24,100 today. But on the steady uptick right now is what we're tracking. We'll have IT in focus, of course. Let's pull up Wipro for you. And that kind of nosedive that we're seeing US markets overnight, especially NASDAQ trending a little weak. Asia this morning will pull that up for you as well, and keep an eye on the Indo-Japan meet. But IT is one to focus on. Looks like there may be some recovery buying today, but let's pull up Wipro in particular as well and take a look at where that's at. Meanwhile, overnight on Kospi as well. And remember, we're bringing up the global indices also to show you the pressure that comes in, again, on the back of AI-related fears, and that entire story is perhaps overblown. Back home, Wipro now is down just about 0.4%. But we had a warning also coming in yesterday from KPIT Tech as well. And we did see a lot of pressure in terms of tech companies overall. So keep an eye on IT, and we'll talk to Avinash a little bit more about that in just a moment as well. But opening bell for you on your screen, we've got just a small green tick coming in, and 24,069 is where we're kicking off today. Looking decent on the index. Let's also pull up the advanced decline and get you a sense of how market mood is shaping up right now. I'm just pulling that up for you. Nifty IT is rebounding. It's up about 2%, but as I said, and we'll talk to Avinash in just a moment, it's too soon to really read too much into it. We know the larger structural story and the kind of downgrades we've been seeing across the IT pack. Realty this morning, a marginal green tick coming in on that front. And other than that, let's take a look at maybe the banks, financials, and take a look at Z perhaps in the news on fundraising plans. So there you have it, Infi, HCL Tech. So IT is rebounding right now. And on the downside as well, we'll pull up some of the other stocks in news and take a look at how they're faring this morning. Well, tech is leading the way. So Avinash, let me get your view in on this. I think, for the market, it's also important to remind our viewers of the kind of seesaw effect we're currently witnessing across the IT pack on news triggers, but the larger structural story is one that's still in question.
Yeah, good morning, Abha. I think, IT companies are definitely under a cloud because I think, after yesterday's announcement by KPIT that the guidance for Q1 would be bad, that resulted in almost a 15% drop in the stock price in one single session. I think Wipro also, if you look at the structure, I think despite the buyback, I think the stock has not attracted a lot of buying from institutional or ultra HNI or family offices. And I think most importantly, people are worried that maybe the first and the second quarter for IT companies as a whole could be sluggish because the real growth could come in from the second half of this financial year. So I think, with growth remaining absent, I think it's quite obvious that, the valuations which these companies are enjoying, there's been a reshuffling in the markets. People are shifting from IT to some other sectors like autos, capital goods, or maybe oil marketing companies, where the earning triggers look much better. So I think to a large extent, what is happening is very natural. And I think, I don't think you're going to see a bounce back in IT very soon. It will take some time before the market actually looks at, this segment with a little more maturity. I think at least for the next 2 quarters, you could expect a decent underperformance here.
All right. So underperformance coming in. Should we talk about some of those stocks in particular also, Avinash? Because let's take a look at Wipro, for example, and some of the news on that front, or within the IT pack, what you feel is perhaps the strongest potential bet. Perhaps some of our investors are already, hold stakes in some of these companies. So where do you feel it's wise to stay invested? What's looking a little weaker?
No, I think within the large cap, I think we believe that, companies like TCS or Infosys or HCL Technologies, these could be decent defensive bets. But again, investors who are buying these stocks have to take at least 8 to 12 month kind of time horizon, because in the very near term, there are hardly any triggers. The rupee depreciation has actually not helped them. What is important is order inflows, which have been lagging for a very long time. So my sense is that, these companies can be a defensive kind of, strategy. But I think without growth coming in, I think there is hardly any re-rating going to happen in the short term. So longer term, if one wants to add value, one could look at TCS, Infosys, HCL Technologies. We prefer to stay away from the small IT companies. We'll prefer to wait for the Q1 numbers and the commentaries and then take a call. But these companies could preferably be really meant for large, for long-term investors who can wait for a couple of years.
Right. Shell, talking about IT, I just want to continue that conversation because we also saw what happened with KPIT Tech and alluding to, of course, a hit when it comes to the auto segment and those clients. But there are other companies like Ascient, Tata Elxsi, L&T Tech, for example, Tata Tech, that are also hit on the back of sentiment on that commentary. And it was quite a sharp cut. I mean, speaking moderately there. And today we're seeing this rebound. So anyone watching this morning is going to look like IT is having a party, but the story is very different.
The story is absolutely very different, Abha. We'll just let the institutional guys lead us here. Just as one swallow doesn't make a summer, 2 minutes of a price uptick in the morning really does not signify a change in trend. Let the first quarter earnings come in. Let us see what the guidance is. Let us see how they react. But for the moment, you just stay away. Maybe it's just short covering because of the Sensex weekly expiry coming in front of you. So I wouldn't catch this falling knife. I would just let it lie flat on the surface, let it consolidate, and then maybe 1 or 2 quarters later look at a position. Of course, they'll bounce back, but who will pay the price of a further downtick and a consolidative phase? Not us. Let it be institutions. And we'll see that numbers coming up in the mutual fund data. We'll just stay away.
All right. Overall market breadth is still decent, and we do have the index in the green. IT story apart, there is at least decent breadth and a strong close suggested, despite, of course, the expiry action today. Now, FSSAI has cracked on energy drink brands and has issued notices to 6 firms, including Red Bull, PepsiCo, and others. They've said that these firms are selling energy drinks and misbranding and have misleading claims. They've issued notices to these brands claiming to be energy drinks and said that in a post on social media on Instagram that these brands, including Red Bull, Pepsi, Reliance Consumer Products, Campa, for example, Gold Boost, some of these names, that they need to address some of these issues. Let's go across to Ashutosh Mishra for more on this. Ashutosh, why now? All right, we'll go across to Ashutosh in a short while to understand a little bit more about why this move and what perhaps is the damage that's being done and what the FSSAI is hoping to curb here. So that's the latest news on that front. Let me also... Okay, Ashutosh is with us. Ashutosh, take us through what are the FSSAI's concerns, and some of these drinks have been in the market for a very long time, and in fact, Campa sales right now have been fantastic. So what is the concern, and should consumers be worried?
Indeed, consumers should be. In fact, there have been apprehension many in the people, including us. Like often, during workout, pre-workout, when you're going outside, we often ask for an energy drink. And it was always a concern whether it is a sugar, whether it is really an energy drink, or we are consuming too much caffeine. Now, it seems like there have been often such discussion and even complaints to the FSSAI. They have taken a cognizance. And in fact, what the notice says, that they need to clarify on what basis they are calling it energy drink. At the same time, there are 6 these brands, including Red Bull and PepsiCo. These companies have been served notice, and now larger concern is whether it is misleading or misbranding of a drink that they are serving in the name of energy drink. So whether they follow the parameter, if you remember, there have been also in the past on a misleading campaign such actions again both by the consumer CCPA and now the FSSAI. And since the FSSAI is really facing heat on several issues, several failures about what we're seeing all across around us, this looks like major actions. Before this, they have taken on the the mixed flour, on several other food products, and this time it is on the energy drink, the crackdown. Now these companies will have to respond with a clarification that what exactly are the parameter on that basis they are calling an energy drink. At the same time, there is no such parameter has been notified by the FSSAI that following this, eventually it will fall under the category of an energy drink. So that perhaps we'll have to wait for the response from these companies. At the same time, the report by the FSSAI, because so far they have been served notice, and initially, because this is going to be really a big moment for the consumers, that often when we are tired, we look for energy drink. When we go to gym, we go for the pre-workout, we often rely on this energy drink. So this is really a crackdown moment and also a big moment for everyone, largely for the consumer awareness that what we are consuming in the name of energy drink, whether there is energy in the drink, whether it is good enough, whether it is nutritious, whether it has those elements, those components within the drink that gives you energy. The definition will clarify, and at the same time these companies will give out the detail that other than caffeine, beyond caffeine, what exactly are they serving to the consumers.
All right, thank you for that, Ashutosh. Now, the Employee Provident Fund has done a major overhaul with contributions above 1,800 rupees now made voluntary. The EPFO says that only PF on wages up to 15,000 statutory ceiling will remain mandatory. For nearly 8 crore active EPF members, this means a structural shift in salaries, with employees given the option to choose how much extra they want to pay into EPF and lock into retirement savings. The change also gives employers flexibility to decide whether to match these voluntary contributions while simplifying withdrawals and compliance for all. Let's go across to Surbi for more on this. Surbi, take us through. I mean, on one hand, this will increase, consumption power. On the other hand, this is a big overhaul, given that the government, as we know, and the regulators have always encouraged savings. So what is really the thinking behind this move?
So the new scheme that supersedes the 1952 Employees Provident Fund scheme was notified as part of the overall, labor codes on the Social Security Code, so which was implemented in November last year. Along with the EPF scheme 2026, the government has also notified the Employees Pension Scheme as well as the Employees Deposit Linked Insurance Scheme. So these have been done to make them in sync with the current code on Social Security. Now, on the coverage and the contributions, it continues to be the same. So, the mandatory contribution is still, 12% of the 15,000 rupee cap for employees, and which turns out to be 1,800 anyway in any case. What is the EPF scheme notification also clearly says that the coverage will continue for all workers who were there. And even now, in what is now the previous scheme, contributions above this threshold were voluntary by the employer and the employee. So this continues. But what the scheme has done is, new scheme has done is that it's brought in more governance and transparency. There's a focus on digital compliance. So, UAN generation, etc. Everything is to be done online and shared by the employer online. For employees, there's also the scheme also provides for simplified withdrawals, which was already announced by the ministry some time ago, and it's been included in the scheme. Significantly, there's also a new framework for international workers, and with the UK FTA soon to be implemented from July 15, which also has a treaty on social security agreement. So those workers have also been brought.
All right, Surbhi, thanks so much for taking us through all the latest on that front. That's all we have time for on the show today. We'll leave it there. Avinash, Shell, thanks for joining us. We'll be back at 3 p.m. for market closing.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Good morning, ladies and gentlemen. It's looking good on the Nifty. 24,121 for you, up about 0.5% on the charts as far as the index is concerned. And surprise, surprise, today's rally is led by IT. You have strength across the board because of very, very heavy short covering coming into stocks such as, surprise, surprise, Wipro. Infosys is the top gainer, 4.5% higher. TCS 2.8% higher. You have Wipro 1% higher. HCL Tech 3.7% higher. It's a roaring short covering that's happening on the IT space. We'll just look at the broader markets before heading out to Mitesh Panchal. 1922 stocks in the green versus 733 in the red. So Thursday is panning out to be well. The IT index is screaming 3% higher, metals 1% higher, realty 0.5% higher, auto 0.5% higher. As good a time as any to look at what Mitesh Panchal has to offer. Namaste Mitesh ji, a very warm welcome. Dead cat bounce on IT or value buying or short covering? What do you think?
Good morning, Sharji. Good morning to all our viewers. So we are of the view that we already have a positive report on IT stocks, and after that it has corrected a bit. But still we are of the view that this is a buying opportunity. So any dip going forward should and must be bought into. We are of the view that since the entire sector is going through a bit of a pessimism, so you will find a high volatility. And generally, Sharji, high volatility at the bottom or at the top should and must be considered as a top formation or a bottom formation. So we are seeing this high volatility at the bottom of this pyramid. So we consider this as a bottom formation process. So going forward, you will see this kind of a volatility, but it's advisable to accumulate this stock at this point of time.
Okay, fair point. A view on the broader markets. What is the Nifty telling you? Should we be able to? Will we be able to cross the 200-day DMA now that IT and FMCG are clicking in sync with the private banks and broader markets?
Yeah. So as far as Nifty is concerned, we are clearly seeing that 23,800, 24,000 continue to remain as a pretty strong support. So with 23,800, one can go long in Nifty for the potential target of 24,500, 24,800. As of now, Shalji 24250, 24250, I repeat, is an intermediate resistance. Once it crosses, we are good to go for 24,500, 24,800. As far as Nifty Bank is concerned, again, we have seen that 57,500, 58,000 is acting as a pretty strong support. So on the downside, with 57,500, one can go long. Easily in the next 1 or 2 months, we will see a surprising upside in the Bank Nifty, preliminary supported by HDFC surprisingly and State Bank of India and PNB. So we see in this rally probably PSU will outperform the private sector banks, and private sector banks too will participate very heavily. So we are expecting Bank Nifty to taste 59,500, 60,000 in the next 1.5 months. So again with 57,500, one can go long. So net both the indices, it's a good to go. One should and must go long. There is no need to go short at this point of time.
Okay, day's high for the Nifty, ladies and gentlemen. We've already had the first 10-minute candle in which the high was 24,127. The Nifty is trying to scale that. That's really positive as far as markets are concerned. The pullers and draggers, let us see what it is. It's Infosys adding 40 points, TCS adding 15 points, HDFC Bank, ICICI Bank and HCL Tech adding between 10 and 13 points, Eternal adding 7 points. So fairly strong move coming in. Look at the blowout that's happening on Oracle Financial Services, 11,245. Remember, this was a stock which really did not fall anything at all. In fact, has rallied at a time when other stocks have crashed. I think it will be an all-time high on Oracle Financial Services. Let's take a view from our friend Mitesh. What are the charts telling you here? Yes, it's a blowout. No, not an all-time high. We've seen this price on 14th of Jan 2025. What are the charts telling you? More traction ahead on Oracle Financial, Mitesh?
Absolutely. I mean, no stopping here. I think the chart pattern replicate the chart pattern of BSE. As you've seen, in case of a BSE, Bombay Stock Exchange, it's a one-way ride. So going forward, probably in Oracle Finance, it's also a one-way ride. About 10,200, we got a confirmation on the weekly chart about the stock. And this stock we have mentioned in our IT report as well. So going forward, there are strong chances that we may attract 15,000 on the upside. So this rally may pause between 14,500, 15,000. Advisable to go long at this point of time, but have a small portion since the stock is trading at an all-time high against its peer, so you can not rule out the volatility. But yes, it is good to go for 15,000.
Oh, really? That's a very sensible target that's coming in. Let's also look at strength apart from the IT space. TVS Motors in strength 2.2% higher. Paisa Low Digital, this is something that I've marked yesterday. It was up 20% after news came in that promoters had hiked their stake by 5 percentage points to 46%. Strength again 4.4% higher at almost 74 rupees. You have Silver Bees in strength. You have strength coming in something called EBGNG. This is being marked in the markets. Let me see. This is GNG Electronics, fresh record high. I did not touch it with a barge pole. A company which recently got listed in July of 2025. We'll leave it there itself. What else is moving in terms of new highs? You have ADF Foods 345, 12% higher. And of course, you have Sona Comstar 2% higher, 633. A view on Sona Comstar, Miteshji?
Yeah, so again, Sona Comstar has qualified on the quarterly chart. Yesterday, we have completed the first quarter, Shelji, and we are a very big fan of studying the quarterly chart. So in the quarterly chart, Sonacom is qualified. Going forward, there are strong chances that this stock will surprise on the upside. Stop loss will be 580. Going forward, potential target will be 750, 800. Pretty aggressive target because very rarely these kind of chart patterns qualifies on the week quarterly chart. So yes, it's a good to go, a great pick from your side, great observation. So I think one should have at least 1 to 2 months of a patience for 750 to say 800 kind of a target with a stop of 580.
Okay, fair point. 936, Miteshji, where are you watching strength as far as the FNO space is concerned in terms of strong rollovers that have happened in June over July, and of course a rising price? What are the stock futures that interest you on the long side?
Couple of, I think the platform companies are coming up in a big way, like Swiggy and Zomato. I think these are the two spaces which is looking pretty interesting on the charts. Apart from that, the entire Adani pack is looking pretty interesting, as particularly Adani Enterprise at 3180. The stock is now eyeing at 3250, 3300. And apart from that, I think from the banking space, SBI is looking pretty interesting. So these are the couple of spaces, but I think Shalji, one should look at the sector as well. I think sugar sector, we have already released a report on that, and I think sugar sector is looking pretty promising. Would like to also discuss something about specialty chemical as well, because yesterday on 1st of July we have released a special report on specialty chemical, and we have suggested few stocks in that. For example, Earth Industry is looking good, Atul Limited is looking good, Deepak Ferti is looking good, and Fine Organic is looking good, apart from GNFC. So I think now, Shalji, in the next 6 to 9 months, I think sectorial churn will make a lot of difference than the individual stocks. So one should look at the sectorial indices and sectorial calls rather than looking at individuals. So we like fertilizer, we like sugar, we like specialty chemical. Going forward, we might have an interest in hospital stocks as well. I think that is also looking pretty good. So I think our view as of now is to look at the sectorial call or sectors pretty closely rather than an individual stock.
Okay, fair point. 938, let's look at the Nifty, now days high. So the first 15 minutes have now elapsed. Let's again look at the 15-minute candle on the Nifty. What we see is strength now, and 24,135. 15-minute candle is right there in front of us. Yes, so this is again a breakout that's happening. So let's hope that at 24,124 you have strength which is coming in. What are the stocks that are slipping? Okay, Sterlite Technologies shouldn't be worried, 5% lower. It's okay. Thermax 4.5% lower, 4893. MTAR Tech 4% lower, 7461. These are all profit bookings that's happening. Himachal Futuristic 3.5% lower, 204. We won't mind it at all. And of course Siemens Energy, called Enrin, down 3.26%, 3521. In terms of indices, Nifty Energy Index is down 0.5%, CPSE Index is down 0.3%, MNC Index is down 0.2%. What is gaining? Of course, IT, metals, services, and consumer durables. A view on Dabur and Marico, Miteshji?
So your voice was not clear. Can you repeat the question, please, sir?
Marico and Dabur.
Yeah, so I think within that space also there is a buzz. As far as Dabur is concerned, I think there is a conditional call above 455. So if the stock moves over 4550, then 455, then there are strong possibilities that stock will enter into a new trading range between 480 and 490. As long as 455 is defended, it is advisable to avoid these stocks because the breakout is above that level only.
Okay, value buying, ladies and gentlemen, happening on IRCTC. This is data coming in from the mutual fund industry, which says that ICICI Prudential Mutual Fund has raised its stake. My apologies, it's Container Corporation. I'm so sorry, it's Container Corporation. Let's just see the chart of Concor. This is India's premier rail transport company of very, very high margin share. You have ICICI Pru raising its stake to 5.24 in the company percent from 4.66. It acquires an additional 44 lakh shares on June 30th. So that's data that is coming in on June 30th, because you see the end of the quarter. They may have acquired this very slowly. Let's take Mitesh ji's view in. Multi-month low on this one. In fact, what you see is the stock consolidating around February 2021 levels. Of course, it's halved as well. Mitesh ji, you are a value picker. What would you do?
Yeah, absolutely. I think, as you rightly said, half the price. So I think on the quarterly chart and the monthly chart, the advocation of the buy is above 520. So I think it's again 10% below our threshold limit. We would like to just buy these stocks, these kind of a beaten down stocks, like as you mentioned, IRCTC or Concor for that matter, or NBCC for that matter, or RECPFCDO for that matter, Coal India for that matter, only when the long-term averages are comfortable in the buying zone. And as of now, for Concor, it is not comfortable. I think we need to spend some more time before crossing 520. So we are talking about the opportunity cost. Till then, some stocks will give us a good return. So not now for Concor. We will go above only 520, because from after that, Shailji, the pickup in the share price will be so sharp and so violent that we might test 650, 700 immediately. So not now, as far as Concor is concerned. For an investor, it's okay, but for a trader like us, I think 520 is the level which I'm looking for.
Okay, fair point. A view that you may want to offer on RITES. This was a stock that rallied very sharply yesterday, again halved from its all-time high of 410. Railway company, new order wins, very high margins, but of course the long trade unwound from 410 all the way down to 220. What are the prognoses on the longer term charts?
Yeah, exactly. So if you're talking about IRDA or RITES or Railway Finance, I think those stocks which are typically belonging to the PSU baskets are half now. And as I said, long-term averages are not comfortable, so we are not looking at it. Again, in this case, again 258, 258 is the spot which we are looking at. If move above 528, then only. Otherwise, the stock will again spend quality time in consolidation. You might get 5-7% of move here and there, but not a sustainable upside. So avoid as of now. Fresh opportunities are available. Opportunity cost is very high staying in this company, so about 258 only we'll consider to buy.
Okay, we'll also look at ADF Foods. This is a specialty food packaging company. It has about 8 brands which include frozen snacks, different kinds of Indian breads, as also pickles, chutneys, etc. They've got a tariff refund from the US and the stock has screamed up. Look at the volumes on ADF Foods. Haven't seen this kind of volume on ADF Foods for many days. Already about 37 lakh shares have been traded. 345, the stock is up 12%. Would you want to take a shot here, Mitesh?
No, exactly not, because since March, low 153, close 167, in 3 months only, that is in this quarter only, the stock has doubled. So it's, I mean, if you look at the chart history from 2010 onwards, till date, even on the quarterly chart, such a marathon run comes in the year 2020 only, when during COVID it hits 24 rupees as a low and 34 rupees as a closing low, and 218 immediately. I think such violent move without a volume support indicate that probably there are strong chances that the stock will witness at least 20 to 30% of correction going forward, because on the volume front there is no support at all. For example, for the quarter ending April, the volume was around 12 crore and suddenly it becomes 6 crore in the month of May. I mean, the price has gone up, and again the price has gone up significantly in the month of June as well, but the volume was around 5 crore 62 lakhs as well. So I think volume comfort is not there, advisable to avoid the stock.
Okay. Let's look at the ownership pattern of ADF Foods. Can I get some names here? I think we'll just avoid it. We're just marking it because of the news event. Mitesh ji, thanks as always. Such a pleasure. But strength in the markets coming in. We look forward to interacting with you again. The weekly expiry of the Sensex pushing IT higher. Is that short covering or a value trap? Only time will tell. But for the moment, Nifty rejoicing the markets. 24,150 for you, 145 points higher. Please continue on Business Today Television. We'll be back shortly.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special edition where we're going to be discussing about how India's retirement landscape is changing. For years, National Pension System subscribers had two broad choices after retirement. Take a lump sum money or buy an annuity or manage the withdrawals on their own. But now there is a third option available on the table. The Pension Fund Regulatory and Development Authority, the PFRDA, has introduced the Retirement Income Scheme or RIS as they call it, which is a market-linked payout framework that aims to provide regular income while keeping the retirement corpus invested. Under RIS, investors can receive periodic payouts while their money continues to remain invested through an age-based glide path that gradually reduces the risk over time. The scheme also offers flexibility, but it also exposes the retirees to the market volatility and the risk of exhausting the corpus by the age of 84. This raises some crucial questions. Should retirees choose guaranteed annuities that offer fixed lifelong income? Should they opt for the new RIS that balances growth and income? Or does a dynamic or systematic liquidity withdrawal strategy offer greater flexibility and control? At the same time, when longer life expectancy is raising healthcare costs and inflation is reshaping the retirement planning, choosing the right post-retirement income strategy has become more important than ever before. To discuss and to understand what works for whom and whether India's newest retirement option can truly solve the retirement income challenge, I'm now joined by our very special guest, Mrin Agarwal, a financial expert who is decoding this entire thing for us today. Warm welcome to you, Mrin. It's always a pleasure to be speaking with you, and especially on a topic that a lot of Indians are truly interested in understanding, how some of these new dynamic reforms are going to be shaping up the way they change or strategize their own understanding of how should they be treating their own retirement income. Give us an understanding of how are you looking at this fresh reform when it comes to RIS in NPS.
So good morning, Sakshi, and it's lovely to be here today. And I think it's good that there are more and more options there now because, as you mentioned, that earlier on you would get your EPF corpus and you still would get it right now, of course, but you had to manage that pretty much on your own, figure out whether to go for annuities. And most often, what I have seen, Sakshi, is that people find it really difficult to figure out where to put their money so that they can meet their regular expenses. So, firstly, on the RIS, the way it works is that you can put 80% of the corpus that you've got from the NPS, which is the lump sum amount. So remember that a few months back, the 60-40 became 80-20. So now at the time of maturity, you're allowed to withdraw 80%. That 80% can be invested into this regular income scheme. And there is a glide path in the sense that when you start the investment, then you start with 35% into equity at the age of 60. At the age of 61, I'm sorry. And then that basically goes down to about 15% by the age of 70. And thereafter, it remains at 10% till the age of 84, right? So one is that the risk management is being taken care of to ensure that the corpus itself does not remain volatile due to the equity market movements. The other thing that is there is that there are two ways for the investor to take the money out. You can do a systematic unit redemption, or there is a systematic payout rate basically. Now in the unit redemption, what happens is that specific units are withdrawn. But of course, the monthly amount is going to fluctuate because of the NAV. So I think one of the main things that we need to remember out here is that unlike an FD where you're going to get a fixed amount, right? That's not going to be the case here, because there is going to be that 10 to 35%, which is there in equities. Now, in the systematic payout plan, there is a specific payout rate, and this is the maximum that can be paid out. It does not mean that if they're starting with 4% and going up to 100% by the age of 84, that is the maximum. It doesn't mean that that is the amount that you're going to get every year, right? So I think these are some of the things that one needs to keep in mind, some of the nuances, that this is a market link scheme. The payout rates that are mentioned are the maximum withdrawable rates, and the fact that the entire corpus is going to become zero at the age of 84.
Okay. Now, I want to understand, a lot of people would have this question, is RIS essentially a pension product, an investment product, or a combination of both? How would you really understand and read through the insights?
Well, I would say that it's a product that's going to help you get regular returns, and that's the way I would position it. See, the thing with pension is, and when you look at the annuity product that's there with NPS itself, the moment that you invest into the annuity, you're actually tying up that annuity rate for life, right? So I wouldn't want to call it as a pension product. Neither is it an investment product. I think it's a product that's basically trying to combine both the things to one, get the corpus to grow over a long period of time, and at the same time give you some regular payouts.
Absolutely. Now let's try and understand, if you had to explain the difference between RIS, annuity, SLW, what is a systematic liquidity withdrawal? That is, how would you explain to our average viewers there?
Okay, so again, let's remember the 80-20, right? The 20% has to go into an annuity, whether you like it or not, right? And typically, that's for amounts above 12 lakh rupees. Of course, if your amount is below 8 lakhs, 100% can be withdrawn as a lump sum, right? So that's point number one. Now, from that 80%, you have various options, right? At the time of maturity, you can decide to withdraw this 80% and do whatever you want with that money, invest it the way that you want to. You can decide that this 80% I'll put in the regular income scheme, which we discussed. You can also decide that I'll leave the money invested over there, but I will withdraw it as and when I require it. And I can also set up like a regular withdrawal. So the SLW basically works like a withdrawal facility. The subscriber basically decides how much he or she wants to withdraw from this on a regular basis. And there is no built-in mechanism to maintain the long-term sustainability of the corpus, right? I mean, the person can continue holding the same investments right, decide to have the same asset mix and just say that I'll just remove this over a period of time as and when I have the requirement, right? So it's very, very dependent on the individual, what sort of an asset mix they want, what is the sort of withdrawal that they want from this, right? And that's where the huge difference is, because when you look at the RIS, everything is kind of predefined that this is the glide path, this is the maximum withdrawal rate. I don't think that this subscriber has a choice out there to make any changes. But in SLW, there is complete flexibility. You decide how much you want to keep in stocks and bonds and how much you want to withdraw.
So who is it better for? Say, for instance, if, looking at all of this, we need to decide, okay, for a section of people watching this show, annuity is best suited. For a section of people, RIS is best suited. And for a section of people, SLW is best suited. How would you define those categories of people?
Okay, so one thing, if you look at the current annuity payouts, they're somewhere in the range of about 6.5%. And remember, the annuity gets locked in for life, right? And while the 20%, that's the minimum. You can always decide to say that I want to have more money getting into annuity, okay? Point number one. Second thing is, so I think annuity is really good for somebody who's very conservative, who wants an FD-like fixed return for life, who doesn't want to take any any volatility, any variation in the amount and stuff like that. No
risk appetite is low. Yeah.
I think for them, annuity is a very, very good option. And I would actually say that for such conservative investors, look at actually increasing the annuity amount there, right? Don't just go with the 20%. Now, someone who wants to have complete flexibility. So this is your typical aggressive investor, who says, I will decide how I will manage my money or how my assets will get split. I am okay with higher amount of volatility maybe, and I'll decide as and when what to do with my money. And they possibly have other sources of income which are taking care of their monthly needs. I think for them, the SLW is a good option. And I would say for somebody who's in between both of these investors, right? Number one, you're not dependent on these payouts completely. But at the same time, you want some sort of surety and, you want things to be taken care of, right? So see, the other thing is also, Sakshi, a lot of times for subscribers, you have to decide, do you want someone to take care of things for you or do you want to do it yourself? So I think if you want somewhere things taken care for you, want to make it easier for yourself, but at the same time, you're not fully dependent on this income, then I think this option is good. And one point that I want to mention out here, because a lot of retirees, right, like a lot of people, the way they think is that if my money is in a balanced investment, I would probably make 9 to 10% returns on the investment. So even if I pull out 4 or 5%, for example, if the withdrawal rate is 4%, even if I pull out 4 or 5%, it should be okay. But fact remains that there is a sequence of returns risk, because equity markets do not move in a linear fashion. So it's not like you're getting that 9% fixed every year, right? So they have to keep in mind, like in the RIS option, you have to keep this volatility in mind, that at the beginning, for example, if the markets are not good, then you're redeeming more units and hence then you're going ahead with a smaller corpus. So that's going to then certainly affect your withdrawal rates in the future. So I think very, very important for people to keep this sequence of returns risk aspect in mind as well.
Absolutely. Now let's try and understand by way of how RIS keeps the corpus invested in markets. A lot of people would have this question, that does it mean that retirees are actually taking on equity risk during their retirement, which earlier used to be thought as a no-go area for the retirees?
Oh, yes. So, for example, at the age of 60, you have 35% in equities. And then that is basically reducing over a period of time to 10%, right? So it's, I think, reducing by 2% every year. So yes, there is an equity component, and the equity component, to my mind, has been kept there to ensure that the corpus continues to grow well.
Absolutely. Now, I wanted to also ask you about this sequence of return risk that everybody is talking about. Is there a risk if the markets perform poorly immediately after your retirement? How should one be really looking at that?
Yeah, so see what happens is that if the markets perform poorly, then in the initial stage, you're withdrawing more units to basically meet your needs, right? And so what happens due to that is that the amount that you have left over to grow for the future is going to basically be lower, right? There could also be the risk that uh, towards the end also that markets could not be performing well when you're actually withdrawing money. So that risk is there in a very big way in SLW, right? Because let's say you decide I want to remove this X amount every year or whatever, and then 1 year the markets are not performing well, then you can't actually remove that amount, right? So always we need to remember that in any instrument where there is an equity allocation, and which is why again I would exhort people not to think like saying that okay, this product is going to give me whatever 9, 10, 12% return, so it's okay for me to pull out 5 to 6%. And see, that's the same problem in the systematic withdrawal plan, also in equity funds, that people just presume that I'm going to be getting this return, but this 9-12% return is a long-term return. It's not like it's happening every year, right? And this is where we have to get that perspective right on these particular withdrawals. Like if you have a year where market is down by 10%, then all of your calculations are going to go for a complete toss.
Yeah. Now let's talk about this corpus longevity under RIS that you were talking about, that the corpus is expected to be exhausted by the age of 84. So given the rising life expectancy now, is that a major concern for you?
Yes, I think that is a concern because, again, if you're doing this product, which is why I said that when you're doing this product, you're not dependent on this.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What Sort, a show that focuses on the biggest buzz on the D street, starting from the markets as to where is the momentum currently being seen, which are the top sectors and stocks in focus right now, what should you be focusing on in terms of where are analysts also recommending you for fresh purchases is something that we will discuss. And along with this, if you have any questions about the stocks in your portfolio, you can send us your queries on the number that's constantly flashing on your screens as well. We'll be happy to address all your questions on this show as well. Now, of course, we'll start off with the markets first. We are building on to the gains that we got into yesterday. 24,115 now. There is a strong 108 point of a rally on the markets today. You're also looking at the Sensex jumping about 500 stocks. There is a rebound in the technology stocks today. The Nifty IT index is up by 3.8%. Remember, last couple of sessions, there was a sharp fall in the IT sector as a whole, but there is a rebound. What is the reason behind it? How should you be approaching the IT stocks is something that we will be discussing today. Of course, there are a lot of stocks that are in news. You can see Infosys, HCL Tech, TCS as among those winners on the Nifty today. But we will also be discussing a lot of stocks that are in news, that are on top of brokerage houses radar as well. And ahead of the upcoming earnings season, what should your approach be? Let's actually welcome our guest on board. We have Mr. Aditya Shah now joining in from Hercules Advisors to join in and to share with us a fresh take on the markets. Hi Aditya, good morning. Your take on the markets first. We've started off the July series on a very strong note. Will it continue in this momentum? Are there enough and more indications that will point out to a recovery that will build on from here?
So the market is worried about 2 to 3 things. Point number one is the US and Iran war. The market has a close eye on it. The crude oil has come down, so that is a big positive for the market. The next big thing is the monsoon. We are seeing signs of some deficit in the monsoon. If that is a problem, then the rural play will be something that will be really very problematic. And of course, the earnings season, as the earnings come along, the market will keenly watch what happens to the IT sector, then the banks, and so on. So, from my perspective, we always have a positive view about the market. The market will continue to do well over the period of next 5 to 10 years. Now, the market is very stock specific. You need to find companies where the company businesses are doing exceptionally well and go there and invest. For example, we have a positive view on financials, chemicals, pharma companies, the cap goods companies, and so on. IT is a contra bet now, given the beating that IT sector has really taken. We think that it's time to look at the IT sector now.
It's time to look at the IT sector. That's exactly what I was wanting to come to. 3.8% of a move on the higher side after consecutive days of a sell-off that we've been seeing. In fact, we were looking at how most of these large blue chips, Infosys, TCS, Wipro, LTI, they had all slipped to their 52-week low levels. Most of these stocks are down 50% from their peak. So is this offering the best opportunity there is to buy into the IT stocks after a prolonged sell-off? And should one take that bet right ahead of the earnings season? Remember, Aditya, last quarter, it was the earnings season that kick-started with negative outlook on the guidance that the companies had been giving, and that's where the downfall of the IT sector truly started and aggravated more so. But right ahead of the upcoming quarterly earnings, do you think that there is enough room and one should be betting big on the IT sector?
If you look at the KBIT guidance that they have given, I don't think that's a good guidance per se. I don't think the IT sector will show good amount of growth this quarter as well. What you need to understand about the IT sector is AI is coming in, and AI will disrupt the growth of the IT sector per se. If the growth was X, now it will come down from X, and the IT companies will grow very slowly. But have the stock prices priced in this slowdown in growth per se? From my perspective, yes. All large cap IT companies are down about 40 to 50%, now offering about 10 to 15 price earning multiple, as well as about some stocks offer 4, 5, 6% of dividend yield. So from my perspective, valuation is something that is comforting. Growth obviously is going to slow down for all of these companies. However, terminally, these businesses are not going to die. These will redefine themselves as services business for the for AI. So from my perspective, earnings or no earnings, it does not make a difference. Earnings will not be that great. Only long-term investors with a time horizon about 4 or 5 years should try to dab in a staggered manner in the IT sector. IT sector is in the process of forming a bottom. No one knows exactly where is the bottom. However, the process has started and will take about 6 to 12 months to form.
Okay, fair point. I hope that this has given you enough and more guidance as to how should you be approaching the sector as a whole right now. The index is the top mover, building onto the gains, 3.7% higher now. All the sector movers are in the positive. Look at the large caps, look at the mid caps as well. There are single high digit moves even in names like Sonata Software, and mid cap IT names are also rallying in the session, but remains to be seen that whether the near term pain will be overlooked by investors and be focused on for the long term, as Aditya has been focusing, sharing with all our viewers as well. But now let's try and understand on some of the other key sectors too. Let's look at the banking names. We have been talking about the upcoming earnings, and 8 banks today are reacting to their Q1 business updates, viewers, and we are going to be focusing on those banking names too. So I'll just read out first which are the banks in focus. We have Canara Bank, Karnataka Bank, South Indian Bank, PSB, that's Punjab and Sindh Bank, Indian Bank, Jammu and Kashmir Bank, and Dhanlakshmi Cement, and even Tamil Nadu Mercantile Bank. They are in focus as they have released their provisional business updates for the quarter ended June 30th after the market hours yesterday, and therefore they will be in focus today. So let's kickstart by understanding. Canara Bank has reported steady growth across the key business segments there. We are looking at the June quarter with its global business crossing 29 lakh crores milestone as well. According to the bank's provisional filing, the global business has stood at 29.06 lakh crores, up 3.6% from the March quarter. and 14% higher than a year earlier. And global deposits have now risen to 16 lakh crores, increasing about 3% sequentially, 11% year on year. Deposits domestically have climbed to 14.7 lakh crores, registering a 2.5% quarter on quarter growth there. We're looking at the global advances, also at 12.9 lakh crores at the end of the quarter, reflecting a 4.5% sequential increase. So let's also talk about some of the other banks. Dhanlaxmi Bank. Here we've seen again a strong business growth for the June quarter. Total business rising by 21% year on year to over 35,188 crores. Total deposits increased by 17%. CASA deposits grew by 19.6%, gross advances up by 26.5%. That's Dhanlaxmi Bank for you. Let's talk about Indian Bank. It's reported a near 14% year-on-year increase in advances to over 6.8 lakh crores for June quarter. Deposits have recorded healthy growth. 13% is what the surge has been from a year earlier, now to over 8.4 lakh crores. We're looking at Karnataka Bank as well. Here the advances growth has remained strong. Deposits growth has lagged and CASA ratio has softened. So keep that in mind for Karnataka Bank. What's the scene with South Indian Bank? Loan growth has outpaced the deposit growth. CASA ratio has improved sequentially. PSB, Punjab and Sindh Bank, advances growth has remained robust here. The deposit growth has stayed relatively moderate. Jammu and Kashmir Bank, total business has crossed 3 lakh crore mark. And we're looking at a 20% surge year on year. Total deposits have risen 16.8%. CASA deposits have increased 7.5%. Gross investments have edged higher by about 0.9%. Lastly, let's talk about Tamil Nadu Mercantile Bank. Here, what we've seen across all the sectors and segments, healthy growth. We have seen lenders' business grew by about 23% year on year to 1.2 lakh crores. Gross advances up by 27%. We're also looking at total deposits up by near 20% to 64,000 crores as well. We're also looking at sequential basis. The business has expanded 5.8% and advances rising by 7.4% as well. Let's try and decode these banks and the updates that are coming in. How are you looking at these business updates, Aditya, and what would your approach be on some of these banks?
So from my perspective, if you see steady loan growth and steady deposit growth does lag the loan growth. If you look at the systemic loan growth over the last fortnight, it has come up to about 18%, and most of these banks have reporting a loan growth of about anywhere between 10 to 17, 18%. So from my perspective, the banking sector continues to do exceptionally well. We will now wait for the larger banks, for the likes of HDFC Bank, Kotak Bank, and so on, to report what they have seen. And there also, I expect a loan growth of about 10 to 15% and a deposit growth to about 10 to 15%. So, from my perspective, larger banks like HDFC Bank and Kotak Bank, ICICI Bank continue to be the top pick. Within the financial lender space, microfinance continues to be one of my top picks. It's a contra pick. We've seen microfinance sector seen a lot of pain over the last 6 to 12 months. Now that pain is easing off and these companies will start to do well. So positive on banks, larger banks together with SBI will continue to do well. Microfinance sector will continue to remain a contra.
Okay, fair point. I hope that this has also helped you out, viewers there. Let's also discuss, the private sector banks, large private sector banks like HDFC, Axis, Bandhan. They're all in focus because of the recent management churn that we are seeing here. So far, there's been a bit of a lag on the private sector banks as far as the stock price performance is seen. There have been some issues as well with some of the banks regarding the governance call, etc., that we've been seeing as well. But what's your current approach on the large private sector banks? How are they positioned right now in the market?
I had put out this interesting tweet that HDFC Bank or Kotak Bank both have seen a derating over the last 2 to 3 years. From the highs, HDFC Bank from the highs of about 3 times price to book has come down to about 1.7, 1.8. Similarly, Kotak has come down from 5 times price to book to about 1.7, 1.8. So what is happening is private banks saw a derating over the period of last 3 years, whereas PSU banks also saw a re-rating. From my perspective, valuations on larger private sector banks have become decent enough that investors can go ahead and enter. In my perspective, larger private sector banks, together with some of the PSU banks like SBI, like Canara Bank, they will continue to do exceptionally well. Given some private sector banks have a problem of their own, for example, Kotak Bank does not know who the new MD will be from December 2026. That's a near-term problem for the company. For example, HDFC Bank does have a problem of that 81 controversy. Now it has to be seen how does the NIM net interest margin improve for the bank, and the bank continues to march forward. Bank-centric problems are there, but large private sector banks should continue to do well together with SBI and Canada Bank.
Okay, fair point. I hope that this has also helped you out as well. Let's also talk about the falling crude oil prices. Now the Brent crude is hovering around $70 a barrel. That's good news for India. There's been a sharp cool off from the peak that we had seen of almost up to $120 a barrel as well. What are you looking at in terms of this improving sentiment there? Are you looking at the oil and gas sector? Are you looking at OMCs? Are you looking at the oil derivatives like paints, tire stocks and some other derivative sectors, maybe even aviation? How are you looking at these entire sectors that are purely linked to, how the fluctuating crude oil prices was impacting the prices in the last 3 to 4 months?
So the fluctuating crude oil prices coming down. In fact, we are at the lowest procurement price that was before the war. So from my perspective, this is positive not only for sectors but for the entire Indian economy. The inflation problem and the stagflation problem that we were going to face will not come about now. That's the first point. Now, how can you play this? I don't think OMCs are the way to play about it. OMCs have a hangover of their own. A divestment of BPCL does not take place, and that is a bigger hangover for all of these companies. From my perspective, the paint companies, the chemical companies, in fact, Indigo canceled some flights. Indigo and Air India both canceled some flights, and now both of them will get their schedule back. So from my perspective, airlines, the whole consumption sector, these are the sectors that you need to watch out for. I don't think ONCs will do anything, and government very soon will also move for a price cut. Naira, for example, has cut petrol prices by 5 rupees a liter. So I don't think OMCs will get an advantage of higher oil prices for a longer period of time.
Okay, fair point. Let's also take, a fresh take as far as some of the other key stocks are concerned. I'll talk about the power makers like Coal India that's in focus today too. Now, there's a fresh report by UBS which is bullish on Coal India now, which has reiterated a buy recommendation, talking about high target price of 550 on the stock. Nearly a 26% upside from the current levels as well. The talk about strong demand outlook that is keeping the optimism intact for them. The positive view is backed by the healthy Q1 trends that we are looking at, and of course the coal offtake which has increased 4% year on year in Q1, the strong power demand, and of course e-auction premium that has risen to 42% in June, and higher global coal prices that are boosting the realizations, of course, and inventory liquidation improvement which has led to the momentum too, and healthy demand outlook also is looking at the earnings visibility at a strong pace as well. Last couple of years, Coal India has largely been consolidating on the D Street. Before that, in 2024, there was a considerable amount of gain onto the stock, and the stock price had been among the talking points for a lot of retail investors. Are you again looking at things improving, the kind of scenarios developing around Coal India that one should be looking at?
I don't track the stocks, so will not be able to comment on this.
Okay, fine. What about the power space as a whole? Are you looking at power financiers, power producers, distributors at this point in time? We've been looking at high demand for power in the summer season across India. What do you think this will augur for the power sector as a whole?
So I'm positive on the power sector. Government has taken massive reforms in the power sector. The improvement in power sector is considerably good. So from my perspective, my top pick or contra pick continues to remain IEX. The exchange facilitates trading of power, and market coupling has meant that the stock has been really depressed. So that is one of the contra picks. In the growth picks, we have companies like Tata Power, which continue to do exceptionally well. Then after that, something like a Genius Power can also do exceptionally well, provided
Okay.
they can solve their cash flow issues. So from my perspective, power and power ancillaries is something that you should watch out.
Okay, let's also talk about the auto space and try and decode for our viewers. How are you looking at the auto pack as a whole? Since yesterday we've been getting a lot of auto sales numbers for the month of June. We've seen how M&M, Maruti have been at the top of the charts when it comes to the kind of sales figures that they have announced there. We are also looking at how now TVS Motor and Bajaj Auto have also come out with the sales there. Let me read that out because these are fresh numbers that have come in today. TVS Motor, we've seen the total sales at 5.9 lakh units. This is vis-a-vis 4 lakh units. Year on year, there's a growth. Two-wheeler sales have come in at 5.65 lakh units vis-a-vis 3.85 lakh units year on year. EV sales are at 48,537 units vis-a-vis 14,400 units. There's again a sharp jump there. Three-wheeler sales have seen a 51% improvement year on year. International sales have seen a 47% improvement for TVS Motors. For Bajaj Auto, sales are at 4.6 lakh units vis-a-vis 3.6 lakh units year on year. We've seen exports come in at 2.5 lakh units too. This has also improved year on year. And two-wheeler sales have come in again stronger at 3.89 lakh units vis-a-vis 2.98 lakh units earlier. Although the stock price has dipped a bit, about 0.7% of a decline coming in there. The key question also will be with the rollout of the EV policy in Delhi and more states probably to follow in the coming months, how should one be approaching these two-wheeler makers at least at this point?
From my perspective, let's say the EV policy in Delhi does go live in 2028. The two-wheeler companies, first of all, what the EV policy says is new registration of any petrol or CNG bikes will not take place post 2028. This directly means that a market leader in the EV space, which is TVS Motors, Bajaj Auto, Ola for that matter, Ather as well. All of them stand to gain from this. From my perspective, stock valuation for TVS Motors is really very expensive. Stock valuation for Ather is really very expensive. So from my perspective, anybody who wants to take a growth call on these companies with a time horizon of 3 to 5 years, they can look at it. From my perspective, auto ancillaries such as Sona BLW, such as Motherson, such as Precall. Those are the companies that I will watch out for. Pure play OEMs are too expensive at this stage, but all of them stand to gain if EV adoption in two-wheeler space continues to accelerate.
Okay, got that. I hope that this has also helped you out. Any key, indications within the auto ancillary pack as well? Where are you bullish on apart from the two-wheelers and the four-wheelers?
As I said, companies like Sona
Sona
BLW,
BLW, yeah, apart from that.
Motherson, Precall is another one, RSCL, CareTech. These are all companies who supply products for EV manufacturing of two-wheelers and four-wheelers. So from my perspective, if you get onto a company where it is a supplier to the EV car or a scooter, that's where the real juice is.
And within the passenger vehicles, do you have a pecking order? How are you looking at some of the four-wheelers there?
So my topic continues to remain Mahindra and Mahindra. They continue to do exceptionally well within the IC engine space, within the EV space, as well as the tractor space. It's a really good business to own. From my perspective, I don't recommend any other companies. Maruti, for that matter, is continuing to do well, but the investments in the electric vehicle side of the market is extremely weak for Maruti. They have led Tata Motors and Mahindra gain a lot of market share within the EV space. So from my perspective, Mahindra and Mahindra continues to remain the topic there.
Okay. I've asked you a lot of themes here, but any particular sectors or segments that are looking attractive to you ahead of the earnings season? What are you betting big on?
My perspective, pharma companies will continue to do exceptionally well. The API side of the market, some companies are facing trouble, some companies are not facing trouble. Let's say companies like Laurus Lab, the stock is up 53% over the last 3 years. Companies like Sai Life Sciences, which is in the CDMO space, that also continues to do exceptionally well. If you look at contra picks there, you see Syngene, which has been battered down severely over the last 6 to 12 months. That continues to remain really very good. Again, Piramal Pharma also continues to do really well. So the API CDMO space continues to look exceptionally good over the period of next 6 to 12 months.
Okay, got that. I hope that this has helped you out as well, viewers, in terms of the kind of themes that you should be tracking, the kind of stocks that will give you a lot of opportunity in the coming months, to garner a lot of traction there on your portfolios as well. Aditya, good to have you with us. Thanks a lot for taking the time out and explaining all these insights for all our viewers. We are at 24,100 odd levels, viewers, so we are holding on, but let's see how things really pan out. In the first 1.5 hours of trade, we've been holding up about 100 odd points, but whether we will see any pressure here, selling pressure here emerge, because this has been largely the range in which the markets have been moving in the last 1.5 months or so, and every time there's been a resistance building above 24,000. Let's see this time around whether we'll be able to break above that and finally find a fresh wave of momentum for the markets too. So we'll wrap it up on that note on what's hot, but stay tuned, as up next we're going to be having a tax discussion for all of you. Remember, July has started and this brings in a lot of confusion for all the ITR filers, and this is what we are aiming to resolve here. Up next we will have a tax expert, a CA, to help you understand what are the things that you need to know before filing your ITRs this season.
A warm welcome, ladies and gentlemen, on Business Today Television. We are in the process of starting the 7th month of calendar 2026 in style. We have strength which is coming back into the market above 24,000, and of course there is a very, very sharp rally which is in the underlying markets, whether it's small caps, whether it's mid caps, all based on very strong growth projections that we've seen coming out of the fourth quarter, and we are at the doorstep of the first quarter earnings. What should your portfolio outlook be for the remaining of 2026, as also for the time ahead? To discuss this and a lot more, we are joined by Mr. Ravi Dharamsi, the founder and CIO of Value Quest Advisors. Mr. Dharamsi is a very, very well-known stock picker in the market. His command over the Lal Street, both on the micro stock picking as well as macro broader markets, is phenomenal. And he's spent now almost 3 decades trying to find both value and growth at Value Quest. He manages somewhere like 25,000 crore rupees in PMS products, AIF products, and private equity. Namaste Ravi Bhai, what a pleasure to welcome you after many, many months. How are you reading sentiment at this point of time on the Lal Street?
Thank you for having me. The pleasure is all mine. And so I think you summarized it quite well. If you look at the headline indices, and if you look at the headline news in the newspapers, you would think that India must be in a bear market, because our indices have not gone anywhere for 2 years. We were suffering from the effects of the Middle Eastern war. Crude had spiked. FIIs have been selling. And those are the kind of debates that have been raging generally in the media. But what this is masking is that there is a very strong undercurrent in the broader market, and those people, those who are not focusing on these, are actually missing out. And this has started sometime in the month of around March, where actually the uncertainty was at its peak. Now, I have a broader view in what is happening in the world. So what has happened is, since 1990s, or since the start of the China's rise, you can say that, world has been essentially focusing on optimizing. They have been optimizing for cost, for efficiency, for just making things more and more profitable, focusing more on financial engineering. Essentially, the globalization was at play. Now, the after effects of what has panned out in the globalization is that the entire Western world has kind of gotten deindustrialized. So all the industrialization moved towards China. Because it was the cheapest to do it in China, and China was
Hello and welcome. You're watching Business Today Television. I am Sakshi Batra, and this is our special edition where we're going to be decoding for you everything that you need to know before you file your ITRs this season as well. Remember, the ITR filing season is officially here, and millions of taxpayers, it's time to get your paperwork in order. But along with this season, it comes a lot of confusion also comes in. We've seen that a lot of steps that you need to follow is something that you find difficult to remember. Which are the ITR forms that you must choose? What are the documents you would need? Who all should file your taxes? Which ITR forms you must be choosing? What if you make a mistake in filing? What happens then? All of those questions, all your frequently asked questions will be answered on this episode. And the most common mistakes that people end up doing, that's something that we will try and help you understand so that you avoid them. We'll try and help you out to make this ITR filing season simpler and stress-free as well. Whether you're filing your returns for the first time, you're a salaried employee or you're self-employed, everything is something that we will try and cover in this special edition. We have with us a special guest also joining in. We have Gauri Chadda, our tax expert, who will help you understand everything seamlessly. How do you do this yourself or with the help of a professional this time around as well? Gauri, of course, this is the time which you find very, very difficult because there are so many things piling up on you. There are so many people calling up to find out what should I be doing at this point in time as well. I want to begin first by understanding from you, right at the beginning. First of all, this is not the beginning. You always advise that, people should file their taxes much before the July deadline really comes in for July 31st. But still, as is the habit for a lot of people, we push ourselves just towards the last date to file our taxes. What are the most common mistakes that we must avoid as, a taxpayer when we file our returns this time?
To begin with, Sakshi, I will first tell you the dates this time because there has been a change in the system from this year onwards. Because you mentioned 31st July, then I'll come back to the point you have raised, the mistakes people usually make. So unlike last year and all these years, the date was 31st July for salaried people, business people, non-audit cases. And audit cases were filed in September and October. September was audit report date and October was the return filing date. Now, from this year onwards, the date 31st July is still there. That is for salaried people. It is for people who have capital gains and they have no business income. So in case you have any kind of business income, either you're self-employed, you are freelancing, or you have your business, in that case, your due date will be 31st August for this year. But the main thing you have to see is that, you can end up missing the 31st July date, thinking that your date is 31st August. And in case you miss that date, you'll have to pay more taxes, probably interest or maybe penalty as well. So make sure you know which date is for you. Now comes the main point which you've asked, the common mistakes usually people make. So of course, there are a lot of mistakes, and because of which people get notices and demands during the year. So to begin with, you have to choose the right form because you can't choose any random form which doesn't suit you. You have to be very careful that you report all the incomes, especially which are reported in AIS. If you are missing out on any information which is reported in your AIS, or the TDS has been deducted and has been reported in your 26As, and correspondingly you miss your income against that tax TDS deducted, you will definitely get a notice. And AIS also tells a lot about your spending pattern at times. Like if you are spending more on credit card, foreign travel, maybe any luxury purchase like a car or any property. In that case, your income for this year or probably the previous years should be matching with your purchase. So you have to be careful regarding that as well. Apart from that, all the deductions, exemptions you are claiming, you have to have the the invoices for that, the receipts for that, the bank payments for that, and do check your bank account detail very carefully, because at times there are a lot of information which is not there in the AIS or 26AS, but your bank account has it. For example, you've received a gift from your friend, maybe multiple gifts during the year. You have to show that in your income tax return. The AIS will not show you that gift which you have received, because that is something which only you know. So these are the common things which you miss. Apart from that, few basic things. Your PAN should be linked to your Aadhaar, because if your PAN is not linked to your Aadhaar, you will not be able to e-verify your return, or maybe it will not get processed also. And once you file your return, there are a lot of people who forget to e-verify the return or verify the return within 30 days. So in case you don't do that, your return will be invalid. It will be considered as good as not filed. So verification is even more important. If you file the return, verify it within 30 days maximum. After that, you won't be able to verify it.
All right, so there are a lot of key points that you must note, viewers, before you go ahead and file your ITRs this time around. These are the points that you must definitely remember. First of all is the date itself, whether you have a business income or you are a salaried employer. So you should know when is your last date for filing your ITRs, and of course all the other points that Gauri has mentioned. Let's try and understand on the form basis. I remember speaking with you often, Gauri, where you say that the biggest mistake perhaps we make is choosing the wrong ITR form that makes your filing null and void in case you are entering your returns in the wrong form. So which are the forms where the maximum confusion comes in, Gauri, and how would you advise investors to just keep few points in mind before selecting the right form?
It's actually the main reason behind people choosing the wrong form is that they are not aware of all the category of incomes they have received during the year.
Okay.
For example, if I have a business, or I'm getting a salary from my employer and I have some interest income, there are people who will forget that they have traded in any equity share during the year, or they have sold some mutual funds, or there is some other income which they may completely forget. So in these cases, your form completely changes. If a salaried person or a business professional or a person with only interest income is choosing a form, will be choosing a different form. When it gets clubbed with the capital gain income, it will be a completely different form. So you have to be very sure which income sources you have during the year. I'll quickly take you through the forms which are right now available,
Sure.
and there have been some changes during this year. So the ITR 1 is for salaried people, where you have salary income from other sources, and two house properties from this year onwards. You can show income from two house properties. And also, if your equity capital gain is up to 1.25 lakhs, you can show in this form. So this has been a change in this year. And if you are a director in a listed company, or you have unlisted equity shares, then you are out of this form. Or if you have any foreign income, in that case, you have to select ITR 2. And if you have business income, then you have to select ITR 3. And if you are falling under presumptive scheme, then it's ITR 4 for you. Which ITR 4 and ITR 1 are quite simple. You can have basic knowledge of taxation. You can file it yourself. For ITR 2 and 3, I think it's because it's a little more complicated, you should seek professional help.
Okay, very clearly, Gauri has mentioned that in case you fall in the category where you need to file the forms 1 and 4, there you can definitely take a chance to file your ITRs on your own. But the 2 and 3 forms are somewhere where you should definitely seek professional help, so as to not miss out on any key complexity that you might not realize on your own. But like you said, Gauri, one of the biggest conveniences today is that we get most of the form is pre-filled. So can taxpayers rely completely on this? Should they independently also verify the information before filing if they are using this pre-filed form to file the taxes?
Yes, so Sakshi, although it's a great initiative by the income tax department to give pre-filled forms and making the filing easier, at the same time, I think it's very risky if you completely rely on the pre-filled forms, because pre-filled forms will just show you the basic information the income tax department has. And also, if you don't put all the information in your return, then it will end up choosing the wrong ITR form. And in fact, it asks you which form do you want to select. So if you don't know what all sources of income you have, then you will end up choosing the wrong income tax return. Moreover, if you're relying on the pre-filled form, even then the responsibility is yours. So if tomorrow you file a return using the pre-filled form and there's a notice, you can't hold the department responsible. The responsibility will be yours. So you have to check each and everything. It can be a starting point for you. You can use the pre-filled return just to see how it is being calculated and what all data is being pulled out. But at the same time, choosing the right form, putting in all the information correctly, not leaving out any source of income, and tallying the TDS with a corresponding income is totally your responsibility. And also matching your bank statements with the income tax return is your responsibility. So I think you should not completely rely on the pre-filled forms. Take it as a starting point, but don't completely rely on that, and be sure that you're filing the correct ITR this year.
Also, a lot of people will have this question that, okay, I'm looking to file this time the ITR on my own and what I'm looking at is that I want to know and cross check the information that is in the pre-filled. So, where all do I cross check that information from? Should I be looking at 26 AS form? Is an AIS form better? TIS? Where is the information to be cross checked from, Gauri?
So, Sakshi, completely you have to check everything. First of all, check your AIS. So, AIS will give you all the information, and it will also include a lot of information which you were not aware of. For example, small dividend amounts, usually you miss out on that.
Yeah.
It's reported in your AIS. Like small savings interest. And I've seen there are a lot of people who are not even aware of having multiple bank accounts, and they are getting some nominal interest from any savings account, which they were not aware of. So the AIS will tell you that this is the savings account interest which you are getting. But at the same time, AIS may not be 100% correct. So if you see your AIS and if you see any income which is being reported and it is not your income, and you are sure about that this has been doubly reported, or it belongs to somebody else in the family, somehow it has been reported under your PAN or XYZ reason, you have to put a feedback and make sure that you get it corrected, that this income doesn't belong to you. This is first. Second, you have to check your 26AS. Your 26AS will give you all the details of the TDS which has been deducted, and some other details like TCS if you've bought any car or any foreign travel or any foreign remittance. All of that will be reported in the form 26AS. So whatever credit is being reflected in 26AS, that is the only credit you will get in your return. So make sure you check your 26AS thoroughly, because if somebody has missed out on the TDS deposit, for example, if your bank deducted your TDS on the interest income, FD interest, savings interest, whatever, and the same TDS you're not seeing in your 26AS, then you have to inform your bank that they're supposed to deposit that TDS in your 26AS. Because if they don't do so, that is your loss. And the same goes for your employer or your current person who's freelancing with you. So you have to look into 26AS. Third is your bank statements, because sometimes there is some information which is not there in AIS, which is not there in 26AS, that is there in your bank statement. So make sure you don't miss out any information from the bank statement. And apart from this, the main document, of course, is your Form 16 if you are a salaried person. Do make sure that your Form 16 is correct. And if you've received your Form 16, which you must have received by now, you just go through your Form 16 once. If there is any misinformation in the Form 16, tell your employer to revise his TDS return and issue a fresh Form 16 so that your return matches with your Form 16.
Okay, so I want to ask you this. Of course, these are all the guidance that you have shared with our viewers. These are the things that they must check. But in case they miss out on some or the other income that they have not mentioned while filing the ITR, if they have chosen the wrong ITR form, we are all going to be taking all scenarios. So these are the cases that commonly come to you as well as a CA. What is the rectification method? Is there a way, once there is a wrong ITR file, what happens then? Does one immediately get a tax notice? Is there a time to recorrect it? What exactly happens then?
Yes, definitely. It's a very common thing. People do miss out on incomes. They do misreport incomes when they are filing their returns. And the department is not very strict in this regard. There are options. So first option is, suppose you filed your return right now and you get 30 days to verify your return. So before you verify your return, you can discard your return. So that will be considered as not filed and you can file a fresh return. Now, suppose you filed your return and you have verified it also, then you can file a revised return till 31st December. Now, there's a question which people ask that if our return has been processed, because if you'll see in last few years, the processing has been really fast. So if I file my return today and my return is processed by next week, then can I revise it by 31st December? So yes, you can revise it by 31st December, even if your return has been processed. The only case where you can't revise your return is when the assessment has been done. Assessment is where you get a notice and the whole assessment has been completed. In that case, you can't revise, which is very unlikely in most of the cases. So most of the people can revise the return by 31st December. You can revise your return any number of times. There is no restriction. Just one thing you should keep in mind. Yeah, but there's one thing which you should keep in mind while revising your return. If you are revising your return and, for example, you filed your return under old new regime initially in the original return, you revise it and you claim a lot of deductions under old regime, which are not genuine deductions. Most likely you will get a notice because you are claiming a lot of deductions. So the department may issue a notice and ask you for the documents. If you have genuine documents, only then you should file such a return and revise it. Otherwise, I think you should avoid revising the return. If there is a bona fide mistake, go ahead, revise it. If there is a genuine mistake, you have genuine documents and there is nothing to hide, then go ahead and revise your return. Otherwise, I would prefer that you should not revise the return because if notice comes, and especially for the old regime, I'm saying it really gets difficult at the end.
मैं इसी सवाल पर आने वाली थी गौरी, जो आपने अभी बताया कि पिछले कुछ महीनों में हमने कई बार ये खबरों में देखा है कि बहुत नोटिसेस आ रहे हैं लोगों को, जहां पर लोगों ने कुछ फेक डॉक्यूमेंट्स देकर डिडक्शंस लिए हैं और उसके बाद उनको नोटिसेस आए हैं, जिसके बारे में अभी आपने बताया. तो इस बात पर ये क्लैरिफाई कीजिए कि एक बार फिर से सवाल खड़ा हो जाता है कि ओल्ड टैक्स रेजिम चुने या न्यू टैक्स रेजिम चुने, खास तौर पर जब पिछले बजट में दोबारा से कुछ चेंजेस हुए हैं. दोबारा से ये सवाल खड़े हो रहे थे कि क्या वापस से ओल्ड टैक्स रेजिम कई लोगों के लिए और बेहतर हो चुका है. तो ये समझाइए कि आप अपने क्लाइंट्स को यहाँ पर क्या एडवाइस कर रहे हैं.
साक्षी, ओल्ड रेजिम डेफिनेटली बेटर हुआ है. लास्ट बजट में भी कुछ चेंजेस किए हैं जहाँ पे HRA को के अलाउंस को थोड़ा सा इंक्रीज किया है फॉर फ्यू सिटीज. बट एट द सेम टाइम जब आप रिटर्न फाइल करते हो, आपके लिए और टफ कर दिया है रिटर्न. बिकॉज आप अगर अपना रिटर्न इस बार से देखेंगे, जो आपका ITR है, उसमें अगर आप सपोज HRA क्लेम करें, HRA इज समथिंग विच इज बेसिकली द मोस्ट यूज्ड टैक्स इवेजन टूल. तो आप अगर HRA क्लेम कर रहे हो और आपने HRA सपोज अपनी मदर को दिया है, अपने फादर को दिया है, हैव टू मेंशन द रिलेशनशिप विद द लैंडलॉर्ड. और जहां आपने रिलेशनशिप मेंशन कर दिया लैंडलॉर्ड से, तो इनकम टैक्स डिपार्टमेंट वहां पे आपको कैच कर सकता है. उसके अलावा भी अगर आप कोई LIC पॉलिसी है, मेडिक्लेम पॉलिसी है और एनीथिंग लाइक दैट, उसमें सारे डॉक्यूमेंट्स की डिटेल्स, आपका पॉलिसी नंबर, डेट ऑफ पेमेंट, किसको पेमेंट की है, ये सारी डिटेल्स आपसे फॉर्म में मांगी जा रही है. तो ओल्ड रिजीम सिर्फ उनको क्लेम करनी चाहिए जहां पे आपकी बहुत हेवी डिडक्शंस हैं, बिकॉज अगर आपकी हेवी डिडक्शंस है तभी आपको उसका फायदा भी मिलेगा. अदरवाइज न्यू रिजीम इन एनी केस इज बेटर स्लैब वाइज. आपकी बहुत डिडक्शंस है, आप ओल्ड रिजीम क्लेम करिए. बट आप जब ओल्ड रिजीम क्लेम कर रहे हैं तब आपके पास सारे डॉक्यूमेंट्स प्रॉपरली मेंटेन्ड होने चाहिए, जेन्युइन। अगर आपके पास वो है तभी आप क्लेम करें, क्योंकि लास्ट ईयर हमने देखा बहुत लोगों को नोटिस आए हैं एंड ऑफ द ईयर बिफोर 31 दिसंबर, एंड मैक्सिमम केसेस में उन्होंने ओल्ड रिजीम ऑप्ट की हुई थी।
जी। नाउ लॉट ऑफ पीपल वुड आल्सो आस्क दिस कि अगर न्यू रेजिम के तहत, जैसे आपने बताया स्लैब्स वाइज वहाँ पर बेहतर है, लोगों को कम टैक्स देना पड़ रहा है, बहुत सारे केसेस में ऐसा हो गया है कि हमारी सैलरी टैक्सेबल इनकम में ही नहीं है, तो क्या उन लोगों को भी आईटीआर फाइल करना है या नहीं? इस सिचुएशन में आप क्या एडवाइस करते हैं इन्वेस्टर्स को?
उसमें लॉ क्या कहता है साक्षी, कि अगर आपकी टैक्सेबल इनकम नहीं है तो आपको रिटर्न फाइल नहीं करनी है। बट अगर आपकी टैक्सेबल इनकम नहीं है और आप कुछ ऐसे केसेस हैं जहां पे आप फॉल करते हैं, तब आपको रिटर्न फाइल करनी है। फॉर एग्जाम्पल, आपका टीडीएस कटा है तो इन एनी केस आपको रिटर्न फाइल करनी है, बिकॉज यू वांट रिफंड फॉर दैट टीडीएस अमाउंट। सेकेंड इज, जब आपने बहुत हाई वैल्यू एक्सपेंडिचर किया है, जब आपने कैश डिपॉजिट किया अपने करंट अकाउंट में 1 करोड़, या 50 लाख आपने डिपॉजिट किया है अपने सेविंग्स अकाउंट में, या 2 लाख से ज्यादा आपने कोई फॉरेन ट्रैवल किया, एंड इट इंक्लूड्स एनी फॉरेन ट्रैवल फॉर एनी फैमिली मेंबर। सपोज एक फादर ने अपनी डॉटर के लिए एक्सपेंडिचर किया है, वो भी इंक्लूड हो जाएंगे इस 2 लाख के फॉरेन एक्सपेंडिचर में। या 1 लाख से ज्यादा का आपका सपोज इलेक्ट्रिसिटी बिल आया है। अगर आप देखेंगे तो ये सारे जो केसेस हैं, ये हाई वैल्यू ट्रांजैक्शंस के हैं, और ये एक लो इनकम जहां पे आप थ्रेशोल्ड ही नहीं क्रॉस कर रहे हैं, उसको जस्टिफाई नहीं करते। सो इन केस यू आर फॉलोइंग अंडर दीज कैटेगरीज, आपको रिटर्न फाइल करनी मैंडेटरी है। और हो सकता है कि सिर्फ उस साल में आपकी रिटर्न आपकी बिलो थ्रेशोल्ड हो, बट आपको उसके बाद भी इसको फाइल करना है अगर आपने इनमें से कोई भी ट्रांजैक्शन की है।
ओके, लास्टली
साक्षी, वन थिंग मोर, अगर ये सब में आप फॉल नहीं भी करते हैं तो भी आई थिंक फॉर कन्वीनियंस यू शुड फाइल योर रिटर्न, बिकॉज आपको वीजा चाहिए, आपको कोई बैंक से लोन चाहिए, इन सब चीजों के लिए भी आपसे आईटीआर मांगी जाती है।
आईटीआर फाइल कर दें, इसमें कोई प्रॉब्लम नहीं है, उल्टा बेनिफिट्स हैं। चाहे आप टैक्सेबल इनकम में हैं या नहीं है, ये आपके लिए एक नॉर्म बन जाना चाहिए कि आप हर साल एक आईटीआर फाइल कर रहे हैं। इससे लोन्स लेने में भी आसानी होती है। कहीं आपको बाहर ट्रैवल करना है तो वीज़ा के लिए भी 2 से 3 साल का आईटीआर फाइल करने के लिए वो ऑप्शंस मांगते हैं कि आपने अगर फाइल किए हैं तो ये पेपर्स को आप सबमिट करें। तो आप इस बात का ज़रूर ध्यान रखें। लास्टली गौरी, जैसे अगर आपने बताया जो लोग अपने आप इंडिविजुअली टैक्स फाइल आईटीआर फाइल करेंगे उनके लिए क्या ज़रूरी है देखना, लेकिन जैसे जब लोग सीएस के पास जाते हैं, आपके पास जाते हैं कि आप हमारी मदद कर दीजिए आईटीआर फाइल करने के लिए इस बार, तो अपने सीए को क्या क्या डॉक्यूमेंट्स प्रोवाइड करने हैं? जो लोग अब सीएस की मदद लेने वाले हैं, आपके पास आएंगे, उनको आप क्या क्या बोलती हैं कि उनको क्या डॉक्यूमेंट्स उनको सबमिट करने चाहिए?
आई थिंक साक्षी, अगर आप सीए से रिटर्न फाइल करवा रहे हैं तो जो जो डॉक्यूमेंट सीए मांग रहे हैं आप वो प्रोवाइड कर दें, दैट इज इनफ। बिकॉज यूजुअली लोग बोलते हैं हम ये नहीं दे सकते, ये नहीं दे सकते। तो जहां आपने सीए को पूरे डॉक्यूमेंट्स नहीं दिए जो उन्होंने मांगे हैं, देन इट्स अ प्रॉब्लम। फॉर एग्जाम्पल, कई लोग अपनी बैंक स्टेटमेंट्स नहीं शेयर करना चाहते। बैंक स्टेटमेंट्स में बहुत सारी डिटेल्स ऐसी होती हैं जो आप नहीं देख सकते, वो एक सीए ही देख सकता है। यू मस्ट शेयर ऑल दी डॉक्यूमेंट्स व्हिच अ सीए इज आस्किंग। तो आपके पास बैंक स्टेटमेंट्स होनी चाहिए जो आप सीए को देंगे। आपके अगर फॉर्म 16 है, आपको वो सीए को देना है। आपको इसी के साथ साथ कोई भी जो आप डिडक्शन क्लेम कर रहे हैं, एग्जेम्पशन क्लेम कर रहे हैं, उसके प्रूफ्स अपने सीए को देने हैं। बिकॉज हर एक की एक लिमिट होती है, एक कैलकुलेशन होती है, वो सारी डिटेल्स आपको देनी है। अपार्ट फ्रॉम दैट, अगर आपका बिजनेस है तो डेफिनेटली आपके जो अकाउंट्स मेंटेन होते हैं, जो आपका प्रॉफिट एंड लॉस और बैलेंस शीट आपने बनाई होगी इन केस ऑफ अनऑडिटेड केसेस आई एम सेइंग, वो आपको उसमें देने होंगे। सो टू कट इट शॉर्ट, आई थिंक जो भी सीए मांग रहा है प्लीज आप उनको दीजिए। अगर आप उनको मना कर रहे हैं, इट इज योर लॉस, नॉट एनीबॉडी एल्सेस लॉस।
Okay, very clear verdict there. Gauri is suggesting that सीएस जो भी आपके डॉक्यूमेंट्स मांगते हैं आप उनके साथ शेयर कीजिए, क्योंकि उसमें कई माइनर डिटेल्स होती हैं जो टैक्स फाइलिंग में मिस हो सकती हैं, बाद में आपका नुकसान हो सकता है। शायद वो किसी तरीके से आपको रिफंड करवाने में मदद करवा सकते हैं। तो आप उन डॉक्यूमेंट्स को डेफिनेटली आप सबमिट करें अपने सीए को। थैंक यू सो मच गौरी फॉर बीइंग विद अस ऑन द शो। वील कंटिन्यू टू डू दिस मेनी टाइम्स ओवर व्यूअर्स बिकॉज ऑफ द लास्ट ऑफ द season as far as the ITR filing is concerned. Keep coming up with more questions so that we can solve it with you, with Gauri coming in on the platform. We'll have her many times over in the month of July to solve all the questions that you have regarding your ITR filing season. Thank you so much for being with us on the show. Much more coming up on the markets right ahead.
Crypto is going to define the future. I want to be mined, minted, and made in the USA. It's going to be.
He was already a billionaire, a real estate tycoon. Then he became the most powerful man in the world. But Donald Trump's latest financial disclosure shows something bigger, sharper, and far more controversial. A sitting US president with a vast business empire, a booming crypto income stream, active investment accounts, luxury properties, golf resorts, foreign licensing deals, and a financial footprint that now stretches from the Wall Street to blockchain wallets. The latest disclosure, running into hundreds of pages, gives a rare window into how Trump's private wealth machine worked through 2025 and why critics say the line between public office and private profit is again looking blurred. The first big number is not income, it is activity. According to the report data, the number of Trump-linked investments has exploded over the years, from fewer than 100 in 2017 to more than 6,000 in 2025. That is not a quiet portfolio sitting in a drawer. It involves quick transactions, profit booking, with royalties, licenses, digital coins, and real estate revenue thrown in. The headline figure is dramatic. Trump reported earning at least $1.4 billion in 2025 from crypto and meme coin-related business. At the center of this new money trail is World Liberty Financial, a crypto firm whose co-founders include Trump, his sons, and Stephen Witkoff, a top diplomat in the administration. Zach Witkoff, the envoy's son, serves as chief executive officer. Then comes CIC Digital, Trump's meme coin business, which generated about $636 million in income, mostly through royalties from a licensing agreement. In simple terms, Trump was not just holding crypto. The disclosure suggests he was earning from the ecosystem around crypto, from token sales, coin licensing, equity sales, and digital asset holdings. For context, this was far larger than the money reported from his famous real estate and resort properties. The old Trump brand was built on towers, clubs, and gold-plated lobbies. But the new Trump money story is increasingly digital: tokens, coins, wallets, and licensing deals. Trump's traditional business, especially golf course and resorts, also brought in hundreds of millions of dollars in revenue. Mar-a-Lago, the Florida club often described as Trump's political and social headquarters, reported about $77 million in revenue. His golf and resort facilities together reported revenue of just over $500 million. And 2026 is already off to a booming start for trader Trump. A separate set of filings showed another striking number: more than 3,700 trades in the first quarter of 2026, with transaction values reported in broad range from at least $220 million to around $750 million. The names included some of America's most powerful companies: Nvidia, Apple, Microsoft, Meta, Oracle, Broadcom, Bank of America, and Goldman Sachs. The filings do not reveal exact profits, exact prices, or the full strategy behind the trade. But the scale of the activity is what raised eyebrows. For a president, when even a routine stock trade can become a headline, the trades involving companies affected by government policy becomes a question mark. The concern is not simply that Trump or managers acting on his behalf bought and sold assets. The concern is the intersection. Nvidia depends heavily on US policy for the export of advanced AI chips. Boeing is deeply connected to defense, aviation, diplomacy, and overseas deals. Big tech companies constantly deal with antitrust, regulation, and government contracts. When the person at the top of the government has financial exposure to companies that need decisions from that same government, critics argue every policy move can start to look like a market signal. And that brings the story to the central controversy. Critics say the question is not whether every transaction was personally ordered by Trump. The Trump Organization says his holdings and independently managed by third-party financial institutions, that trades are made through automated process, that Trump, his family, and his company do not select or approve specific trade. But critics argue this defense does not remove the larger concern. Trump did not fully divest. He did not move all assets into a classic independent blind trust. His business empire remains linked to family-run structures, and many of those businesses operate in sectors touched by presidential power: crypto regulation, foreign investment, real estate, media, technology, exports, tariff, and corporate approvals. The White House and Trump Organization reject conflict of interest allegations. Their argument is clear: The investment are independently managed. The president is not choosing trades. The family is not approving market decision. And the administration's policies are made for the American public, not for private gain. There is no proof in the filings that Trump personally timed trade to policy decision. But ethics experts say this is not the only test. The test is also whether the public can trust those decisions being made without financial shadow. For supporters, his mega profits look like proof of Trump's business instinct. For critics, it looks like a warning sign. A president whose private finances sit too close to public power. Bureau Report, Business Today Television.
Bitcoin is going to the moon, as we say. It's going to the moon.
But a whole lot of initiatives rolled out by Uber as regards to the safety of the consumers and for the driver party itself. Now I'm joined by the head of safety, Suraj. Thank you so much for joining us. First thing, with the Surakshit campaign, I want to know what all 2-3 key main features are being rolled out by Uber and how are the consumers and the drivers and eventually the third party on the road remain safe.
Continuing with our efforts to raise the bar on safety, we have launched several industry-first initiatives, and these are aimed to improve safety on the platform. We are also extremely proud of the partnership that we have with the Ministry of Road Transport and Highways for the Sadak Suraksha Abhiyan, for which we are using our platform to spread a very simple message, which is that while you're on the road, you should prioritize safety over speed. The 4 key features that I wanted to highlight are Record My Ride, which essentially lets drivers turn their phone into a dash cam if they ever feel uncomfortable or concerned about their safety. Secondly, we have Don't Type and Drive, which is a feature that prevents drivers from being able to message or able to type on the app if the vehicle is moving. The third is ambulance partnership that we have launched in association with Dial 4242, where if you ever face an accident on the platform and if you need medical support, you can avail an ambulance and the ambulance can get you to the nearest hospital. And the last one is Choose Your PIN, which essentially lets you choose your PIN and set your own PIN, which verifies you at the start of the trip. Just like your ATM PIN, you can change it any number of times, and it essentially gives you greater control over how you experience safety on the platform.
All right. How many drivers have now started being on board when it comes to such safety measures, or would it be an inbuilt feature that driver partners would have to just accept it and it starts to work like that? So how many driver partners on board and how many states are you piloting with to begin with?
So we have gone live with all of these features to 100% of our riders and drivers. We have millions of drivers and millions of riders across the country, and all of these riders and drivers will benefit from the safety features that we have launched, and they will actually benefit from the host of safety features that we already have in place, like audio recording, Share My Trip, phone number anonymization, address anonymization, safety helpline, and ride check.
Lastly, could you give us any number as to how much money have you put into scale up those investments in tech in particular? Is there a number to it? Because that would eventually make us understand how much investments is Uber doing in its tech upgrade and safety measures.
So we don't want to give a number. It's in the ballpark of millions of dollars, but this is something that we do because it's the right thing to do, and because we believe in it. And we believe that safety is a value for us and something that we continue to work on and continue to make better for our users on the platform.
Wishing you all the best. Thank you so much for joining us. Thank you. Thank you so much. Thank you.
Hello and a warm welcome on Business Today Television. Ladies and gentlemen, the first half of calendar 2026 is over. May and June have been characterized by events that lead to a better estimate of what markets could look forward in the second half of calendar 2026. Oil has fallen substantially. This was a major bugbear for bulls on Dalal Street, down about 18-19% for the month of June alone. Silver and gold have dipped very, very sharply. Basically, money is moving into equities on Dalal Street, moving away from gold, silver, oil and bonds. That's a very positive development. Rupee is also gaining strength. These are the 5 major tailwinds that we move with in the month of July as far as markets are concerned, as also on the first quarter earnings. How is the structure of the market looking? What sentiment needs to be tracked? To discuss this and a lot more, we are joined by Mr. Sudeep Bandyopadhyay, a very well-known market investor for the last 3.5 decades, a person who's seen as volatile times as they can get and of course come up on top, sir. Namaste Sudeep ji and a very warm welcome, sir. How are you looking at sentiment on Dalal Street at the moment? Are you breathing easy?
Well, definitely we are breathing easy. Compared to the situation where we were, let's say, even 1 month back, just 1 month back, I think things have improved drastically, I would say. Look, first, what we could influence, which is the stop the fall in rupee. I think both government and RBI took steps in unison, and now we have a favorable ecosystem created around the rupee. FCNR deposits are expected to flow in. ECB's external commercial borrowings are expected to happen. And because the hedging cost is being taken care of by RBI and the government, the money flow is estimated anywhere between $70 to $90 billion within a period from now till September, because that's where the window closes. So $90 billion, anywhere between $70 to $90 billion coming in, definitely will stem the rot as far as rupee depreciation is concerned. And the signs of that is already visible. Rupee has recovered sharply, and further recovery, to my mind, is expected in the near future. So that's one part of the problem which has been addressed effectively by RBI as well as Government of India by removing the taxation and other irritants. Now it comes to the second part, which was the biggest challenge for India, which is obviously the crude oil prices. And you also talked about that. Now, this is something which completely derails India's calculations, estimates, budgets, capital market, economy, everything, because we import still about 85% of our crude oil requirements. And, when oil moves from $70 to $120, you can imagine the impact on all these parameters. Thankfully, in the last 1 month with this, MOU, so-called MOU having been signed, things have cooled off. Iranian oil is expected to come to the market, which is going to be a permanent addition and a factor for bringing down the oil prices. Strait of Hormuz, depending on which day we are talking, is open, probably, or not open. But expectations are that things will cool.
Good morning, ladies and gentlemen. A warm welcome on Business Today Television. It's proving to be a good day as far as markets are concerned. The Nifty is now consolidating above 24,000, and of course it's the IT index that's pulled out all stops. A very strong bout of short covering and value buying on many tech stocks has made them to be the top 5 or 6 stocks in terms of gainers in the top 15. Infosys up 5.2%, persistent adding 3.3%, TCS 3.3% higher, and you have strength coming across the board in Coforge, Sonata Software, so on and so forth. Let's also look at the other parts of the market, assets which probably may have come off highs and are offering value to deep-pocketed long-term players. Joining us on the show is Mr. Kunal Shah, Head of Commodities Research at Nirmal Bang Securities. Namaste Kunal ji, a very warm welcome, sir.
Namaste.
A bit of a cool-off happening on silver and gold, as also in oil prices. How are you watching the entire commodity space as far as precious metals and energy is concerned? Kunalji, your first thoughts here.
So commodity has gone through a significant correction in last 1 month because of three reasons. One, the rate hike narrative by the Federal Reserve. Kevin was pehle rate hike ke narrative. He was sticking to the rate hike narrative. Second, because the US inflation soared to 4.2% and US job market was very strong, that made market to believe that interest rates in US are moving up significantly, going to move up significantly, and hence commodity should go down. But the reality is completely different. Yesterday, Kevin was turned little dovish. He's saying that inflation will come down in months to come because whatever inflation rise we had seen in US, out of which 1.5% rise is coming from the energy inflation. So if energy prices are going down the way they are going right now, US inflation will come down to 3.3, 3.2%. So in that scenario, rate hike is not warranted. So now the entire narrative is flipping, which makes me believe that commodity after this correction presents tremendous value to go long, especially bullion. We are bullish and we believe that 10 to 15% upside from here is very likely going forward. As far as the sharp upside from here, the likelihood of that is very high, but conservatively in next 3 months, the prices to move up by 10 to 15% is very high.
Okay, fair point. The other issue, Kunalji, that's also facing the commodity space is this inherent strength in the dollar. It's also moved in 3 digits above 100. How are you viewing this strength? Is this temporary?
Absolutely, it is temporary. Quite rightly said, the dollar index cannot strengthen significantly from here. 3 reasons. Because if the dollar index strengthens significantly, and it becomes very difficult. I mean, for dollar to strengthen, the rate should be higher. And if rates are going up, the US housing market can collapse or some other accident may take place. So I think dollar index should peak out around 102, 103, this kind of levels, and eventually it should come down below 99, 98, that kind of level. So whatever upside we have seen is going to be short-lived. You saw the news yesterday. The Japanese government also likely to intervene. They intervene in the FX market. So
yes,
the yen is also going to appreciate from here. And the trend going forward for the dollar index is definitely going to be on the weaker side.
Yes, in fact, the USD yen pair actually is one of the most critical issues which is facing the market at this point of time. Let's see what's its value. It should correct USD JPY is what I am looking at. Yes, this is the one, 162. Yes, this is something that needs to come out. What could be the possible 2 or 3 reasons why the USD JPY pair could show signs of coming off, Kunalji?
Well, if the yen continues to depreciate the way it did, it creates problem for Japan because all the imports of Japan becomes very expensive and the inflation will move up, and that should lead to a higher, much higher interest rate. Same problem. Japan's debt to GDP ratio is more than 130%. So Japan cannot withstand aggressive rate hike from here. So any which way, they have to curtail down this yen's depreciation. And the central bank yesterday intervened, and I think yen also have peaked out in near term, and the likelihood of it going to 155 is very high.
Yes. The last time you saw this pair was in September 1986, ladies and gentlemen. So you can see the weakness of the yen, which is creating this artificial dollar strength too. So this should peak, and once these two come off, you'll also see a positive impact on gold, silver, oil, as also Indian markets. Final set of questions, Kunalji. How are you now watching the physical market of gold and silver? Last time we had met, you had specifically mentioned that demand in the physical market of silver has outstripped absent supply. So that market is just getting to be empty and possibly will move to a premium.
So yes, silver market right now is in a premium, and with imports not coming in, the scenario is pretty dicey right now. But the fall in the silver prices is mainly attributed to the macro reason. It has nothing to do with the Indian demand and supply scenario. The Indian government, whatever restrictions they have imposed on the silver imports, I think the supply side is getting squeezed in the domestic market, and hence we believe the physical stock in India is pretty high, because the import what we saw in the month of October, November, December, and January were pretty high. So that's why there is no issue of availability. So I believe that going forward, silver, the supply scenario to continue to worsen.
Okay, fair point. But when will this start reflecting on the physical price of silver? At the moment, we've had a 50-55% correction in prices from what they peaked at somewhere like 421, 422, 422 per kilo. What is your prognosis on the silver price?
Silver fundamentally doesn't look very bullish, but in line with the gold. I mean, $55 seems to be the bottom for silver right now, and the possible upside from here immediately doesn't look very likely, considering what is happening in the metals. But I believe that there is a deep value. The moment prices goes towards $56, $57 in India, towards 210,000, I think one should start accumulating it.
Okay, fair point. And what's the prognosis on gold? We just saw a fairly strong correction coming into gold prices as well. How are you watching the physical market in Zaveri Bazaar across Indian jewelry scene? What's the feedback you are getting from the physical buyers of gold?
Gold looks quite positive. Gold, I'm optimistic. Trading bounce is expected 1.5-2 months down the line, and from here 5 to 10% rally is very much a likely outcome going forward. So gold, I'm pretty bullish.
Okay, take it. Perfect. When would you think this bullishness would start reflecting in prices?
I think you have to understand the macro narrative that rate hikes are myth in US. Any major rate hike is not sustainable. So whatever fall what we saw lately was because of the strength in dollar and the rate hike narrative, which is not going to stay. And hence I believe that there is a tremendous value in gold. And like you saw Bank of Poland coming up with a statement, they want to accumulate 100 tons of gold. So central bank buying will continue to dominate going forward. So we believe that fundamentals of gold are still not bearish for next 2 years.
Okay, fair point. But these prices will consolidate at current levels?
It may consolidate, it may not move up aggressively, but the next leg should come on the upside rather than on a downside.
Okay, fair point. And the elephant in the pack, which is the crude oil prices, now firmly below $70 a barrel. When do you think the Chinese Strategic Reserve will start to rebuild Kunalji, what is that level that the market is watching at?
Brent shifting below $70 is a great sign. It's a great time for all of these G7 economies and China to refill. Even country like India, each and every nation would like to refill their inventory, and Brent going below 70 would be the right time for them, because the same Brent was trading at 120 2 months down the line, and now that is drifting towards $70. So I think that they should not wait. They should gradually start filling their reserve with every fall in the price from here.
Okay, fair point. And the agri space, Kunalji, the lack of a monsoon has sort of revisited agri bulls. Where are you seeing price build-ups?
I think a soft commodity like something like turmeric or coriander or even sugar, cotton, all these commodities are going to do well from the price hike point of view, and the super El Nino impact will be felt post August very badly, and that is the time. So August. So I think the possibility of winter crop getting affected because of super El Nino is higher than the summer crops. So commodity like cotton and sugar, they should do well going forward.
Do you have any long positions in any agri commodity?
No, I mean I don't do trade, but there are no bets on our side for agri. I mean, we are not having covering a lot of agri commodities. We used to, but now we don't.
Fair point. For your clients, where are they long in terms of the commodity space on a net basis?
So we are recommending right now to accumulate gold, and our clients are long in gold and really outperform from here. That is my highest. Second, we are also recommending, with the current fall in copper prices, around $12.60 on 12.60 rupees on MCX. Copper is also a good value buy. So these are the two commodities which are our top picks.
Okay, so copper and gold is where long positions are being advised by Nirmal Bang Securities for their HNI clients. Any short recommendations in the commodity space?
Only oil. Only oil looks weak. Rest all commodities are likely to do well going forward.
That's an interesting point. A lot of people actually whom I speak to, many of them are your friends as well. They're looking at about $65 to the barrel as something where probably some short trades will unwind. Would you agree to that assessment?
Exactly. $65 looks very likely. Another $3 to $4 downside is the most likely outcome going forward.
Okay, fair point. In terms of other energy assets such as natural gas and all, has the bull market unwound there?
No, I think it's still time, because this is the time when the inventory in US starts getting built, and from September, October onwards, you start seeing a gradual draw, and November, December is a peak drawdown season. So right now, natural gas prices are not going to go up. They will remain under pressure in near term. The inventories will be higher, the production will be higher. So this is not the time to see upside in natural gas prices.
Okay, and what about other spaces in the market where you see this bull market taking shape? For instance, money is moving out of gold and silver, it's moving out of oil. Where is it going?
I think the rotation of money, what we are seeing is the AI trade is unwinding right now. The commodity has unwinded right now.
Yes.
Right now, it's a very difficult time. If you see there was a rebalancing by US pension funds 2 days back. and major money is seen moving in the fixed income market going forward. So whatever happening in the world right now, the biggest beneficiary of all of that is the fixed income market.
Rightly put. I think that's a space worth watching. Thank you so much, Kunalji. As always, it's such a pleasure listening to a very evocative part of the market, which has been doing very well in the past. Thank you for joining us. That, ladies and gentlemen, was Mr. Kunal Shah at Nirmal Bang Securities, the top man of the commodity space. Thank you for watching. I'll be back shortly. A warm welcome on Business Today Television, ladies and gentlemen. It's the last day of June, the last day of the F&O expiry, a monthly close, a quarterly close, and the end of the first half of calendar 2026. By all events, this is a very important day in the life of capital markets, and this also comes after a terrible quarter. We've had all sorts of disturbances via tariffs, via the Asian war, via rising crude oil prices in the month of March, April and May, and then some respite during June. While equities are volatile, and in hindsight it appears to be a trend that you should have navigated with ease, but living through this pain and walking past fire are two separate things. To discuss this and a lot more as far as what the crystal ball holds, we are joined by Mr. Devarsh Vakil, Head of Prime Research at HDFC Securities. Mr. Vakil is a very well-known stock picker in the market and often deploys funds at times when there is crisis. Namaste Devarshji, a very warm welcome. A bit of a relief, you would agree, in the markets at this point of time. How do July, August, September look to you?
Yeah, namaste Shailji, and a pleasure on being on your show. So yes, as you mentioned, all the major worries on back of geopolitical concerns leading to higher crude oil prices, leading to trade deficit and weakening currency seems to be behind us. The geopolitical concerns are over, and RBI and government working in sync have taken steps that has stabilized the currency, and it seems that the foreign capital is headed towards debt market, headed towards Indian markets, and that should help navigate the growth. We had good credit growth in the form of higher credit growth, but the capital was scarce. The deposit growth was not happening, and because of the steps which RBI and government has taken, I think capital will be available in plenty over the next 3 months. That should help our economy with the lower cost of capital. Obviously, in the short term, as you mentioned, there are some technical factors because of the derivative expiry and all. But over the next 3 months, I think we should expect a lot of foreign capital to come into Indian market.
Yes, I think the underlying tenor and granularity of the market has changed for the better. This normally happens when you have a terrible quarter, a terrible 6 months. The next 6 are obviously better. But let's address the elephant in the room, Devarshji. While all problems seem to have been sorted, there is no silver lining because there is no dark cloud. The monsoon is delayed and the deficiency is about 40%. How does this impact the quarterly performance in the numbers that will soon be upon us?
Yes, so as you mentioned, the weak monsoon does impact the rural income and consumption demand, food inflation, especially the consumer-related sectors like FMCG can be at risk. As you mentioned, the IMD has forecasted 90% long period average monsoon. So, and that is on the back of El Nino. So that is a concern. But government has already taken steps. They are allowing steps to address that. Another positive, Indian Ocean dipole may increase the warmer temperatures, and that may bring moistures, and that should be there in the month of August and September. Hopefully, we will not have such a dry patch in later half of the monsoon, and hopefully we'll be able to navigate, but that is a concern and we'll keep an eye on that. So for the timing, it is our expectation that we should keep the exposure towards the rural consumption stocks, towards the consumer stocks underweight, and let's see how this plays out.
Okay, fair point. Markets generally thrive on uncertainty and volatility. It looks to be no different when you look at the small cap and the mid cap space. Devarshi, they have bounced very sharply in the last 1 month or so, mainly account of how crude oil has corrected. Now, you are a stock picker par excellence. I wanted to understand, what are you advising your HNI clients to do? What looks good at this level in terms of valuations?
So, banking and finance, BFSI space, especially the large banks, look good to us. Overall, banking should be at least 30% of the banking and finance, BFSI space should be at least 30% of the portfolio. If not, we are advising clients to increase exposure there. As I mentioned, the credit growth is strong in the country, and the banks had an issue about deposits. The latest fortnight numbers, the credit growth was 17.7%. Demand across corporate, retail, MSME was witnessed, while credit growth was only 12%. Deposit growth was only 12%. So there is a concern there that how banks will be able to generate the deposits. And there, I think the recent steps post NPC, I am expecting that the FCNRB, ECB, that kind of capital will come into the country over the next 3 months, and that should address the raw material issue, the liquidity which banks require to deploy. The NIM compression seems to be over, and now I feel that the banks, with the help of a pristine asset qualities which they have, will be able to deploy this capital and earn decent returns. So at such valuation, which is at a quite low compared to the historical levels, many banks are available less than 2 times price to book. I think these are excellent level to deploy capital into banking space right now.
Yes. With your permission, Devarshi, I'll play the devil's advocate. Essentially, we have seen banks underperform, especially private sector banks, and at the same time the asset quality, credit growth of their public sector rivals has improved dramatically. So it's a double whammy in the sense that private banks derated, and at the same time PSU banks re-rated. Now, what is the possibility that private banks become a value trap? Of course, you are comparing their parameters to their own averages over the last 2.5, 5 years, 10 years or so. But what prevents them from slipping further? A 52-week low can turn into a 120-week low.
Right, so I agree. PSC, the public sector banks have benefited relatively stronger balance sheet, and while private sector bank continue to face tighter deposit accretion problems. See, the underperformance was on the back of their ability to garner the deposits because of the good franchise public sector banks had. They were able to continue their the deposit growth, and they were able to outpace the public sector banks in the past. But now I think the tide is turning with the help of new policies. I am expecting private sector banks to announce schemes, garner capital from NRIs, from foreign capital in the form of ECBs and others, and that should be able to address their the deposit issues. They are able to give credit growth, working capital loans, and other areas. Demand is there for them, so we should be able to address this problem, and that should lead to growth in the earnings, leading to re-rating in their valuation.
Fair point. Let's see whether this banking trade pans out to your understanding or not, and I'm sure it will. About 18 months ago, Mr. Vakil, you were the first to point out how things might improve for the better as far as small finance banks are concerned, and it worked very, very well. Utkarsh was one of your picks, and it performed very well in that time frame as well. Apart from private sector banks, what else is on the radar of HDFC Securities research team in terms of improving Q4 performance and perhaps a sterling Q1 in the pipeline?
So, as you mentioned, looking ahead, FY27 credit demand is expected to remain healthy. So, apart from this, NBFCs, and there we have picked companies like Shriram Finance, Northern Arc. We have issued report recently in last few months on these, and as you mentioned, Small Finance Bank. Recently, we issued a report on Jana Small Finance Bank, where all these where valuations were looking attractive to us. They were technically looking at a good entry points for us. So these are some of the areas or the stocks where we have in last few months recommended to our customers to deploy some capital. So as I mentioned, banking and finance, large private sector banks and some NBFCs, some small finance banks look good to us for increasing the exposure towards BFSI space.
Okay, but is it a matter of choice that only BFSI looks good to you and nothing else?
No, so there we are asking investors to increase exposure, become overweight compared to the past. Other than that, longer term, I think pharmaceuticals, where we continue to like, we have been issuing recommendations there. Longer term themes like defense continue to be, should be the part of portfolio. Over next 3 to 5 years, 15 lakh crore kind of opportunity is there in the defense stock. So after a certain bit of technical correction, I think again that space will pick up. So previous allocations towards defense, towards power, towards pharma should continue. The incremental capital maybe we can deploy towards BFSI space to increase the exposure.
Okay, fair point. Now, when you say increase exposure to BFSI, this obviously comes from somewhere. Where are you asking investors to trim?
So, if somebody were sitting on cash, this is time to increase exposure. Your asset allocation should be tilted towards equity now, since many of the recent concerns are out of the way. If you have already deployed, maybe you can reduce exposure towards FMCG. Some of the capital goods or some heavy engineering stocks have run up a lot, and there maybe you can trim some exposure and allocate it towards banking and finance. So I'm a little bit cautious on FMCG and stocks where already run up quite a bit, many transformer stocks, where maybe you can a little bit trim and increase exposure towards these stocks which we mentioned.
Okay, fair point. That's a very sensible thing to talk about. Devarshi, a view on the rupee, how are you looking at it, this 2.8, 2.9% appreciation since May 20th, when we hit a record low of 96.96. Your earlier comments mentioned that you expect a fairly strong inflow on the FCNR deposits that the Reserve Bank of India has opened. What is your prognosis on the currency?
So our treasury and other experts who track the currency closely feel that the worst is over. we are going to stabilize here. Depending upon the response we get from various schemes, there is a possibility that it may appreciate towards 93.50, 94 also. And eventually by the end of the year, we will come back to this level. So one of the concerns which we had was depreciating currency leading to selling from FIs. I think that worry is over. Shailji, we had a weightage of 20% in MSCI emerging market India had. That 20% has become 12% or so. Such a 8 point or a 40% reduction in weight, I think that where we have bottomed out. And if currency behaves the way I am expecting, and if earning growths pick up, I think our relative weightage compared to Korea, Taiwan should also increase in MSCI, which leads to higher flows from passive investors into MSCI kind of indices, leading to foreign capital coming into equity also. We've recently seen good flows on the debt side. I think same should be replicated over the next few months in equity also.
Okay, fair point. So that's the view forward. And obviously, a stronger rupee might lead to lesser cost of capital within the economy, and therefore banks will flourish. That's possibly one of the cornerstones of the investment thesis that Mr. Vakil puts forward. Devarshi, are you still circumspect and cynical about IT? What are the chances that you might see a revival in the IT space? Yesterday, a mid-cap IT player, which has been a long-term wealth creator, purchased a fairly large company in Europe. Is this the way forward, or is it too late?
So for longer term, I think this is a good opportunity. Earlier we were underweight, and now our model portfolios has equal weight on IT. Some of these stocks like Persistence, which has done a very bold acquisition, and it is a strategic fit, are analyst who has studied this, the Persistence definitive agreement to acquire the Munich-based digital engineering company in deal. I think this kind of bold deals are required by IT companies to remain relevant in the AI phase. So these kind of companies give them the integration into AI platform, both on the solution side as well as the internal operation side, and that's strategic fit our analysts feel. So we are keeping an ad rating on companies like mid-cap company, IT companies like Persistent, around 4,200. It's a good entry point, and our price target, which our analyst has released yesterday, is around 5,500 over a year or so. So if you are underweight on IT, I think valuations are suggesting that worst seems to be over, and we should start allocating towards IT companies.
Fair point. What Devarshi did not find fancy with you in the quarter gone by, and what, according to your initial prognosis for Q1, is a sector which is going to remain disappointing?
So, as I mentioned, across the board, I think markets have bottomed out and we are headed higher. So some stocks may go up less, some may go up more, but I think overall we seems to be on a positive trajectory. Where we need to worry or we need to be a little cautious is the impact of monsoon on the demand, especially on the consumer side. We were seeing signs of normalization across segments, but now looking at the monsoon situation, it's going to be a swing, it will be going to be a swing factor for those sectors. So I'll be cautious there. I will wait for that to play out before allocating capital.
Okay. Fair point. In terms of large caps, Devarshi, where do you find value within the Nifty? For instance, the half year is over, and we have not only the first quarter not only the calendar we have the quarterly performance of Q4. Where is value residing apart from private sector banks?
So, private sector bank, as you mentioned, I've already mentioned, the stocks like large cap stocks, large weighted stocks like Reliance, Bharti, Larsen and Toubro. These are some of the heavyweights in the Nifty, which are looking attractive. There could be value unlocking in the form of new IPOs coming from Reliance stable. Their past investments can start showing some uh, cash flows in the FY27. Bharti's earlier market was worried about their African expansion. I think that is also a concern which is now behind, and we can see some growth there. Um, the hydrocarbon projects, which were very for companies like Larsen Toubro, the exposure towards Gulf, that is also behind us. So I'm expecting these large cap stocks to start attracting capital, especially from the large investors, FIs. And if that were to happen, we can expect growth in Nifty also.
Okay, fair point. My final question, Devarshi, is on this thesis that we seem to be following, at least for the coming quarter, that the unwinding of the bull trade in precious metals plus a weak oil is a very positive development for Dalal Street. Do you actually see rotational money moving into shares?
I think the geopolitical premium or the war premium in the energy side is over, and there we should see some unwinding, continue to see unwinding as more and more supply comes into the market. I think those prices will remain capped. The dollar strengthening on the back of that seems to be now over. So the precious metals or the emerging market, which were earlier shunned, should start seeing some kind of flow. So actually, not only on the equity side, I'm actually expecting that the gold and silver should also, the precious metals should also see the kind of end of selling there. Their selling should come to an end, and as the risk on starts, they should also start attracting some capital. The silver has seen almost 50% correction from the top. Gold has also come down to very attractive levels. So I am expecting allocation towards precious metal and equities, emerging market equities, away from dollar and earlier trades, which were AI driven trades. So I am expecting precious metal and Indian equities to perform from here on.
That's an interesting thought. So you feel this sell-off that we saw in silver has now run its course?
Seems to be. You cannot be 100% sure in these, and technical factors do play a role, but the sell-off on the back of strengthening of the dollar seems to be in the last leg, and we should, if you are allocating towards precious metal, and we recommend that around 10% of your portfolio should be invested in the precious metals, this is as good as any time to start allocating towards silver and gold.
Okay, fair point. There is this absolute absence of Indian buying in the physical global market of gold and silver. Devarshi, isn't that something to be concerned about?
So as prices, the consumer behaves in a way that whenever prices are volatile, they withdraw from the market and let the price stabilize. I think now, in next few weeks, we will see that as the gold and silver prices stabilize, the demand should be back. And as we mentioned, once we have monsoon worries little bit lesser going into July and August, I think the physical demand should also start coming back to the market. So next 3 months should be a good bottoming out of the prices in precious metal, and we should see some physical demand coming back there also.
Okay, fair point. We'll pause it here, Devarshi, and it's always such a pleasure listening to you. We hope that the BFSI trade works out to your complete satisfaction, and that we interact more and more often in the second half of 2026. Let's hope it's good, and very, very beneficial to all investors. We've had a terrible time in the first 6 months. Let's hope the next 6 are far better. Thank you for your time, sir.
Yeah, pleasure to be on your show. Thank you for inviting me.
That, ladies and gentlemen, was Mr. Devarsh Vakil, Head of Prime Research at HDFC Securities. Please continue to watch us on BTTV. There's a lot that's happening in the markets.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special edition where we're going to be discussing about how India's retirement landscape is changing. For years, National Pension System subscribers had two broad choices after retirement. Take a lump sum money or buy an annuity or manage the withdrawals on their own. But now there is a third option available on the table. The Pension Fund Regulatory and Development Authority, the PFRDA, has introduced the Retirement Income Scheme, or RIS as they call it, which is a market-linked payout framework that aims to provide regular income while keeping the retirement corpus invested. Under RIS, investors can receive periodic payouts while their money continues to remain invested through an age-based glide path that gradually reduces the risk over time. The scheme also offers flexibility, but it also exposes the retirees to the market volatility and the risk of exhausting the corpus by the age of 84. This raises some crucial questions. Should retirees choose guaranteed annuities that offer fixed lifelong income? Should they opt for the new RIS that balances growth and income, or does a dynamic or systematic liquidity withdrawal strategy offer greater flexibility and control? At the same time, when longer life expectancy is raising healthcare costs and inflation is reshaping the retirement planning, choosing the right post-retirement income strategy has become more important than ever before. To discuss and to understand what works for whom and whether India's newest retirement option can truly solve the retirement income challenge, I'm now joined by our very special guest, Mrin Agarwal, a financial expert who is decoding this entire thing for us today. Warm welcome to you, Mrin. It's always a pleasure to be speaking with you, and especially on a topic that a lot of Indians are truly interested in understanding, how some of these new dynamic reforms are going to be shaping up the way they change or strategize their own understanding of how should they be treating their own retirement income. Give us an understanding of how are you looking at this fresh reform when it comes to RIS in NPS.
So good morning, Sakshi, and it's lovely to be here today. And I think it's good that there are more and more options there now, because as you mentioned that earlier on you would get your EPF corpus, and you still would get it right now, of course, but you had to manage that pretty much on your own, figure out whether to go for annuities. And most often what I have seen, Sakshi, is that people find it really difficult to figure out where to put their money so that they can meet their regular expenses. So firstly, on the RIS, the way it works is that you can put 80% of the corpus that you've got from the NPS, which is the lump sum amount. So remember that a few months back, the 60-40 became 80-20. So now at the time of maturity, you're allowed to withdraw 80%. That 80% can be invested into this regular income scheme. And there is a glide path in the sense that when you start the investment, then, you start with 35% into equity at the age of 60. At the age of 61, I'm sorry. And then that basically goes down to about 15% by the age of 70. And thereafter, it remains at 10% till the age of 84, right? So one is that the risk management is being taken care of to ensure that the corpus itself does not remain volatile due to the equity market movements. The other thing that is there is that there are two ways for the investor to take the money out. You can do a systematic unit redemption, or there is a systematic payout rate basically. Now in the unit redemption, what happens is that specific units are withdrawn. But of course, the monthly amount is going to fluctuate because of the NAV. So I think one of the main things that we need to remember out here is that unlike an FD where you're going to get a fixed amount, right? That's not going to be the case here, because there is going to be that 10 to 35%, which is there in equities. Now, in the systematic payout plan, there is a specific payout rate, and this is the maximum that can be paid out. It does not mean that if they're starting with 4% and going up to 100% by the age of 84, that is the maximum. It doesn't mean that that is the amount that you're going to get every year, right? So I think these are some of the things that one needs to keep in mind, some of the nuances, that this is a market link scheme. The payout rates that are mentioned are the maximum withdrawable rates, and the fact that the entire corpus is going to become zero at the age of 84.
Okay. Now, I want to understand, a lot of people would have this question, is RIS essentially a pension product, an investment product, or a combination of both? How would you really understand and read through the insights?
Well, I would say that it's a product that's going to help you get regular returns, and that's the way I would position it. See, the thing with pension is, and when you look at the annuity product that's there with NPS itself, the moment that you invest into the annuity, you're actually tying up that annuity rate for life, right? So I wouldn't want to call it as a pension product. Neither is it an investment product. I think it's a product that's basically trying to combine both the things to, one, get the corpus to grow over a long period of time, and at the same time give you some regular payouts.
Absolutely. Now let's try and understand, if you had to explain the difference between RIS, annuity, SLW, what is a systematic liquidity withdrawal? That is, how would you explain to our average viewers there?
Okay, so again, let's remember the 80-20, right? The 20% has to go into an annuity, whether you like it or not, right? And typically, that's for amounts above 12 lakh rupees. Of course, if your amount is below 8 lakhs, 100% can be withdrawn as a lump sum, right? So that's point number one. Now, from that 80%, you have various options, right? At the time of maturity, you can decide to withdraw this 80% and do whatever you want with that money, invest it the way that you want to. You can decide that this 80% I'll put in the regular income scheme, which we discussed. You can also decide that I'll leave the money invested over there, but I will withdraw it as and when I require it. And I can also set up like a regular withdrawal. So the SLW basically works like a withdrawal facility. The subscriber basically decides how much he or she wants to withdraw from this on a regular basis. And there is no built-in mechanism to maintain the long-term sustainability of the corpus, right? I mean, the person can continue holding the same investments, right? Decide to have the same asset mix and just say that I'll just remove this over a period of time as and when I have the requirement, right? So it's very, very dependent on the individual, what sort of an asset mix they want, what is the sort of withdrawal that they want from this, right? And that's where the huge difference is, because when you look at the RIS, everything is kind of predefined, that this is the glide path, this is the maximum withdrawal rate. I don't think that this subscriber has a choice out there to make any changes. But in SLW, there is complete flexibility. You decide how much you want to keep in stocks and bonds and how much you want to withdraw.
So who is it better for? Say, for instance, if, looking at all of this, we need to decide, okay, for a section of people watching this show, annuity is best suited. For a section of people, RIS is best suited. And for a section of people, SLW is best suited. How would you define those categories of people?
Okay, so one thing, if you look at the current annuity payouts, they're somewhere in the range of about 6.5%. And remember, the annuity gets locked in for life, right? And while the 20%, that's the minimum, you can always decide to say that I want to have more money getting into annuity, okay? Point number one. Second thing is, so I think annuity is really good for somebody who's very conservative, who wants an FD like fixed return for life, who doesn't want to take any any volatility, any variation in the amount and stuff like that. No
Risk
fluctuation.
appetite is low. Yeah.
Yeah. I think for them, annuity is a very, very good option. And I would actually say that for such conservative investors, look at actually increasing the annuity amount there, right? Don't just go with the 20%. Now, someone who wants to have complete flexibility. So this is your typical aggressive investor, who says, I will decide how
Welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Daily Calls, a show that answers your specific stock queries on the program. In case you're here for the first time, the WhatsApp number is on your screen. Send us your questions here along with your name, location and your contact details. We can get top market experts to guide you on your stock queries and of course help you understand what is the best way to approach your portfolio at this point in time. We'll also help you understand your queries in case you're with us on our YouTube channel Business Today. You need to go to the Daily Calls live section, go to comment section and then send me your questions. I'll be happy to pick up those queries for our top guests as well. But let me quickly look at how the markets are shaping up as we inching closer to the half-time trade today. We are holding up at 24,100 odd mark as far as the Nifty is concerned. It's a range-bound kind of a trade that's panned out in the first half of the trading session, largely led by the momentum in the IT stocks that have pulled up after last couple of days of momentum losing. Now you can see a 4.3% rally coming in on the IT stock. There's a considerable amount of move on the higher side and almost 1100 points of a gain on the IT index as a whole. That's the top mover as far as the indices are concerned today. The other sectors that are hovering higher are real estate, pharma, autos, oil and gas, even the financial names too. But the broader markets also have picked up some pace. Small caps are doing better than the mid caps at this point in time as well. Let's also pull up the top gainers as far as the markets are concerned for you on the Nifty. Of course, most of those gainers are from the IT pack. You can see Infosys, TCS, HCL Tech as among those winners, anywhere between 3.5% to 5.5% kind of gains coming in. Even Tech Mahindra, Wipro are rallying. Bajaj Finance is the other one that's moving up in the session today. So that's the momentum currently at. Let's actually welcome our guest on board now. Mr. Kranti Batini is with us, Director of Research at Wealth Mill Securities on the program. Welcome to you, Mr. Batini. Good to have you with us as always. Your sense, we've entered into the second half of the calendar year on an optimistic note. The markets are looking positive. We're holding up above 24,100, but we are soon going to be approaching the earnings season as well. What is it that you're keeping on your radar and how do you see the markets panning out from here?
Absolutely, Sakshi. We expect the markets to be resilient in the second half of the year, and also we're entering into the fresh earnings season. The odds which are not in favor of Indian markets are turning in favor at this point of time. The crude oil prices, which have been worrying the Indian economy and Indian markets, have turned today. We can see $70 per barrel. The crude, we had the global research agencies predicting crude oil prices to $150, $175. But despite of the consensus view, just a month back, we could able to see the crude is cooling off below the $70 per barrel, which is quite favorable for Indian market. And coming back, yesterday we witnessed the GDP data, the GST data, which is quite favorable. That shows the underlying strength in the Indian economy. So the monsoon is progressing slowly. We need to wait and watch how the July month for the monsoon is crucial. If the monsoon progresses well, so the underlying strength in the rural economy also going to pick up. We can see further momentum that's going to pick up in the market. So by and large, the odds which are not in favor for Indian markets are turning in favor at this point of time. So we are entering into the earnings season, as you rightly mentioned. Going ahead, the company guidance that's going to drive the market, geopolitical issues and all, they have been subsidized in the last few weeks and days. That can be a advantage for Indian market. But overall, the mood of the foreign portfolio investors have been quite neutral in Indian markets. Once we deliver in terms of the earnings are concerned in the next couple of weeks, that's where the foreign portfolio investors can turn positive on India. But right now, the domestic liquidity is quite strong. That has been driving the markets in the medium to short term. But overall, on a technical basis, the level we need to see going ahead is 24,500. That's where in the last 3-4 months time, market could not able to sustain. 24,000 level is a decent level that can turn the market sentiment to, from negative to positive in the medium to short term. But 24,500 is the level I'm looking forward. If the market could able to sustain those levels, we can see further momentum in the markets to rise, and the momentum can get strengthened further going ahead, Sakshi.
Okay, so I hope all our viewers have noted down an overview on the markets and what's to be done. Let's now start taking your questions then. Mr. Batini, we have the first question coming in on Samvardhan Motherson from the Auto Ancillary Pack. This is Mr. KD Pradhan writing in. He wants to invest afresh as far as Samvardhan Motherson is concerned for the next 6 months. We do see that the stock is slightly soft today at 147 odd levels, but what is the outlook looking like from here onwards? Even in the auto ancillary space, these stocks have been largely range bound, consolidating for some time now. But is there any kind of an upside that you do see over the next 6 months panning out for Samvardhan Motherson?
Actually, last 6 months, Samvardhan Motherson have rallied almost all from 100 rupees level. So on a medium to longer term basis, the stock has been quite resilient. Of course, we can see from here and there some kind of a pullback rallies. On a longer term perspective, one can hold on to the stock. The stock can rally from here also from 10 to 15%. It's a long term decent stock which have an exposure towards the entire global space of OEMs are concerned. So this is a stock to buy on dips and hold it for a time horizon of more than 1 year. The stock can deliver decent returns from this range also.
Okay, got that. I hope that this has also helped you out. Next, we have Arvind writing in. Says that this program is the best. Thank you so much, Arvind, for writing in warm words for daily calls. I hope that the guidance you are getting from top market experts like Mr. Batini is truly helping you out in your investment journey, getting the right set of stocks in your portfolio so that you can continue to create alpha in the markets. So you are talking about Gujarat Gas. At the current price, you want to buy this stock. If possible, please guide for latent view as well. Okay, so we'll try and understand two stocks. Then you're asking about Gujarat Gas and latent view. These are the two stocks that you want to invest afresh. Mr. Batini, first let's talk about Gujarat Gas. That has been on a declining spree in the last 6 months. The stock has been down about 20-25 odd %. What's the outlook looking like at this point in time? Should one look at Gujarat Gas? And the other one is latent view analytics. How would you look at that one too?
First, the latent view analytics, Sakshi. The stock had momentum when the stock got listed. From there onwards, the rally got frizzled out, and the stock has been an underperformer in the last 1 year and so. So, if the investor have a medium to long term view, the valuations looks very attractive for this company. One can add in a staggered manner latent view for a medium to longer term perspective. But coming back to Gujarat Gas, I tend to avoid at this point of time the stock is in a downtrend at this point of time. So let the global crude oil prices to get stabilized, and from there onwards, any fresh position I'll be building in Gujarat Gas post results and the management commentary. Till the time, I try to avoid the Gujarat Gas in a medium to short term perspective.
Okay, got that. Let's take the next query. This one is from Rishikesh. He says, hi Sakshi, thank you for this truly helpful show. Thank you so much, dear Rishikesh, for writing in. He wants to know about Paras Defense from you, Mr. Batini, now, and he wants to move his money from L&T to Paras Defense. Would it be a wise move at this stage? How would you advise?
Sakshi, the stock have witnessed a vertical rally. In fact, the stock has doubled in the last 6 months' time, and the last few weeks and all, the stock has been rising vertically. So, if the investor or a trader is looking for a momentum kind of a thing, then the stock is suitable. When any stock rallies such a vertical way, better to have a strict stop loss because he is trying to chase the momentum. But shifting from L&T to Paras Defense, okay, you need to understand his risk profile. One thing is L&T is a low beta stock and also a stable stock and a large cap stock. Whereas Paras, you can't do the apple to apple comparison between Paras because of the market cap and the valuations. L&T is a stable stock. Any decline in L&T is a warranted buy. Whereas Paras right now, it is in a momentum zone. So, so better to wait for some time, wait for the earnings commentary and the results, then he can accumulate in a staggered way. The stock has rallied vertically. So any stock that rallies vertically, better to be cautious in the medium to short term.
Okay, let's take the next query, and this one is from one of our viewers. This is Kamlesh Narkhere, who says, hi Sakshi, hello Kranti sir. Sir, अपार इंडस्ट्रीज़ के शेयर मैंने लिए हुए हैं, ऑलरेडी 6 शेयर्स हैं मेरे पास. मैं पूछना चाहता हूँ कि क्या गिरावट में इसमें और एवरेज करने के लिए सजेशन आपका होगा. लेट्स फर्स्ट पुल अप अपार इंडस्ट्रीज शेयर. द स्टॉक इज करंटली ट्रेडिंग एट 14,949, 2% हायर टुडे, और जो इनका बाइंग प्राइस है वो 12,700 का है. द गुड पार्ट इज दैट ही इज इन प्रॉफिट्स राइट नाउ. मिस्टर बतिनी, डू यू थिंक ऑन द वे अप he should continue to invest in APAR Industries?
Yes, actually one can invest. निवेशक जरूर अपार इंडस्ट्रीज को डिप्स में खरीदारी कर सकता है. एक अच्छा स्टॉक है, और हम लोग देखें तो पावर सेक्टर, पावर इक्विपमेंट सेक्टर अच्छा परफॉर्म कर रहा है. अपार इंडस्ट्री एक स्टॉक है पावर इक्विपमेंट में. लास्ट क्वार्टर का रिजल्ट देखे तो काफी अच्छा रिजल्ट्स आए हैं अपार इंडस्ट्री में. सो डिक्लाइंस में एक स्टैगर्ड मैनर में कभी भी एक शार्प डिक्लाइन आया तो अपार इंडस्ट्रीज को एक्यूमुलेट कर सकता है निवेशक.
ओके, गॉट दैट. चलिए, यहाँ पर भी आपको राय मिल चुकी है कि कैसे आपने आगे बढ़ना है इस शेयर पर. और नेक्स्ट क्वेरी की तरफ बढ़ते हैं. क्वेरी है साई शर्मा की. ये आपसे 2 स्टॉक्स के बीच में चुनाव करने के लिए पूछ रहे हैं. ही वांट्स टू नो विच स्टॉक इज बेटर बिटवीन बोथ ऑफ देम. वन इज यूनिमेक एरोस्पेस and the other one is Premier Explosives. Now he has a 6 months time frame where he wants to invest in either of these 2 stocks. What would you advise between Unimec? Today the stock is up 3%, and the other one is Premier Explosives.
एक चीज निवेशक ध्यान पे रखना साक्षी जी. पहला है 6 महीने इज नॉट फॉर इन्वेस्टिंग है, ये जरूर ट्रेडिंग के लिए है. सो अगर निवेशक 6 महीने के लिए, जैसा यूनिमेक एरोस्पेस में बहुत सारा ज्यादा मोमेंटम है, बट लेकिन एक चीज ध्यान पे रखना है, स्टॉक हम लोग देखे तो पिछले 3-4 महीने में 700 लेवल से यूनिमेक आज 1200 लेवल टच होके अभी 1180 लेवल्स पे अभी फिलहाल स्टॉक कंसोलिडेट हो रहे हैं जी. सो 6 मंथ्स में अगर निवेशक ट्रेड करना बोले तो एक स्ट्रिक्ट स्टॉप लॉस कम से कम 1000 लेवल्स पे एक स्टॉप लॉस लगा के, 1000 लेवल है 200 डेज का मूविंग एवरेज है. सो इसलिए 1000 रेंज में स्ट्रिक्ट स्टॉप लॉस लगा के निवेशक डिप्स में ऐड कर सकता है. 1000 लेवल में एक ट्रेलिंग स्टॉप लॉस लगाए तो अच्छा है. प्रीमियर एक्सप्लोसिव्स में हम लोग देखें तो थोड़ा सा मोमेंटम रहता है साक्षी जी. सो अगेन हम लोग हमेशा प्रीमियर एक्सप्लोजिव्स में हायर टॉप्स हायर बॉटम्स देखेंगे प्रीमियर एक्सप्लोजिव्स में. सो अगर 6 महीने का इन्वेस्ट करना बोले तो डिप्स में खरीदारी कर सकते हैं प्रीमियर एक्सप्लोजिव्स में.
ठीक है, तो चलिए यहाँ पर भी आपको राय मिल गई है कि कैसे आपने आगे बढ़ना है. नेक्स्ट वील टेक अनदर क्वेरी एंड दिस वन इज फ्रॉम one of our viewers who's Raghu and who wants to know about again a stock about defense space, BEL, Bharat Electronics. He says, I bought it at 443, the stock is just not moving. What should be done?
Sakshi is an interesting question, but the investor should know, okay, how the stock has moved in the last 3 years. Okay, the stock has multiplied and the market cap of the stock is about 3 lakhs crores. So 3 lakhs crores है. अगर इधर ये लेवल से अगर स्टॉक डबल होना बोले तो और एक 3 लाख करोड़ का मार्केट कैप ऐड करना है. एक लार्ज कैप स्टॉक है और निवेशक ने द इन्वेस्टर हैव एंटर्ड एट ए peak of the price. So that is the reason the stock is taking some kind of a consolidation. From here onwards, the stock can deliver. It's a decent, very good company, strong order book, defense order book. May BEL is having order book more than around somewhere around 1 lakh crores of order book right now. It's reaching. From here also, BEL can be a consistent compounder, Sakshi. So one can buy BEL at dips.
One can buy BEL on dips. Okay, that's the advice coming in. Let's take the next query, and this one is from Vinita Gupta, who says, good afternoon, Sakshi. I want to know from Kranti sir, should I now start to book my profit in Adani Energy Solutions? Or would you also advise to continue to add at the current market price, and what targets can advise me on the same? Adani Group stocks have been in momentum for the last couple of months now. There are some positive news flows going in and supporting the sentiments around it. When we talk specifically about Adani Energy Solutions, the stock is already up 57% in the last 3 months. Now the question that our viewer is asking is this the time to book profits? Or should one stay put and probably add more to the kitty at the current levels?
Actually, one thing is the stock have witnessed a strong resilience. And in fact, the stock last 1 year, okay, it's almost all given a 80 to 90% kind of a returns the stock has given. Last quarter results have been quite strong for Adani Energy Solutions is concerned. Earlier, the stock used to be called by name of Adani Transmission. The company is into the right sector at this point of time because of the data center and the power demand. The company has been, the power transmission companies have been doing very well, including the power equipment companies. So if the investor have high risk appetite, one can hold on to the stock. She can probably keep the trailing stop loss around somewhere around 1450 if she want to hold the stock, keep a trailing stop loss because of the high beta nature of the stocks are concerned. Otherwise, one can hold on for a medium to short term perspective.
Okay, fair point. I hope that this has helped you out as well. We'll take another query. This one is from again one of our viewers who's joining in on our YouTube, Swati Jain. She says, hi Sakshi, hi Kranti sir, I want to know from you on Aadhar Housing Finance. I want to know just short-term view on this one. Should I look at this stock from a trading point of view, and what targets can you advise?
The same other housing finance also, Sakshi. The stock has witnessed a very sharp vertical rally. Right now, it is at the 52-week high. So it needs a trailing stop loss somewhere around she can keep around the current price of 500 rupees. That's where she can keep the trailing stop loss. The stock has been rising up vertically. Most probably, just see the results, how the results are going to be. The last quarter has been a very good quarter for Aadhar Housing Finance. So wait for the results. If the earning commentary is quite strong, one can carry on to the position. Because since the investor is is having a trading position, have a strict trailing stop loss somewhere around 520. That's the area to look forward.
Okay. Let's take the next one then. This one is from Anuj Singh. He says, good afternoon ma'am, good afternoon Kranti sir. Innova CapTab का शेयर 755 के रेट पर मैंने लिया है, 500 शेयर्स है मेरे पास. इसका नेक्स्ट 1 ईयर का टारगेट क्या हो सकता है? Let's quickly pull out the stock on our screens as well. Innova CapTab and try and understand what is the current outlook here. The stock is at 972, flat with a negative bias today. In the last 1 month, the stock has moved up about 13%. Last 6 months, it's gone up about 34% odd as well. And when we look at the last 1 year, it gave up much of the gains till January of 2026, then pulled up. From January 2026 lows of 652, the stock has moved up to 971. So last 6 months have panned out to be a strong period for Innova CapTab. Let's try and understand what's the outlook here. Next 1 year, do you see the momentum continuing, Mr. Batini?
Actually, the stock have witnessed the similar way. The stock have witnessed a strong rebound in terms of the price momentum is concerned. If the investor want to hold the stock, he can hold on to the stock. But 900 is the level I will be looking forward. That is a crucial support for this zone. If the stock can hold on to this range, we can expect some more further momentum in the stock. But 900 is the level. One need to look forward in the medium to short term.
Okay, let's take the next query. This one is again from one of our viewers then on our WhatsApp number. We have Devanshu Prabhu. He's from Mumbai. He says, I'm a regular viewer of Business Today. Thank you so much, Devanshu, for watching our shows daily and regularly and taking all the benefit from all the insights you're getting from top market masters. You say that you have bought Lloyd's Engineering at 89 and you want to know, should you hold this share or exit it? What exactly should be the advice both for short term and long term is an advice that you are seeking? We'll try and help you with Kranti sir's overall outlook both for the short term and long term on Lloyd's Engineering.
With the recent acquisition of Lloyd's Engineering, actually the stock is positioned very well. For a medium to longer term perspective, one can hold on to Lloyd's Engineering at this point of time. In fact, if the investor have a medium to long term view, one can accumulate the stock on dips.
Okay, and let's take another one then. This one is from Bhaskar from Hyderabad. He's holding Suzlon shares, 840 Suzlon shares, average price of 58. From last 1 year, he's been holding on to this stock and now he wants to know what is the outlook. I think the stock is hovering around the same level right now. If you've been holding since 1 year, you're probably at exactly the same level where you must have entered last year. Let's try and understand what is the outlook from here. Of course, the stock cooled off quite a bit, Mr. Batini, from its highs. There was a vertical rally. It used to be a single-digit stock. For a long time, it tested the patience of investors. Almost people pulled out money thinking that this is only going to destroy complete wealth. So many people exited in losses and then there was a reversal. And the reversal that nobody imagined with the kind of rally that we had seen. From single digits, 4, 5 odd levels, the stock went up substantially over 80 odd levels as well. The stock then cooled off, fell by about 50 odd % from those peaks and stayed put for a long time there as well. Even in the last 1 year, when we see the stock is down by about 10 odd %. Stock has recovered a tad bit starting last couple of months again. Your suggestion on Suzlon, where do you see the stock moving in the next 1 year?
Sakshi, yeah, you summarized very well. And he also need to look what is the IPO price of Switzerland, so you will understand the 360-degree view of what happened in Switzerland rather than buying at these levels. So, in fact, those people who bought at the lower end of the price, they got rewarded. But the entire thing, whatever we discuss, it will be boiled down to the earnings of the company. So the last quarter results have been good for Switzerland, but the debt is one of the key things, and also the importance of the alternative energy that gives some positivity for Switzerland. If the investor is a medium to long-term investor, he can hold on to the stock. The stock can deliver from this range also. decent set of numbers. But whether this stock become a multi-bagger or not, because most people, how they perceive this stock is, since this stock has rallied from 5 rupees to 50 rupees and it reached the range of 68 rupees, the same kind of performance it can get repeated or not. That is a difficult one to answer, Sakshi. But from this range also, Switzerland can deliver a mid-teen kind of a returns. One can buy the stock at dips because the sector is turned positive at this point of time. So wait for the next quarterly results and management commentary that's going to drive the stock from here onwards.
Okay, Manoj Gupta from Delhi also has a question on Suzlon. So I hope, Manoj, you will take this in-depth answer that you've got from Mr. Batini. So we are not taking your question today because you also bought it around the same level of 56 and you would have also the same kind of an outlook of 6 months to a year. Let's look at the next query then. This one is from Mohit from Ludhiana. He says, I have 1500 shares of NMDC. I bought it at 19.4. Shall I keep this as a portfolio stock for the long term? I can hold even for 5 years, but would you advise that in my portfolio? What would you guide him? The stock is at 85.
Sakshi, on a longer term basis, the demand for iron ore is going to expected to rise up. If the investor is a long term investor, one can hold on to NMDC and buy on dips because the global crude, iron ore prices are concerned. They have been in a consolidation phase. That's where we can see names like NMDC, they are consolidating in the medium to short term. But for a longer term perspective, because of the management quality and also the valuations of NMDC is concerned, one can hold on to NMDC.
Okay. Let's take the next query. This one is from Jayashree from Coimbatore. He says, Jayashree says, I want to know about Vedanta Iron and Steel, both for short and for long term. What is the advice? Of course, a demerged stock after the company is split into 6 entities now that are listed. Your suggestion, Mr. Batini, on Vedanta Iron and Steel?
So actually, we are witnessing strong momentum and speculation in these counters, especially. Too much money is chasing these counters. So I'll wait for the results, how it's going to be. On a longer term perspective, these companies will deliver well in terms of their performance is concerned. But one thing, the quarterly earnings are extremely crucial. And to make any kind of a serious investments in these companies, I'll wait for a couple of quarters earnings post listing. That's where I'll be building up, I'll advocate or guide the investors to build any kind of a serious investments are concerned. Right now, some kind of a momentum trade-off is going on these companies, most of these companies which got demerged from Vedanta.
Okay, let's take the next query then. This one is again from one of our viewers. There's Sudhir Lakhar from Aurangabad in Maharashtra. He says, I want to ask whether this is the right time to invest in Punjab and Sindh Bank. I'm thinking of buying it, but I'm not sure whether it will be a good decision at the current market price. Will PSB be a good investment for long term, or should I only invest it in it for the short term? I would appreciate your guidance, Kranti sir. All right, Punjab and Sindh Bank today, I think it's up by 1.5%. The stock has also shared its business update for Q1 as well. Which has revealed, strong across the board parameters, kind of numbers that could come in the upcoming earnings. Should one look at the stock right now?
Actually, if the investor, all these PSU banks, they had a fabulous rally 2 years back. And from there onwards, we are witnessing a long consolidation in PSU stocks. By and large, the small PSU stocks are concerned. The market has been waiting for a rally and public sector undertakings, including the public sector banks. In the last 1 year, these majority of these banks, universe has been in a consolidation phase. If the investor is a long-term investor, definitely he can add Punjab and Sindh Bank. We can expect some rally in these stocks, but only for a perspective of a medium to longer term perspective, not for the short term at this point of time, Sakshi.
Okay, fair point. Let's also take another query. This one is from Sai from Hyderabad. He says, "Hi Sakshi, I want to know about HFCL. I have this stock in my portfolio at 185. I bought it. I want to know, should I sell or still hold on? I can still be invested for the next 6 months." We do know how HFCL has had a run up, substantial rally, especially with the kind of news flows that were attracting the attention here. The stock in the last 6 months has been a multi-bagger. It's given over 2x returns to investors. 100% of a rally has been seen. Your suggestion on HFCL now for people who got a late entry, somewhere at 185 is where our viewer has got an entry. Should one hold on or should one take whatever little profit they have?
Actually, one thing is these are all high beta stocks, and we witnessed if you see the long term trend of these stocks, they will make higher tops, and from there onwards, we witnessed some kind of a consolidations earlier also. But right now, the company commentary has been good. There is a positive sentiment on the stock, and momentum is in favor of these companies. So I guide the investor to have a trailing stop loss somewhere around 180. That's where he can keep and remaining he stay invested in this company because the company has been chasing on the momentum. With respect to the current valuations are concerned, it is fully priced in stock at this point of time, but the momentum has been riding the rally in this stock. So he can hold on to the stock and until unless if we have that high risk appetite. If we don't have the high risk appetite, sell on rallies.
All right, Mr. Vatini, thank you so much for being with us on the program and of course for highlighting all these questions and answering that for our viewers. Thank you so much. Appreciate your time, sir, on the show. Let's get into the second segment now, viewers. We also have another favorite joining in, and now we have Ruchit Jain joining in on the program to answer all your queries. First up, Ruchit, good afternoon. Your take on the markets. July's kick started well. Will it carry on, or will there be another time testing this 24,100 mark and the same range where always we have seen the selling pressure in the last couple of months? This time around, do you think we'll be able to break that range and move forward?
Yeah, hi, very good afternoon, Sakshi. Well, Sakshi, last couple of weeks, we have seen a consolidation phase in the markets where Nifty has traded within the range of 23,800, 750 as a support and 24,200, 250 being a resistance zone. But if I look at some of the historical data, then July has always been a month where we get a trended phase in the markets. Now, the good thing is that if you look at last 10 years of data of July month and seasonality, then out of last 10 years, there have been 8 years where the markets have ended on a positive note. So, 8 out of 10, 80% of the time, July ends on a positive note. And if we look at this data for Nifty 500, then it is not that it's just half a percent, 1% positive. It's not that thing. But July have always been a phase where we get trended phases, a month where we get trended phases. So the average gains for Nifty 500 over last Nifty 500 index over last 10 years has been about 3.5% on the index front. There have been occasions where we have seen 6 to 7% rallies in 1 month itself in the month of July. So looking at this historical data, where July usually becomes a trended month, and we have already gone through a consolidation phase over last 2 weeks. In this entire consolidation, we have not even breached 20-day EMA on the Nifty. So, looking at all this, we expect the trended up move to resume in the month of July, and probably we should see a breakout above this hurdle of 24,200, 250 and head higher towards 24,500. So, we are advising our traders to look for stock-specific buying opportunities for the month of July, rather than chasing after the breakout where you would miss out some of the rally. These are good times in the consolidation where you should go long over here. You have a stop loss of 23,800, which is the 20-day mark. Till that is intact, trade with a positive bias for the month of July.
Okay, got that. I hope that this has helped you. Let's now start taking some questions with you also, Ruchit. We have a lot of our viewers writing in. Srikanth from Bengaluru has the first question for you. He says, good afternoon to you. Hindustan Copper is something that I bought at 135. I want to know, should I book my profit or continue to accumulate even at these levels? Hindustan Copper.
So I won't recommend to accumulate more. But on current positions, you can keep a stop loss below 460. Since your buying price is much low, I think it's affordable to keep that 20-30% lower stop loss from current level. So I'll give you the reasons for not buying. Firstly, the metal space usually does well when the dollar index is in a bear market or in a bear trend. So off late, we have seen a pullback move in the dollar index from the lower levels. And that's why we have seen that there has been correction in the metal stocks as well as in the base metals from the highs. So metals are usually trending when the dollar index is going down. So now the dollar index is not going down. So I think no, we won't see that kind of outperformance coming in from the metals. Now, on the charts, Hind Copper has already seen a correction from the highs, and the 200 EMA for the stock is around 470. So, this 200 EMA usually seen as a long-term support for the stock. So, since either he should have exited at highs, maybe around 600 levels where there was a good time, or if you have waited so much and since your buying price is at much lower levels, you should take that risk of 20-30 rupees more. So, keep stop loss below 460 on your existing long positions, but don't add more.
Okay, next we have Sahil asking you Godrej Properties क्या अभी fresh buy कर सकते हैं, 1 year का क्या view होगा और target क्या expect कर सकते हैं Godrej Properties में?
So real estate can do well in short to medium term. Last couple of trading sessions में ही हमने realty stocks में एक अच्छा move आते हुए देखा है. So Godrej Properties also price wise up move can be expected towards 2150 to 2200. So I think as a sector it can do well. Within the stock specific moves, if you look at stocks, then Godrej Properties के भी charts अच्छे हैं. Apart from then, stocks like Prestige Estate, DLF, these are stocks where overall structure remains positive. So Prestige, I think relative outperformance is. So if you have to choose anyone, then Prestige can give better returns, but even Godrej Properties is positive.
Okay, got that. You've also got a choice where you can actually expect better returns because of the technicals being more positive there. But yes, this is also a stock where you can continue to stay put. Arjun from Mysore writes in, he says, is it good time to buy Infosys now? Good timely question you are asking, Arjun, because yes, the stock is down by 50% from its all-time peak levels. We have seen a smart rebound in the IT stocks today. It's up by over 4% or last couple of sessions. We'd seen immense weakness. In fact, in the last 1.5 years, we've seen the IT index now, sharply lower and underperforming the markets as a whole. Infosys is now up 5.5%, currently trading at 1040 odd levels. Ruchit, are you taking any contra bets at this point in time? Are you looking at Infosys as just the right time to buy and play that catch-up move? Maybe, even if it will take time?
See, bottoms are not caught at the bottom. Actually, though, you come to know that the stock has bottomed out only after you see some kind of rally with good volumes or the change in the trend. So I think those who are looking to catch the bottom within the IT space, maybe post the results only would come to know, because generally every quarterly results sets the trend for the IT stocks for next 3 months. So that will be important to watch out for. And not only the numbers, but how the stock reacts to those numbers, because the stocks have already seen a good correction, as you said, in last few months. So I would suggest if you want to do some contra trades in stock like Infosys, you can take fresh long positions, but not the entire 100% that you want to take. 25 to 30% I think should be enough over here if you want to take counter trades. And once the numbers come out, the quarterly numbers would come out after some days, and see how the stock reacts to that. And based on that, you can take the further calls. But 25 to 30% only I would suggest not to buy at current levels.
Okay. Let's take the next question, and this one again is from our viewers who are joining on our YouTube also. A lot of them are joining in fresh. We'll take this question now coming in from one of our viewers. In fact, we have Ankur Modi's question next, who says, sir, could you please advise me some stocks that have fallen quite a lot, but where there is an opportunity to accumulate now for wealth creation? That's Ankur Modi's question for you, Rujit. So probably he's asking your own top choice of stocks that you could advise where one can play for wealth creation from these levels.
So Ankur, there are certain stocks which looks good. Realty, I think, as a space, if you're looking for stocks where there has already been a good correction and a turning up, then you can look for stocks from the realty space where we would see some good move. I've already spoken about the picks like picks which kind of like Prestige Estate, which can do well going ahead. I think pharma, mid-cap pharma also you can look at where overall structure seems to be quite positive. Of course, these are not the space where we have seen stocks are turning from the bottom, but there may be a continuation of the uptrend. Stocks like Granules India is looking good over here, where if you're looking from a mid to long term perspective, then it can do well. Certain new age technology stocks have started showing good signs. Stocks like Delivery, where we have seen a volume based breakout in yesterday after a long period of time. So these are certain names which you can look to buy. But on the thesis, I think no, rather than looking at stocks which have corrected and have been underperforming, look for stocks which are showing strength in such markets and are showing relative outperformance that can really create that alpha over the market returns.
Okay, got that. Let's take the next query now. This one is from one of our viewers. And Sumedh writes in, he says, good afternoon, Sakshi and Ruchit sir and the entire Business Today television team. Your daily call show has been extremely helpful for me and given me a lot of clarity for the stock markets and for investing. So thank you so much for this informative and valuable show. Thank you, Sumedh, for writing in such warm words. And of course, we hope that you continue to be at it as far as your investment journey is concerned and keep taking the best insights possible from these market experts who we get you on the show as well. You have a question on now Vedanta Power. Let's try and understand that from Ruchit. Ruchit, he's asked any fresh investment that you can advise on Vedanta Power. Is it the right time to enter the stock? We do know that you do not have the charts there because these are freshly demerged stocks from Vedanta Group as a whole. The stock today is up by 4%. Any advice here?
No, Sakshi, unfortunately, as you know that there are limited data on the chart, so I won't be able to advise on this. But some fundamental analyst, you can ask them; they would give a better guidance.
Okay, let's take the next query then. This one is from one of our other viewers who's joining in. Okay, this is a question from Arjun on DMart. He wants to know whether for short-term DMart will be a good buy.
No, I would avoid because the stock has already been seeing a consolidation phase and is not participating along with the price up move. So it's broadly trading within the range of 4,000 to 4,000, 4,400, 4,450. So if you get any dip towards 4,000, 39.50 mark, then you can take a review for any contra trades, but not at current levels.
Okay. Let's take the next question. Parth Mehta has the next query for you and he says, I want to know about GE Shipping, Great Eastern Shipping Company for next 6 months time frame. How would you view this stock? Is there any kind of an opportunity here?
So it is going through some consolidation phase after already an up move that we had seen from levels of 900 to 1700. Now major support for the stock is around 1350 to 1300 range. So you can keep a bound dip approach. If the stock comes within that range of 1350 to 1300, then the risk reward ratio would be favorable to take counter trades there.
Okay, got that. Let's take the next question. This one is from Imran. He says, good afternoon, everyone. I'm from Kolkata. I want to know, an entry into IRM Energy and a view of 6 months that I want to know from Ruchit sir. Let's take this question. IRM Energy is currently trading about 2.5% higher at 275. The last 1 month momentum has been pretty sideways. Last 6 months too, there's not been too much of a move there. Your suggestion on IRM Energy at all?
In the month of April, we witnessed a very sharp up move from 170 to the stock rallied up to 370. Then has seen some retracement from there. So I think 240 now has become the higher bottom or a support base for the stock. So if you have a 6 month perspective, you can go long and buy over here. But keep a stop loss below, 240 is the support base. So keep a stop loss below 240 and expect initial target somewhere around 360, 365.
Okay, I hope that this has helped you. Next, we have a query coming in from one of our viewers, again on our YouTube. This one is... Right, a question from Mamaraj Sen. He wants to know about IPOs particularly. रुचित ही सेज दैट जितने भी IPOs आते हैं अक्सर हमें अलॉट नहीं होते हैं तो इसमें क्या करना चाहिए यू आर राइट Mamaraj, if you've been looking at investing in IPOs, it has become very difficult to get the allocation because it's sort of a lucky draw and now there are so many applications that are coming in. The liquidity is fairly large and it's very difficult to get some IPOs getting allotted. What do you advise, Ruchit, when people come to you with this question of IPOs नहीं मिलते हैं, क्या करना चाहिए?
So there is no such way, frankly, to get higher chance of allocation in IPO like this. So I think it just, as you said, it's a game of luck, that if you are lucky enough, then you will get allocation to good IPOs. So I would say one thing you can keep your expectations low. Right? Generally, every good IPO that people subscribe, they expect that they would be lucky enough to get allocation in that. So just uh, keep subscribing to all the good IPOs that come. Avoid the expensive or bad IPOs. So you have to just to identify which are good IPOs where there is a margin of there is a margin where there could be a good listing and run up after that. So just keep subscribing to good IPOs. If your luck moves in favor, then you would get allocation to some of the IPOs.
ओके, नेक्स्ट क्वेश्चन है हमारे पास। एक और दर्शक का नाम इन्होंने नहीं लिखा है, लेकिन पूछना चाहते हैं डेंटा वाटर में कि सर क्या यहाँ पर एक ब्रेकआउट हुआ है और क्या करना चाहिए इस शेयर में। लास्ट 1 मंथ में तो इस स्टॉक में ऑलरेडी 35% तक की रैली देखने को मिली है, 330 पर अभी चल रहा है। कैसे देखते हैं आप डेंटा वाटर एंड इंफ्रा सॉल्यूशंस के शेयर को?
तो रिसेंटली स्टॉक ने अपने 200 डीएमए का ब्रेकआउट दिया है जो 300 के आसपास था। तो अब 300 जो रेजिस्टेंस था वो अभी सपोर्ट बन जाना चाहिए स्टॉक को। सो स्टॉक में पोटेंशियल तो है ऊपर 360 380 की रेंज तक जाने जैसा। So आपके पास पोजिशन है तो होल्ड कर सकते हैं जब तक 300 के लेवल इंटैक्ट है। नियर टर्म ट्रेंड स्टॉक का पॉजिटिव है।
ठीक है। रोहित जैन है, लिखते हैं बर्जर पेंट्स पर आपका क्या व्यू है? रुचित सर 555 पर मैंने खरीदा है, अब तो क्रूड ऑयल प्राइसेस भी नीचे आ रहे हैं, तो कैसे देखते हैं आप इस शेयर को?
कंसोलिडेशन है। आई थिंक अगर नंबर्स के बाद ही स्टॉक में कोई मोमेंट आएगा। सो यस, क्रूड ऑयल प्राइसेस नीचे गए हैं बट सारे के सारे स्टॉक्स उसके ऊपर रिएक्ट नहीं कर रहे। जैसे आप ओएमसीज देख लें, आई थिंक वन ऑफ द बिगेस्ट बेनिफिशियरीज ओएमसीज रहते हैं, बट फिर भी ओएमसीज में वैसा मोमेंटम फिलहाल नहीं आ पा रहा है। सिमिलरली पेंट स्टॉक्स में भी इतने बड़े मूव्स क्रूड ऑयल के नीचे जाने से नहीं हुए। जैसे हमने पॉजिटिव इम्पैक्ट कहीं पे देखा है तो यू कैन सी दैट इंडिगो जैसे स्टॉक में एक अच्छा पॉजिटिव इम्पैक्ट पिछले कुछ दिनों में देखा है। अब रिएक्शंस टायर स्टॉक से भी आ रहे हैं जहाँ पे हमने एक अच्छे मोमेंटम वहाँ पे भी देख रहे हैं। सो आई थिंक हर एक इंडस्ट्री जो इम्पैक्ट रहती है वहाँ पे हम पॉजिटिविटी फिलहाल नहीं देख रहे। तो फिलहाल बर्जर पेंट्स भी वैसे ही है, कुछ इतना पॉजिटिविटी हम फिलहाल तो नहीं देख रहे, बट स्टॉक एक रेंज में है। 490 485 एक सपोर्ट जोन है, 560 रेजिस्टेंस जोन है। ट्रेंड नेगेटिव नहीं है बट साइडवेज है।
ओके, लेट्स टेक लक्ष्मी कुमार क्वेश्चन नेक्स्ट। ये पूछना चाहते हैं तालब्रोस ऑटो के बारे में, कैसा लगता है आपको ये शेयर? क्या इसमें कोई एडवाइस है फ्रेश एंट्री की?
पोजीशंस है तो होल्ड कर सकते हैं। ट्रेंड तो स्टॉक में पॉजिटिव है। ओनली प्रॉब्लम है कि पिछले कुछ समय में ऑलरेडी चल गया है, बिकॉज 250 से लेके लास्ट 3 महीने में 450 तक का मूव ऑलरेडी आ गया है। सो मोमेंटम रीडिंग थोड़े ओवरबॉट जोन में है। फ्रेश बाइंग इनकेस नियर फ्यूचर में कुछ डिप आता है, जैसे 20 डेमा के आसपास जो अभी 370 380 की रेंज में है, तो आपको वहाँ पे स्टॉप लॉसेस रीजनेबल मिलेंगे। ये लेवल पे बाय करके स्टॉप लॉसेस काफी दूर आएंगे। अगर है आपके पास पोजिशंस तो कीप होल्डिंग, एंड फ्रेश बाय करना चाहते तो बाय ऑन डिप्स की स्ट्रेटेजी रखें।
ठीक है, उम्मीद करते हैं ये सवाल भी आपको एड्रेस कर दिया गया है और आप इसे राय को फॉलो करेंगे डेफिनेटली। नेक्स्ट क्वेश्चन लेते हैं और ये सवाल हमारे पास आया है सत्यान का। RHI मैग्नेसिटा होल्ड कर रहे हैं कुछ समय से 520 पर। आज ये शेयर 10% ऊपर है, तो अब आपसे जानना चाहते हैं कि कैसे इस शेयर को देखें। क्या अभी इस राइस को यूज़ करके लॉसेस को बुक कर लें या फिर अभी भी बने रहने में फ़ायदा हो सकता है? RHI मैग्नेसिटा 416 पर है, इनकी खरीद 500 से भी ऊपर की है।
वैसे तो स्टॉक एक बड़ा अंडर परफॉर्मर रहा है, बट आज और कल 2 दिन में जो वॉल्यूम्स हुए स्टॉक में वो डेली एवरेज के कंपेरेटिवली काफी अच्छे वॉल्यूम्स हुए। सो आई थिंक फिलहाल थोड़ा अगर इतना रिस्क लिया है, इतनी देर वेट किया है, तो और थोड़ा समय रुके। स्टॉक में पुलबैक मूव में 480 के आसपास रेजिस्टेंस है, 480 490 के आसपास। तो वहां पे अगर आता है तो फिर वहां पे रिव्यू करे वेदर आपको निकलना चाहिए, बट करंट लेवल्स पे आई थिंक होल्ड करना चाहिए।
Okay, got that. I hope that there is an understanding that you would have taken from this too. We'll take another question, the last one on the show, and this one is from one of our viewers again on our WhatsApp, and the question is on Ravi Kalra from Delhi asked on Himadri Specialty Chemicals. 1200 शेयर्स हैं 645 के, अगले 6 मंथ्स के लिए और होल्ड कर सकते हैं, क्या करना चाहिए?
फिलहाल होल्ड करें। ओवरऑल खराब नहीं है स्टॉक का। लास्ट कुछ दिनों में थोड़ा डिप जरूर आया है, बट मेजर सपोर्ट स्टॉक में 618 के आसपास है। एंड नो मे बी ये नंबर्स जब क्वार्टरली नंबर्स आएंगे वो इंपॉर्टेंट रहेगा देखना. अगर अच्छे नंबर्स रहे तो स्टॉक फिर से अपना अप ट्रेंड फिर रिज्यूम कर सकते हैं. तब तक थोड़ा ट्रेंड साइडवेज रह सकता है. बट 118 ध्यान रखिएगा, ये इंपॉर्टेंट सपोर्ट है स्टॉक के लिए. तो उसके थोड़ा नीचे स्टॉप लॉस लगा के अपने पोजीशंस में बने रहे.
Okay, got that. Let me also thank you now then, Rujit, for being with us on the program and for guiding all our viewers there on the program with their queries. Always a pleasure to have you with us, and let's see whether we can build on to the gains that we have so far clocked in on the markets. We're at 24,127 viewers, and we'll now look to wrap up the daily calls edition here. But stay tuned, there's a lot more coming up on your screens beyond this. We are in a range, but holding up about 0.5% strong. Let's see how the second half, especially the last 2.5 hours of trade, really pan out. Thank you so much for watching.
A warm welcome, ladies and gentlemen, on Business Today Television. We are in the process of starting the 7th month of calendar 2026 in style. We have strength which is coming back into the market above 24,000, and of course there is a very, very sharp rally which is in the underlying markets, whether it's small caps, whether it's mid caps, all based on very strong growth projections that we've seen coming out of the fourth quarter, and we are at the doorstep of the first quarter earnings. What should your portfolio outlook be for the remaining of 2026 as also for the time ahead? To discuss this and a lot more, we are joined by Mr. Ravi Dharamsi, the founder and CIO of Value Quest Advisors. Mr. Dharamsi is a very, very well-known stock picker in the market. His command over the Lal Street, both on the micro stock picking as well as macro broader markets, is phenomenal. And he's spent now almost 3 decades trying to find both value and growth at Value Quest. He manages somewhere like 25,000 crore rupees in PMS products, AIF products and private equity. Namaste Ravi Bhai, what a pleasure to welcome you after many, many months. How are you reading sentiment at this point of time on the Lal Street?
Thank you for having me. The pleasure is all mine. And yeah, so I think you summarized it quite well. If you look at the headline indices, and if you look at the headline news in the newspapers, you would think that India must be in a bear market because our indices have not gone anywhere for 2 years. We were suffering from the effects of the Middle Eastern war. Crude had spiked. FIIs have been selling. And those are the kind of debates that have been raging generally in the media. But what this is masking is that there is a very strong undercurrent in the broader market, and those people, those who are not focusing on these, are actually missing out. And this has started sometime in the month of around March, where actually the uncertainty was at its peak. Now I have a broader view in what is happening in the world. So what has happened is since 1990s, or since the start of the China's rise, you can say that world has been essentially focusing on optimizing. They have been optimizing for cost, for efficiency, for just making things more and more profitable, focusing more on financial engineering. Essentially, the globalization was at play. Now, the after effects of what has panned out in the globalization is that the entire Western world has kind of gotten deindustrialized. So, all the industrialization moved towards China because it was the cheapest to do it in China. And China was taking great leaps in expanding its industrial capacity. Now, the world is actually now what the world has realized through the series of events since COVID and just before that also is that this striving for efficiency and cost has led to very fragile supply chain. So whether it was the COVID, whether it was which made people realize that suddenly that you cannot be over dependent on one nation for your supply chain, or whether it was the Russia-Ukraine war that told you that you cannot be dependent on a rival nation for your energy needs, or whether it was the chip shortage that kind of cut down the production in the auto sector, which made people realize that there is a choke point. The today's economy, or rather the tomorrow's economy, is all about semiconductors, and you cannot have one nation producing 90% of the chips. So through series of, and now the recent energy shock that we saw in the Middle East, is everything is telling you that you need to be energy independent, you need to be energy secure, you need to have supply chain resilience, you need to be self-dependent in critical areas. All these things are essentially now front and center in every government's mind, every corporate's mind. So that is what is the big change that is happening in the world, and that is leading to a huge amount of rebuild of the physical and industrial capacity, which was missing for the last 30-35 years. So China will continue to be an important part of the supply chain. It will not ever be not important, but at the same time everybody is looking to reduce its dependence. So and also what has happened is world is moving from being unipolar to multipolar. Means if you are dependent on your security needs for the giant superpower United States, then it is no more a given, or at least it is not going to come free. So you need to shore up your defenses and at least be self-sufficient in some of the critical areas. So that is the underlying theme across all the markets, and that is leading to capital moving away from a lot of the traditional and old industries towards building out these new industries.
Right, Mr. Dharamsi, basically we need to focus on what this distills into in terms of how your portfolios are structured and how are you helping clients meet market beating returns. Let's try and analyze your thought process against the backdrop of what we've just spoken. Now, the orientation of both your portfolios, whether it's ValueQuest Platinum or ValueQuest Growth, is towards small caps, and that is where value is to be had and growth is to be observed. How are you channelizing fresh thoughts and fresh money as of now into the segments that you talk about?
Yeah, so first of all, let me explain what we do slightly better. So we are not focused on mid and small cap per se. We are market cap agnostic. We are sector agnostic. What we do is we have a top-down lens on which way the capital is going to flow, and then we try to identify companies bottom-up which are best positioned to take advantage of that change in trend. So that is what our usually the objective is. But what happens is when after a long time, when something changes in an industry, new profit pools get created. And because these new profit pools get created, usually in the companies in this particular themes and sectors tend to be small and they grow over a period of time. So just by that design, it so happens that these companies tend to be mid and small cap, and then they become large cap. But idea is not that we don't want to invest in large cap. If large caps are the ones, for example, the same themes in which we are bullish, in India, the exposure is more in the small and mid cap. But in US, it is more the large caps that are playing those themes. So what are these themes? So supply chain resilience, energy independence, energy security, sovereignty, and essentially basically building resilience in your supply chain. So these are the themes now, which boils down to which are the sectors that will do well wherever there is the capital is flowing. So from AI is the center of all the capex that is happening in the world. The hyperscalers are doing it. The numbers are just staggering. this particular year, and it started off with $500 billion, was upgraded to $650 billion, has been upgraded to $750 billion, and there is a possibility this will get upgraded to $850 billion. The things are moving so fast that every quarter we are seeing upgrade in the numbers. Now, just the top 7 companies are going to spend $800 to $850 billion on AI capex this year.
Right.
And the number
Mr. Dharamshi, all this is known. Every single point that you mentioned so far has been debated ad nauseum. Now, there is no AI trade in India unless you buy gensets from either Cummins or Kirloskar Engineering, or you take land on hire or buildings on hire from 1 or 2 real estate developers who have purposely, marketed themselves as such. You can set up a data center in any real estate organization, but some say that we only do it for data centers. Be that as it may, what are the themes within India that you intend to play in terms of supply chain management, in terms of renewables? Are you looking at ancillaries in this space? Are you looking at the larger cap companies in the sector? How is your portfolio structured?
Yeah, so no, very good question. And you're absolutely right. Everybody knows the headline about the AI capex theme, but finding the winners in India has been a challenge. And a lot of people think India is a net negative play on AI. I don't agree with that. Yes, of course, there is going to be some impact on IT services, which is a negative one. And we have a very negative view on IT services, especially the the time and material based business models, where essentially it's a labor cost arbitrage, where something is done in $100 will be done in $20 in India. But anyway, we'll leave that aside for the moment. We'll try and focus on which are the opportunities. Before that, let me just explain the macro of India. So, since COVID, the economy has been driven primarily by one big engine, which is the central government spending. And what has happened post 24 is that particular engine has started tapering off. Government's ability to spend more and more money got restricted. So it was very important for that mantle to shift to the private sector. Now, for 2-year period, we have seen that despite the fact that the balance sheets were good, profits were made post COVID from 21 to 24, corporates made good money. Banking system is in healthy shape, but the private sector capex cycle was not picking up. So what was missing is that there was no global tailwind. Instead, in fact, there have been constant headwinds. So first it started with a war, then it started with tariff war, then world realized that India does not have an AI play, and then again another war broke out. So there have been constant headwinds in the world, which has kept the private sector in a little bit of uncertain mindset about investing for the future. But now that will shift, because there is a global tailwind developing in the capex itself, and which is being led by AI, but there are other sectors also. So whether it is the semiconductor value chain, aerospace, defense, power grid infrastructure, then pharma, CDMO, there are many sectors where the tailwind has developed globally, and that is what was needed for India's private sector capex cycle to pick up as well. And that is how India's cycle will pick up. So, I think the trade of FIIs selling India or emerging markets in general, it was not only India, they were selling emerging markets, has reached an extreme point at this point. And I do believe that even the lack of selling from FIIs is good enough for the markets to start performing. So India's role might not be front and center in AI capex, but there are ancillaries available. Our approach has always been to play through picks and shovels. So whether it needs cooling solutions, whether it needs connectivity to the grid, whether it needs power as in cabling outside of drawing power from the grid to the data center and then distributing it within the data center, all these are kind of themes where there are good companies available in India. Now, India is also a unique country where there are lots of MNCs which are listed in India. I'll just list out some few names of the companies from Hitachi, ABB, Siemens, Bosch. These companies are not listed anywhere else in the world apart from their home country. India is the only country where these companies are listed. So, if there is going to be a big capex boom that is happening globally and it spills more into India as well, these are great ways to be playing those kind of themes.
Mr. Dharamsi, we see both the portfolios where the maximum amount of weightage is to the capital goods sector, specifically the theme that you mentioned. Aren't these stocks priced to perfection given their order books and possibly the lack of any further capacity expansion, especially in the names that you mentioned?
No, so you're absolutely right. They are not cheap anymore. However, price to perfection lies in the eyes of the beholder. Absolutely. So let me put it this way. There is one stock that we own which is very, very extremely priced. If one was to take a look at it only from the traditional metrics of valuation, which is P multiple of current year. But let's say it this way. This company is essentially a HVDC transformer and transmission equipment supplier. Now, the entire 9 lakh crore capex that is the national electrification plan is still to be ordered out. Has the ordering been done for the entire thing? No. In fact, I think the ordering has been done barely for 1 or 2 lakh crores out of that. So 7 lakh crores of ordering is still pending. Out of that 9 lakh crore, the equipment will be approximately 4 to 4.5 lakh crore. Out of that 4 to 4.5 lakh crore, the equipment meant for HVDC will be another 50% of that. So 2 to 2.5 lakh crore. Now, all that, this 2 to 2.5 lakh crore HVDC transmission capex is spread over about 10 to 15 projects. Out of that 10 to 15 projects, only 2 to 3 have been awarded till now. Another 2 to 3 are in the pipeline, and another 6 to 8 projects are still going to come over the course of next 3 to 4 years. So the cycle in terms of capex is not big. Now, I am not even considering the fact that these companies can start exporting also, because this constraint is not only in India. US is also facing the same constraint. Connectivity to the grid is the number one problem globally, and within that, transformer is one of the biggest constraint. So if that is the case, the cycle has not peaked, the ordering has not peaked, the margin has not peaked. Now, in context of that, you might look at today's valuation and say that, it is priced to perfection, but the cycle has not yet peaked.
Fair point. That's a very good defense of not only the company that you mentioned, but of course the sector in which you have the highest weightage. Apart from that, Mr. Dharamsi, how are you playing the pharma theme? It's been an undisguised blessing, which is the weakness of the rupee, as also this demand that we are now seeing emanating from the US geography. How has the pharma space changed according to you?
So, I've been tracking pharma for almost 25 years now. And earlier, the opportunity that the Indian companies used to address is essentially the generic opportunity in US, where basically Indian companies used to reverse engineer the product that is about to go off patent and launch it in US, capture the maximum value in the first 6-12 months, and then it gets genericized. Since 2015-16, that opportunity has not been, or incrementally it's been on the going down, because the competition becomes too much, the value ends up eroding, and there is not much value to be captured. So that has forced Indian companies to look at other opportunities. So some of the companies have gone into more complex areas. So whether it is inhalers, biosimilars, difficult and complex small molecules, these are some opportunities that some companies are addressing. There are other smaller companies that have taken the job of becoming part of the innovator's supply chain in form of becoming a CDMO partner. So what they do is that the larger companies they need to reduce the timeline and the cost in terms of development of the product. One drug takes 8 to 10 years to develop and almost 600 to 800 billion dollars to develop. So
Correct.
Indian companies are helping them reduce that cost and timeline. So if these companies in India are very, very small, and if they are able to become part of their supply, engage with the innovators early on in the development of the product, eventually when those products become commercialized, there will be a huge reward to be gained out of that. So in initial phase, the margins tend to be very high. In the commercial phase, margins are very good, but at the same time, the scale also comes through. So this is an interesting model that has come about in the last 10 years, where this CDMO opportunities are being capitalized on. And it is not only in pharma, even in some of the chemical intermediate, agrochemical, this particular model is come about in India. So that is the way we are going about it. We don't want to focus only on domestic branded generic pharma or generic US pharma. That those are not the models that attract us anymore.
Okay. Within your own allocation of pharma, which is substantial in both portfolios as also across AIFs and private equity, what is your top pick? Is it a CDMO player or is it a generic pharma company?
No, so our heavy weightage is definitely towards CDMO players. We own 2-3 of them. I will not name any, but essentially the idea is that, just like this is also part of the larger supply chain resilience theme that we spoke about during COVID times, and even post that, the world has realized that they are too dependent on one particular nation for their drugs. So they need to at least have a friendly country who can keep supplying them the medicines, the generics. So that is where India fits in. India is a neutral party. India is a trusted party. And we are able to take away some market share. Again, over the course of next 10 years, I don't see India becoming so large or something like, replacing the existing source. But it can always become a trusted second source. And there will always be some companies who are able to, become the number one source for a particular product. And that can change their life. In the 3-5 year time horizon, the kind of opportunities there, it can change their size to almost 2 to 3 times their current size, even with a very limited opportunity coming to India. So that is why we are most bullish on CDMO space per se, and not so bullish on the generic. Having said that, we do own one particular generic company, but it is a differentiated generic strategy that particular company is following, and hence we are bullish on it.
Fair point. The other emphasis which is there in your portfolio, at least in the growth one, is the preponderance of healthcare services. So healthcare services is 11%, pharma and biotech is 32%. Put together, this sector is a commanding 44% within the growth portfolio. This could be construed as very concentrated stock picking, or it could also be construed as, how should I say, something that you've researched much more deeply than others have. So 44% is in two allied sectors, pharma and healthcare. What does Ravi Dharamsi like so much here?
No, so you are absolutely right. We do follow a concentrated portfolio strategy, and we are totally benchmark agnostic. So we have no problem in having zero allocation to certain sectors and having very high allocation to certain sectors. So today, as of today, IT services forms 0% of our portfolio, and pharma and healthcare, like you mentioned, forms a very, very large percentage. However, we do tend to look at the drivers of the particular opportunity, and if you do that, then you will realize that the business models are completely different, and the drivers of each opportunities are also quite different. So we own one particular single specialty hospital in India. Now that if tomorrow some regulation changes in US, it is not going to impact this particular company because it is India focused and it is one particular single specialty. We also own, one, as I mentioned, a CDMO company, and then we own one generic company. So the drivers for each of these opportunities are very, very different. So despite the fact that the classification happens of all under pharma and healthcare, we are quite comfortable because we know that the risks are not equally associated with each of the sub-segment. So that is why we don't see, that is more a reporting nomenclature rather than an actual risk that we are carrying in the particular sector.
I understand the fine print there. It's just that when you look at the numbers, you find that 44% of portfolio is skewed to one side, and of course it's a winner take all situation. So far it works brilliantly, whether it's the CDMO space or the general hospital space. It's been a remarkable value creator via multi-bagger. So it's worked out extremely well. Let's get back to what you don't like, which is IT. You mentioned that time and material cost arbitrage, that is something of a past. The labor arbitrage story is now done and dusted. What could be the game changer for IT?
No, I actually fail to see any game changer at this particular moment. I think it is a mature industry. They were anyway growing in single digits, and they did not do enough to change their business model, either get more product level or become output solution oriented business model. So those things the industry never changed. So I think unfortunately there is going to be a transition period. Yes, AI based or enterprise AI will become an opportunity, but if 95% of your business is going to face a threat and 5% of your business is going to grow in a big way, it is going to hurt in the interim. Until that 5% becomes more than 50%, the overall revenue of your business is going to get impacted. So I continue to be very, very negative and bearish on the fact that IT services business model is past its due date. They will have to reinvent themselves. And as of now, I don't see how they can reinvent themselves, but they do have good cash flows, which they will have to use, and they will have to take some tough decisions over the course of next couple of years to reinvent themselves.
Right. On that very somber note, Mr. Dharamsi, we'll call it time. As always, it's such a pleasure listening to your thought process in terms of how to practically convert fabulous ideas into actual stock picking and in the process make tons of money. Looking forward to meeting you personally, and of course, have a great 2026.
Thank you so much. Wish you all the same.
That, ladies and gentlemen, was Mr. Ravi Dharamsi, founder and CIO at Value Quest Advisors. Thank you for watching.
If crypto is going to define the future, I want to be mined, minted, and made in the USA. It's going to be.
He was already a billionaire, a real estate tycoon. Then he became the most powerful man in the world. But Donald Trump's latest financial disclosure shows something bigger, sharper, and far more controversial. A sitting US president with a vast business empire, a booming crypto income stream, active investment accounts, luxury properties, golf resorts, foreign licensing deals, and a financial footprint that now stretches from the Wall Street to blockchain wallets. The latest disclosure, running into hundreds of pages, gives a rare window into how Trump's private wealth machine worked through 2025 and why critics say the line between public office and private profit is again looking blurred. The first big number is not income, it is activity. According to the report data, the number of Trump-linked investments has exploded over the years, from fewer than 100 in 2017 to more than 6,000 in 2025. That is not a quiet portfolio sitting in a drawer. It involves quick transactions, profit booking, with royalties, licenses, digital coins, and real estate revenue thrown in. The headline figure is dramatic. Trump reported earning at least $1.4 billion in 2025 from crypto and meme coin related business. At the center of this new money trail is World Liberty Financial, a crypto firm whose co-founders include Trump, his sons, and Steven Witkoff, a top diplomat in the administration. Zach Witkoff, the envoy's son, serves as chief executive officer. Then comes CIC Digital, Trump's meme coin business, which generated about $636 million in income, mostly through royalties from a licensing agreement. In simple terms, Trump was not just holding crypto. The disclosure suggests he was earning from the ecosystem around crypto, from token sales, coin licensing, equity sales, and digital asset holdings. For context, this was far larger than the money reported from his famous real estate and resort properties. The old Trump brand was built on towers, clubs, and gold-plated lobbies. But the new Trump money story is increasingly digital: tokens, coins, wallets, and licensing deals. Trump's traditional business, especially golf course and resorts, also brought in hundreds of millions of dollars in revenue. Mar-a-Lago, the Florida club often described as Trump's political and social headquarters, reported about $77 million in revenue. His golf and resort facilities together reported revenue of just over $500 million. And 2026 is already off to a booming start for trader Trump. A separate set of filings showed another striking number: more than 3,700 trades in the first quarter of 2026, with transaction values reported in broad range from at least $220 million to around $750 million. The names included some of America's most powerful companies: Nvidia, Apple, Microsoft, Meta, Oracle, Broadcom, Bank of America, and Goldman Sachs. The filings do not reveal exact profits, exact prices, or the full strategy behind the trade. But the scale of the activity is what raised eyebrows. For a president, when even a routine stock trade can become a headline, the trades involving companies affected by government policy becomes a question mark. The concern is not simply that Trump or managers acting on his behalf bought and sold assets. The concern is the intersection. Nvidia depends heavily on US policy for the export of advanced AI chips. Boeing is deeply connected to defense, aviation, diplomacy, and overseas deals. Big tech companies constantly deal with antitrust, regulation, and government contracts. When the person at the top of the government has financial exposure to companies that need decisions from that same government, critics argue every policy move can start to look like a market signal. And that brings the story to the central controversy. Critics say the question is not whether every transaction was personally ordered by Trump. The Trump Organization says his holdings and independently managed by third-party financial institutions, that trades are made through automated process, that Trump, his family, and his company do not select or approve specific trade. But critics argue this defense does not remove the larger concern. Trump did not fully divest. He did not move all assets into a classic independent blind trust. His business empire remains linked to family-run structures, and many of those businesses operate in sectors touched by presidential power: crypto regulation, foreign investment, real estate, media, technology, exports, tariff, and corporate approvals. The White House and Trump Organization reject conflict of interest allegations. Their argument is clear: the investments are independently managed, the president is not choosing trades, the family is not approving market decision, and the administration's policies are made for the American public, not for private gain. There is no proof in the filings that Trump personally timed trade to policy decision, but ethics experts say this is not the only test. The test is also whether the public can trust those decisions being made without financial shadow. For supporters, his mega profits look like proof of Trump's business instinct. For critics, it looks like a warning sign. A president whose private finances sit too close to public power. Bureau Report, Business Today Television.
Bitcoin is going to the moon, as we say, it's going to the moon.
Children clung to their parents. Elders watched in silence as years of memories turned into piles of rubble. Bulldozers plowed into Nifty village near Raipur on Tuesday to clear land for a proposed colony for MLAs. More than 90 families lost their homes.
नेताओं का जो जैसे अपन बोलते हैं ना चुनाव के समय जो बोलते हैं कि मैं ये करूंगा वो करूंगा वादा, लेकिन वो वादा बस है, वास्तविकता में कुछ नहीं होता। मैम
जद का दरा देता हमार मन के नोनी बाबू के दरा दे दायो हम ही कहा था शासन पर शासन से हमारा दन ऐसे संसार में किसी का घर मत तोड़ाए, गरीब अमीर सब इंसान हैं।
हटेंगे ही नहीं यहाँ से। अच्छा। क्योंकि भैया है, भाभी है, मम्मी है, पापा, कहाँ जाएंगे हम लोग? क्या अभी भी गए थे हम लोग 48 घंटा में जो नोटिस आया तब सांसद के पास, सांसद बोले कि रास्ता निकालेंगे, तो यही रास्ता निकालने के लिए हम लोगों को बुलाए थे कि हम लोग को आएंगे अचानक से और तोड़ देंगे करके।
The administration claims the land is government charagar, or land meant for grazing, and the action was taken after repeated notices were issued under the Chhattisgarh Land Revenue Code. The administration assures displaced families are being rehabilitated in flats built for economically weaker sections in Sector 30 in Nava Raipur. But the villagers claim they have lived here for generations. They point to land records on the state's Bhuiya portal showing villagers' names against Khasra number 460. They also question how electricity connections, water supply and houses under the Pradhan Mantri Awas Yojana was sanctioned if their settlement was not recognized.
वहाँ पे प्रधानमंत्री आवास इंदिरा आवास भी मिला था।
हाँ, वहुल फोड़ दी भाई मिले दी पैसा तो हुल ले गए कट बंद कर दी घर फोड़ दी सब बेटा बहू के हमारा अब लेना आप कैसे हमारा करना है मतलब भाई तू ही मन बताओ ना भाई।
Those who have already got flats claim they lack basic amenities such as electricity.
हम लोग को यहाँ लाकर अब सोचे कि सिफ्टे के फेंके है दोनों एक ही मतलब है, क्योंकि हम लोग का यहाँ बहुत चीज़ की सुविधा नहीं है। आप देख सकते हैं कि नल का जो कंडीशन है, यहाँ से पानी निकलेगा यहाँ आएगा, यहाँ का पानी यहाँ किचन में आएगा। देखो खिड़की की वजह से पूरा हवा से बर्तन हाँ खिड़की भी नहीं लगी है, बर्तन नीचे गिर रहे हैं।
The demolition drive has sparked a political face-off.
कई सालों से निवास करने वाले ग्रामीणों को खदेड़ा गया है, उनके मकानों पर बुलडोजर चलाया गया है। भारतीय जनता पार्टी के नेता वहां विधायक निवास बनाना चाहते हैं, विधायकों के लिए मकान बनाना चाहते हैं। नए रायपुर में इतनी जगह है, कौड़ियों के दाम पर उद्योगपतियों को दे रहे हैं, वहां पर विधायक निवास आराम से बन सकता है। लेकिन बसी बसाई बस्ती, बसे बसाए मकानों को उजाड़ने का काम भारतीय जनता पार्टी की सरकार ने किया है।
देखिए कोई किसी का आसियान नहीं उजाड़ रहा है और किसी के साथ में किसी भी तरीके का कोई अन्याय नहीं होगा, ये भारतीय जनता पार्टी की सरकार है।
More than 80 poor families are staring at their lost homes as administration is bulldozing these homes, and in fact the administration has issued the eviction notices as the land is proposed to be cleared for the construction of an MLA residential colony. Residents claim they have been living here for decades, and they also claim that many houses were built under government housing schemes such as PM Awas Yojana, and they have electricity, water and other civic amenities, making the eviction unjust.
While the administration justifies what happened in Nifty as an anti-encroachment drive, the villagers vow to keep the fight on. With Sumi Keval Patel, Bureau Report, India Today.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is our special edition where we're going to be discussing about how India's retirement landscape is changing. For years, National Pension System subscribers had two broad choices after retirement: take a lump sum money or buy an annuity or manage the withdrawals on their own. But now there is a third option available on the table. The Pension Fund Regulatory and Development Authority, the PFRDA, has introduced the Retirement Income Scheme scheme, or RIS as they call it, which is a market-linked payout framework that aims to provide regular income while keeping the retirement corpus invested. Under RIS, investors can receive periodic payouts while their money continues to remain invested through an age-based glide path that gradually reduces the risk over time. The scheme also offers flexibility, but it also exposes the retirees to the market volatility and the risk of exhausting the corpus by the age of 84. This raises some crucial questions. Should retirees choose guaranteed annuities that offer fixed lifelong income? Should they opt for the new RIS that balances growth and income, or does a dynamic or systematic liquidity withdrawal strategy offer greater flexibility and control? At the same time, when longer life expectancy is raising healthcare costs and inflation is reshaping the retirement planning, choosing the right post-retirement income strategy has become more important than ever before. To discuss and to understand what works for whom and whether India's newest retirement option can truly solve the retirement income challenge, I'm now joined by our very special guest, Mrin Agarwal, a financial expert who is decoding this entire thing for us today. Warm welcome to you, Mrin. It's always a pleasure to be speaking with you, and especially on a topic that a lot of Indians are truly interested in understanding, how some of these new dynamic reforms are going to be shaping up the way they change or strategize their own understanding of how should they be treating their own retirement income. Give us an understanding of how are you looking at this fresh reform when it comes to RIS in NPS.
So good morning, Sakshi, and it's lovely to be here today. And I think it's good that there are more and more options there now, because as you mentioned that earlier on you would get your EPF corpus, and you still would get it right now, of course, but you had to manage that pretty much on your own, figure out whether to go for annuities. And most often what I have seen, Sakshi, is that people find it really difficult to figure out where to put their money so that they can meet their regular expenses. So firstly, on the RIS, the way it works is that you can put 80% of the corpus that you've got from the NPS, which is the lump sum amount. So remember that a few months back, the 60-40 became 80-20. So now at the time of maturity, you're allowed to withdraw 80%. That 80% can be invested into this regular income scheme. And there is a glide path in the sense that when you start the investment, then you start with 35% into equity at the age of 60. At the age of 61, I'm sorry. And then that basically goes down to about 15% by the age of 70. And thereafter, it remains at 10% till the age of 84, right? So one is that the risk management is being taken care of to ensure that the corpus itself does not remain volatile due to the equity market movements. The other thing that is there is that there are two ways for the investor to take the money out. You can do a systematic unit redemption, or there is a systematic payout rate basically. Now in the unit redemption, what happens is that specific units are withdrawn. But of course, the monthly amount is going to fluctuate because of the NAV. So I think one of the main things that we need to remember out here is that unlike an FD where you're going to get a fixed amount, right? That's not going to be the case here, because there is going to be that 10 to 35%, which is there in equities. Now, in the systematic payout plan, there is a specific payout rate, and this is the maximum that can be paid out. It does not mean that if they're starting with 4% and going up to 100% by the age of 84, that is the maximum. It doesn't mean that that is the amount that you're going to get every year, right? So I think these are some of the things that one needs to keep in mind, some of the nuances, that this is a market link scheme. The payout rates that are mentioned are the maximum withdrawable rates, and the fact that the entire corpus is going to become zero at the age of 84.
Okay. Now, I want to understand, a lot of people would have this question, is RIS essentially a pension product, an investment product, or a combination of both? How would you really understand and read through the insights?
Well, I would say that it's a product that's going to help you get regular returns, and that's the way I would position it. See, the thing with pension is, and when you look at the annuity product that's there with NPS itself, the moment that you invest into the annuity, you're actually tying up that annuity rate for life, right? So I wouldn't want to call it as a pension product. Neither is it an investment product. I think it's a product that's basically trying to combine both the things to one, get the corpus to grow over a long period of time, and at the same time give you some regular payouts.
Absolutely. Now let's try and understand, if you had to explain the difference between RIS, annuity, SLW, what is a systematic liquidity withdrawal? That is, how would you explain to our average viewers there?
Okay, so again, let's remember the 80-20, right? The 20% has to go into an annuity, whether you like it or not, right? And typically, that's for amounts above 12 lakh rupees. Of course, if your amount is below 8 lakhs, 100% can be withdrawn as a lump sum, right? So that's point number one. Now, from that 80%, you have various options, right? At the time of maturity, you can decide to withdraw this 80% and do whatever you want with that money, invest it the way that you want to. You can decide that this 80% I'll put in the regular income scheme, which we discussed. You can also decide that I'll leave the money invested over there, but I will withdraw it as and when I require it. And I can also set up like a regular withdrawal. So the SLW basically works like a withdrawal facility. The subscriber basically decides how much he or she wants to withdraw from this on a regular basis. And there is no built-in mechanism to maintain the long-term sustainability of the corpus, right? I mean, the person can continue holding the same investments, right? Decide to have the same asset mix and just say that I'll just remove this over a period of time as and when I have the requirement, right? So it's very, very dependent on the individual, what sort of an asset mix they want, what is the sort of withdrawal that they want from this, right? And that's where the huge difference is, because when you look at the RIS, everything is kind of predefined, that this is the glide path, this is the maximum withdrawal rate. I don't think that this subscriber has a choice out there to make any changes. But in SLW, there is complete flexibility. You decide how much you want to keep in stocks and bonds and how much you want to withdraw.
So who is it better for? Say, for instance, if, looking at all of this, we need to decide, okay, for a section of people watching this show, annuity is best suited. For a section of people, RIS is best suited. And for a section of people, SLW is best suited. How would you define those categories of people?
Okay, so one thing, if you look at the current annuity payouts, they're somewhere in the range of about 6.5%. And remember, the annuity gets logged in for life, right? And while the 20%, that's the minimum. You can always decide to say that I want to have more money getting into annuity, okay? Point number one. Second thing is, so I think
Thank you, sir. May I now request Her Excellency Ms. Takaichi Sanai, Prime Minister of Japan, to give her remarks to the media.
皆様、こんにちは。
Ladies and gentlemen, good afternoon and namaskar. First and foremost, I would like to extend my heartfelt gratitude to Prime Minister Modi and the people of India for your warm hospitality on the occasion of my visit to your country. You called me a beautiful younger sister, Prime Minister Modi. But at the small meeting before the big meeting, we confirmed that we are on the same page and develop this relationship as brother and sister. Japan and India must leverage our respective strengths to become stronger and more prosperous together. In the midst of international affairs in disarray, the establishment of such intercomplementary cooperative relationship has become ever more important. From such perspective, as Prime Minister Modi and I engaged in discussions over diverse issues, we again were reminded of the many goals we share. And we confirmed to place the following 3 points at the center of our cooperation. First, to deepen the strategic cooperation between Japan and India. Our two countries share the vision on the profile of international order we should establish under the current international situation. I recently announced the updated FOIP, Free and Open Indo-Pacific, which focuses on self-reliance and resilience to realize FOIP. On the other hand, Prime Minister Modi positions the ocean as a shared space that supports regional stability and growth and is promoting the Mahasagar, the Great Ocean Initiative for countries across the Indian Ocean to defend their sovereignty and the sea through their own efforts, which is perfectly aligned with FOIP. Thus, we agreed to deepen the strategic cooperation between Japan and India to achieve such common goals. Expansion of maritime security cooperation is especially important for regional peace and stability. Taking the opportunity of our visit, a destroyer of Japan's maritime self-defense force and an India Navy vessel are planning to engage in joint exercise. We will enhance exercises in the Indian Ocean, promote naval maintenance, repair, and overhaul cooperation, and strengthen equipment cooperation under the Make in India framework. In order to deepen such cooperation, I have instructed the relevant departments to hold discussions and to organize the next Japan-India 2+2 before the end of the year. Second, promotion of Japan-India cooperation in the area of economic security and energy security. As both countries face challenges such as economic weaponization and non-market practices, we need to urgently build resilience in our critical minerals supply chains. Further, in the area of energy security impacted by the Middle East situation, both Japan and India bear the responsibility to provide for region-wide energy security as I presented in Power Asia. That is why we have released a document for public and private sectors, a joint statement to engage in concrete action for economic security cooperation. Under the Power Asia initiative, we will launch a bilateral dialogue to strengthen India's petroleum stockpiling system. Japan also supports India's membership of the IEA. In the area of energy transition, India has set a goal of leveraging cooperatives to secure energy from cow feces to build 1,000 biogas plants. In order to contribute to its achievement, we are launching the Japan-India Cooperative Biogas for Growth or CBG initiative that was introduced by Prime Minister Modi. The third is co-creation of economic growth of both India and Japan through investment and innovation collaboration. This is economic growth. I am committed to realizing a strong economy and aiming to enhance Japan's supply capability and technological capabilities through investment in 17 strategic areas. Prime Minister Modi launched Viksit Bharat, a national goal to become a developed nation by 2047, and is strongly driving India's growth. In this way, we share the goal of making our countries strong and prosperous through investments in the future. Strongly supporting our two countries to achieve such common goals are the business community representatives who are participating in the delegation from Japan. During this visit, around 120 cooperation documents between Indian and Japanese companies, including 2 trillion yen scale investment, were announced. It is a desire to forge a path for future in India and Japan through unified efforts of public and private sectors. Next year marks the 75th anniversary of diplomatic relations, and I would like to seize this opportunity to further bring in closer together the people of our two countries. Under the India-Japan Special Strategic Global Partnership, as trusted partners that share strategic direction, together with my bigger brother, Prime Minister Modi, I will lead the India-Japan relations going forward to a new phase. I look forward to welcoming Prime Minister Modi in Japan next time. Thank you very much.
Thank you, madam. With that, ladies and gentlemen, we come to the close.
Joint statement made by India and Japan by the two leaders, where Japan, as Takaichi said, lauds Modi's 2047 Viksit Bharat mission. Important statements coming there from Takaichi, Japan Prime Minister, who said that the next Japan-India 2+2 meet, that is to happen by the end of this year, as Japan backed Prime Minister Modi's Make in India push, saying that both Japan and India have shared common goals and both are on the same page when it comes to bolstering ties between the two nations. In fact, Japan Prime Minister Takaichi, who also went on to add to Prime Minister Narendra Modi's vision of batting for a free and open Indo-Pacific, as she said that Prime Minister Modi and her shared and also discussed shared goals. Prime Minister Modi, on the other hand, who released that statement first, saying that it is a big boost to the automotive sector, where biogas will boost rural livelihood. Prime Minister Modi, who called for supply chain resilience for chips, said that tech, research and startup ties are improving between India and Japan. He also added that 1,000 biogas plants in India have happened with Japan's help. Let me take this to my colleague Pranay Upadhyay joining us on the broadcast. Pranay, for you, the key takeaways of the joint statement that we just heard.
Appreciate to see both Prime Minister Narendra Modi and Prime Minister Sanai Takaichi are meeting after a gap of merely 15 days, and this is the 16th summit of annual summit between both these countries. And in fact, the way Prime Minister Narendra Modi addressed Japanese Prime Minister as younger sister, the way both Prime Ministers have pledged to take forward the relationship and in fact build upon a global special strategic partnership and in fact bringing good to the other countries as well. That is quite significant. In fact, the way Prime Minister Takaichi reiterated the pledge that Japan will be investing around 10 trillion yen in coming 10 years in Indian economy, which is around $68 billion, and also the way India and Japan have started their collaboration in joint development and co-production of the defense equipment, because recently Takaichi's government has opened up the defense sector for exports in Japan. And in fact, Japan and India are two important players, two big economies of the world, and they are two important players of the Asian dynamics. And that's why Prime Minister Takaichi, Prime Minister Narendra Modi both have reiterated their commitment that they are committed for the rule-based order in the Indo-Pacific region. And in fact, they are important players of Quad as well. And in fact, if you see in last 20 days, over the span of 20 days, Prime Minister Narendra Modi, on one side, he had a meeting with US President Donald Trump. Prime Minister Takaichi, he's meeting for the second time in less than 15 days, pardon me. And in next few days, he will be meeting the Australian Prime Minister Anthony Albanese as well. So this will be a key engagement of Prime Minister Narendra Modi with all the Quad partners at a time when India is trying to host a Quad summit as well. But besides that, in terms of the bilateral relationship, in terms of the economic agenda of this partnership, both India and Japan have worked out almost 5 MOUs or memorandum of cooperation in critical minerals, in mineral exploration, in artificial intelligence, in terms of the energy security. And both Prime Minister Modi and Prime Minister Takaichi mentioned this fact that how India and Japan are committed to take forward their partnership in terms of energy supplies, in logistic and supply chain resilience, in terms of in terms of defense, and how the Japanese technology and India's manpower can come together and work together for the greater good of both these countries.
Oh yes, absolutely, Pranay. The very point of how the two leaders were on the same page when it came to shared goals. Prime Minister Narendra Modi, who also spoke about how Japan has supported India when it comes to our development in the last couple of decades, especially when it comes to automobiles and electronics. And even the Japanese Prime Minister, who went on to laud Prime Minister Modi's 2047 Viksit Bharat mission and support India's Make in India aim.
Absolutely. Not only that, Prime Minister Takaichi also mentioned the Mahasagar vision, how in the Indian Ocean region, how India is, taking initiative to take all the partner countries together, and the vision of Prime Minister Narendra Modi for a shared growth. She also reiterated and also expressed her commitment and her support for this initiative of India and Prime Minister Narendra Modi.
Right.
And in fact, in terms of economic growth, currently the Indo-Japan bilateral trade is $27 billion. Both countries have expressed their commitment to increase this volume of this bilateral trade, and in fact, Prime Minister Takaichi.
Oh yes, absolutely, Pranay. Thank you for getting us all those latest details. We continue to keep a close eye on all the developments coming in. For the moment, a short commercial break. We'll be back on the other side with the very latest. Do stay tuned to India Today.
A warm welcome, ladies and gentlemen, on Business Today Television. We are in the process of starting the 7th month of calendar 2026 in style. We have strength which is coming back into the market above 24,000, and of course there is a very, very sharp rally which is in the underlying markets, whether it's small caps, whether it's mid caps, all based on very strong growth projections that we've seen coming out of the fourth quarter, and we are at the doorstep of the first quarter earnings. What should your portfolio outlook be for the remaining of 2026, as also for the time ahead? To discuss this and a lot more, we are joined by Mr. Ravi Dharamsi, the founder and CIO of Value Quest Advisors. Mr. Dharamsi is a very, very well-known stock picker in the market. His command over the Lal Street, both on the micro stock picking as well as macro broader markets, is phenomenal. And he's spent now almost 3 decades trying to find both value and growth at Value Quest. He manages somewhere like 25,000 crore rupees in PMS products, AIF products, and private equity. Namaste Ravi Bhai, what a pleasure to welcome you after many, many months. How are you reading sentiment at this point of time on the Lal Street?
Thank you for having me. The pleasure is all mine. And yeah, so I think you summarized it quite well. If you look at the headline indices, and if you look at the headline news in the newspapers, you would think that India must be in a bear market because our indices have not gone anywhere for 2 years. We were suffering from the effects of the Middle Eastern war. Crude had spiked. FIIs have been selling. And those are the kind of debates that have been raging generally in the media. But what this is masking is that there is a very strong undercurrent in the broader market, and those people, those who are not focusing on these, are actually missing out. And this has started sometime in the month of around March, where actually the uncertainty was at its peak. Now, I have a broader view in what is happening in the world. So what has happened is since 1990s, or since the start of the China's rise, you can say that, world has been essentially focusing on optimizing. They have been optimizing for cost, for efficiency, for just making things more and more profitable, focusing more on financial engineering. Essentially, the globalization was at play. Now, the after effects of what has panned out in the globalization is that the entire Western world has kind of gotten deindustrialized. So, all the industrialization moved towards China because it was the cheapest to do it in China. And China was taking great leaps in expanding its industrial capacity. Now, the world is actually now what the world has realized through the series of events since COVID and just before that also, is that this striving for efficiency and cost has led to very fragile supply chain. So whether it was the COVID, whether it was which made people realize that suddenly that you cannot be over dependent on one nation for your supply chain, or whether it was the Russia-Ukraine war that told you that you cannot be dependent on a rival nation for your energy needs, or whether it was the chip shortage that kind of cut down the production in the auto sector, which made people realize that there is a choke point. The today's economy, or rather the tomorrow's economy, is all about semiconductors, and you cannot have one nation producing 90% of the chips. So through series of, and now the recent energy shock that we saw in the Middle East, is everything is telling you that you need to be energy independent, you need to be energy secure, you need to have supply chain resilience, you need to be self-dependent in critical areas. All these things are essentially now front and center in every government's mind, every corporate's mind. So that is what is the big change that is happening in the world, and that is leading to a huge amount of rebuild of the physical and industrial capacity, which was missing for the last 30-35 years. So China will continue to be an important part of the supply chain. It will not ever be not important, but at the same time everybody is looking to reduce its dependence. So and also what has happened is world is moving from being unipolar to multipolar. Means if you are dependent on your security needs for the giant superpower United States, then it is no more a given, or at least it is not going to come free. So you need to shore up your defenses and at least be self-sufficient in some of the critical areas. So that is the underlying theme across all the markets, and that is leading to capital moving away from a lot of the traditional and old industries towards building out these new industries.
Right, Mr. Dharamsi, basically we need to focus on what this distills into in terms of how your portfolios are structured and how are you helping clients meet market beating returns. Let's try and analyze your thought process against the backdrop of what we've just spoken. Now, the orientation of both your portfolios, whether it's ValueQuest Platinum or ValueQuest Growth, is towards small caps, and that is where value is to be had and growth is to be observed. How are you channelizing fresh thoughts and fresh money as of now into the segments that you talk about?
Yeah, so first of all, let me explain what we do slightly better. So we are not focused on mid and small cap per se. We are market cap agnostic, we are sector agnostic. What we do is we have a top-down lens on which way the capital is going to flow, and then we try to identify companies bottom-up which are best positioned to take advantage of that change in trend. So that is what our usually the objective is. But what happens is when after a long time, when something changes in an industry, new profit pools get created, and because these new profit pools get created, usually in the companies in this particular themes and sectors tend to be small and they grow over a period of time. So by that design, it so happens that these companies tend to be mid and small cap, and then they become large cap. But idea is not that we don't want to invest in large caps. If large caps are the ones, for example, the same themes in which we are bullish, in India, the exposure is more in the small and mid cap. But in US, it is more the large caps that are playing those themes. So what are these themes? So supply chain resilience, energy independence, energy security, sovereignty, and essentially basically building resilience in your supply chain. So these are the themes now, which boils down to which are the sectors that will do well wherever there is the capital is flowing. So from AI is the center of all the capex that is happening in the world. The hyperscalers are doing it. The numbers are just staggering. This particular year, and it started off with $500 billion, was upgraded to $650 billion, has been upgraded to $750 billion, and there is a possibility this will get upgraded to $850 billion. The things are moving so fast that every quarter we are seeing upgrade in the numbers. Now, just the top 7 companies are going to spend $800 to $850 billion on AI capex this year.
Right, sir.
And the number
Mr. Dharamshi, all this is known. Every single point that you mentioned so far has been debated ad nauseum. Now, there is no AI trade in India unless you buy gensets from either Cummins or Kirloskar Engineering, or you take land on hire or buildings on hire from 1 or 2 real estate developers who have purposely, how should I say, marketed themselves as such. You can set up a data center in any real estate organization, but some say that we only do it for data centers. Be that as it may, what are the themes within India that you intend to play in terms of supply chain management, in terms of renewables? Are you looking at ancillaries in this space? Are you looking at the larger cap companies in the sector? How is your portfolio structured?
Yeah, so no, very good question. And you're absolutely right. Everybody knows the headline about the AI capex theme, but finding the winners in India has been a challenge. And a lot of people think India is a net negative play on AI. I don't agree with that. Yes, of course, there is going to be some impact on IT services, which is a negative one. And we have a very negative view on IT services, especially the, the time and material based business models, where essentially it's a labor cost arbitrage, where something is done in $100 will be done in $20 in India. But anyway, we'll leave that aside for the moment. We'll try and focus on which are the opportunities. Before that, let me just explain the macro of India. So, since COVID, the economy has been driven primarily by one big engine, which is the central government spending. And what has happened post 24 is that particular engine has started tapering off. Government's ability to spend more and more money got restricted. So it was very important for that mantle to shift to the private sector. Now, for 2-year period, we have seen that despite the fact that, the balance sheets were good, profits were made post-COVID from 21 to 24, corporates made good money, banking system is in healthy shape, but the private sector capex cycle was not picking up. So what was missing is that there was no global tailwind. Instead, in fact, there have been constant headwinds. So first it started with a war, then it started with tariff war, then world realized that India does not have an AI play, and then again another war broke out. So there have been constant headwinds in the world, which has kept the private sector in a little bit of uncertain mindset about investing for the future. But now that will shift, because there is a global tailwind developing in the capex itself, and which is being led by AI, but there are other sectors also. So whether it is the semiconductor,
Hello and a warm welcome on Business Today television, ladies and gentlemen. We continue with our endeavor to get you to meet the finest brains on Dalal Street, individuals, fund managers, professionals, equity strategists who have navigated this turbulent and volatile time with equal ease and ended up making a lot of money for their clients. Such people have had 3.5 decades of experience in Dalal Street and have always come out trumps whenever the markets have given them an opportunity to buy quality assets at lower point of time. It gives me great pleasure to welcome Mr. Sunil Shah. He's a fund manager at SRE PMS, a very well-known stock picker on Dalal Street and an equally fine gentleman. Namaste Sunil ji, very warm welcome. Turbulence and volatility seem to be behind us as far as sentiment on Dalal Street is concerned. How are you viewing the first quarter and what looks good?
Thank you so much for all those kind words. Thank you for having me on the show. And yes, the turbulent times are behind us now. The first quarter results should start from the next few days. Having stated that, at least the two parameters which are there in the market in terms of the greed and the fear, we are coming out of that fear zone and might soon get into that greed zone again. So the first quarter numbers could give one such opportunity again for investors to buy stocks at a better price. The reason being that stocks have really run up in the last couple of months post the March phenomena which we all saw. So I think the corporate results could be slightly subdued. FY26, the top 100 companies, the large cap universe, posted a growth of about 10% on revenue front. That is on the first 100 companies. The mid-cap universe showed a 22% kind of a revenue growth, and the small cap was about 16%. Having stated, I think the first quarter numbers could be below those numbers, and so market could get slightly disappointed, and the prices could come back again to some attractive levels, which is when investors who have left out on the previous zone can participate again. So while participating, keep the March end lows price in your mind. On 31st of March 2026, peak fear was there in the global markets and Indian markets as well. So the low prices which were there at that point of time should be kept in mind before going ahead with any kind of buying that an investor does in the market. Yeah, so accordingly place your investment strategy is what I would say going forward strategy.
Okay, perfect. Sunilji, when it comes to quality stocks, some of them have already given stellar returns in the last 2 odd months. This has also been the case when crude oil prices corrected fairly sharply, providing a lot of relief to Dalal Street. Is the best of crude oil behind it?
Yeah, Shailji, so crude oil is a factor which, at least from the market point of view, is now perhaps in a positive trajectory. But the learnings there, when the crude prices were at the peak and we were really left at the mercy of what's happening on the Hormuz Strait, the country has really evolved. Now strategic reserves are getting built up. There is tremendous focus on strengthening the shipping fleet of the country. We are diversifying from depending on the Gulf region to other suppliers from Japan or even from US, etc. So we are taking the long-term thought process of really reducing our dependency. And there are multiple companies even in the Indian context which are not so much influenced by this crude prices. In fact, going forward, there could be a huge demand upside that could come in those companies as well. So I think those need to be looked at, which will benefit from any kind of correction in the crude prices.
Okay, fair point. The other macro variable that seems to be in favor of the country now is the rupee, as also the RBI's steps to increase this FCNRB deposits. How are you viewing it against the context of possibly it being fundamentally a game changer for the Lal Street?
Yeah, Shalji, very, very important point. End of the day, if entire country has to be evaluated in just one number, it is the forex rate. And we saw that during the crisis about how the rupee had depreciated. And any kind of crisis situation, we as a country are anti-fragile to take strong steps to come back stronger. We saw it in terms of the crude, we saw it in terms of the FCNRB deposits. Now, there are estimates which are coming around that this could collect almost close to about 80 to $100 billion. And that is getting again reflected overall in the picture of the INR, which is strengthening. So at 96, everybody was talking about 100 rate coming, and now we are coming closer to 93, and we are talking about sub 90 levels. So that's the way the market behaves. That's the way people act or react to the situation. Having stated, I think measures are taken, and it has given one more indicator that in times of crisis, the government is taking the brunt of the pain. Whether it was crude prices going up, government went on to reduce the excise rather than penalize or make the common man suffer. So that trend has really come through. So even if going forward any kind of situation or crisis comes through, we will have government which will be there to take the brunt on themselves. And so any corrections will be short-lived. Corrections in the market would again be there at any point of time we see uncertain situations, but those corrections will be short-lived where investors can go and buy the stocks. So I think that's the way going forward things will work out. Yeah, Shane.
I presume that you are now sleeping easy than what you were in April and May. If that be the case, then let's look at stock picking now.
Right.
You're sleeping easy these days? Good, excellent.
Yeah, Shailji, Shailji, so I think at that point in time as well, once we had met up in the month of Jan, it was more of a gloomy kind of a situation. And then again in March, it turned out to be attractive for investors. Again, a good time to go stock picking, good time to really find ideas and invest into the opportunities which are there in front of you. Yeah, Shailji.
Okay, perfect. I was just setting this macro thought process in mind, and now that all the possible, how should I say, plugins are in place, weak oil, weak gold and silver, strong rupee, as also the end of the Asian war, we presume that all the dark clouds have disappeared. Now let us look at the silver lining. Between the time we last spoke, Sunilji, and now, two major developments have happened, which is the National Stock Exchange offer has been made public, as also an equally big IPO, if not bigger, which is Reliance Jio. How are you watching these two developments against the backdrop of, stock market history where we've seen mega IPOs sort of derail sentiment on the secondary markets? What are your thoughts on valuation, and what are your thoughts on sequencing of these two?
Yeah, Shailji, so very, very important point. And historically, we have seen that anytime a mega IPO comes to the market really kind of gives away or corrects post those IPOs get listed. Now, in this two context of LSE and Geo, we have seen the framework getting changed. The dilution is going to be limited. So the fundraising exercise is going to be anywhere between 30 to 35,000 crores of money for each one of them put together whenever they get listed. This, to my mind, or the current market situation, is not a big amount of money, wherein it's almost equivalent to a monthly SIP flows of the market. So the issue should sail through. Both of them are very large proxy for overall India's growth story, and they will have to find a place in any mutual fund holding or an FII holding. So I think there will be investors who would like to participate in those companies and really enjoy the ride going forward. So I think valuation point of view, we could see an NSE clubbing at about a market cap of close to 5 lakh crores, or a Geo which could come in at about 13 odd lakh crores. So those numbers look good, but the fundraising exercise that they are going to do is going to be limited. And again, as I stated, it would be one of the prime holdings in any fund list. So we'll see investors participate into those. That would again revive the sentiments of the retail investors who in the IPO market have not been making a lot of money in the last year or so. So all round, it's going to be much better and much beneficial for the markets going forward in terms of both those IPOs. Yeah, Shailesh.
Okay. What are the, of course, these are marquee events, and each decade brings up its own issues. Earlier part of 2000, we saw Bharti getting listed, and then there was this rush of Maruti and TCS, and now we have the opportunity for NSE as well as Reliance Jio. Given the fact that both these stocks are richly valued, for NSE you almost have a daily, if not an hourly quote available on the unlisted space. What are the chances that investors will make money in the medium term, say 1 or 2 years, should they be fortunate enough to get the allotment?
Shaji, a lot of that would again be driven by the pricing of the IPO. So the price of IPO, which in the grey markets or the markets which are being quoted, is going on at closer to about 1800, 1900 thereabouts. And if the IPO it comes in a price band of 15, 1600 or so, investors will make merry out of it. What is also important is both these companies, they are diluting just a small fraction of their holding. So going forward, they will have to dilute it in accordance with the norms to bring their shareholding below the threshold. So we'll see better pricing from the company to start with, so that future dilutions, the investor participation also remains, and the investors lap up the stock. So I think it could be one of those couple of few ideas that, as you correctly mentioned, the 2000s of Bhartis and Marutis and SBIs, this couple of stocks could be coming in the same league when we will realize that importance of this IPO maybe 10 years down the line. So that's how I would position both these companies going forward. Yeah, Shailesh.
Yes, I agree with you. Mostly घर की मुर्गी दाल बराबर होती है, लेकिन over time you realize the kind of wealth Bharti has created. I still remember the IPO was at 45 rupees and it listed at 42, went all the way down to 18, 19, and now you have 1900 rupees on the screen. This is actually a 1:1 bonus, so actually the price is somewhere like 3600. So great wealth. I agree with you, with your assessment. Now, Sunilji, so far I have asked very easy questions to you. Now come the difficult ones. What should we do with our IT portfolio? I see that you are relishing difficult questions.
As always, and I'm prepared for it. So yeah, Shailji, I can expect not easy question from your side, as always. So IT is going through a transition, right? We are seeing the global money flowing into those AI companies, and India not providing adequate, opportunities for investors. So that's getting sold out. And again, the IT companies in India are forming their own alternate in terms of the GCC, which are those global companies putting up base here, and their business is shifting to the other companies in India. That's clearly evident from their growth path as well. The kind of liquidity that they have is getting sold into. So the darlings of the past are getting punished in the current environment. The underlying business dynamics of these companies are changing. So it's a value opportunity. It's a trading bet from here as well. But if we think that we are going to make any kind of multi-bagger returns by participating in the IT arena, those days are behind us. So let's acknowledge that as a fact and move ahead to find other ideas where you can make still a lot of money, because the growth opportunities in the other pockets will be much higher, better, and safer without the headwinds to the sector per se. So that's how I would classify the IT sector at this point of time.
Okay, fair point. What is your exposure to IT as a percentage of AUM?
It would be negligible. It would be negligible. I would not say maybe a few decimals here and there, but not any kind of a significant overweight on that side.
Okay, fine. So basically, now that the broader structure of your thought process is clear to us, let us now look at what looks good to you. I know that you are a very long-term holder of equity and you really enjoy multi-bagger returns. What at this point of time is coming on your radar which deserves mention and deserves purchasing?
Yeah, Shailji, so I would try to look at the sector tailwinds. Clearly, one such opportunity is emerging, which is in terms of the electric two-wheeler space. March 26, FY26, we had electric two-wheeler sales of close to 14 odd lakh in number terms. And the ICE, the other part of it, was close to about 2 crores or so. Over the next 5 years, there could be a major shift in terms of those 14 lakh two-wheelers of electric could be anywhere between 50 to 70 lakhs over the next 5 year period. That's like a 3 to 5x kind of an industry growth rate. And if you look at the breakup of the industry, you have TVS, which is the number one company, selling about close to 55,000 electric two-wheelers every month. You have Bajaj, which is at about 50 odd thousand, and you have an Ether Energy at about 35,000. Now, if you compare the market cap of all these three companies, TVS's market cap of close to 1,75,000 odd crores. You have Bajaj at about 2,50,000 crores, and you have an Ether Energy, which is a pure play electric two-wheeler at about 35,000 crores. So I think somebody who takes a directional call in terms of the next 5 years, the electric two-wheelers getting sold into, you have such kind of companies where a lot of money can be made provided you have the patience to hold on to the company, ride those greed and fear zones of the market, because 3 to 5 year will involve lot of uncertain zones which you need to structurally pass through. So I think Ether Energy can be one such company where market cap could be significantly higher from the current point in time, given the kind of growth that I am talking about. So that's one such thing which I would say, yeah, Shane.
So this is again what you are basically looking at is a hockey stick curve in purchase of electric two-wheelers. For the moment, we buy somewhere like 2 crore two-wheelers a year, and somewhere like 14-15 lakhs two-wheelers which are electric. You are hoping that somewhere this equation will change in favor of electric two-wheelers, and therefore Ether Energy should be one of the beneficiaries. Ether Energy actually got listed in May of 2025, and at about 327 rupees, it's already a 4-bagger. So, Sunilji, this will be a multi-year kind of a holding, correct?
Yeah, Shaiji, I think both of us have been there for decades in the market, and we have both experienced that wealth is created, generated, made only with a multi-year investment horizon.
Okay. So, if I were to push you a little further, if somebody is creating a portfolio of quality stocks as of now, what should Ether Energy be as a percentage of total portfolio?
Shaiji, I think that's a very fluid question to answer. The reason being, to an individual with risk appetites, it could be completely different. So it couldn't be a one fit all kind of a thing for all. It should be more dependent on the individual's risk appetite and the investment horizon. So I would, sorry, but I would not be able to judge them.
Absolutely.
Yeah.
Now, what else catches your fancy? We've had a very, very strong boom that has come into this construction space. ancillary supplying to construction majors. Where is value at this point of time?
Shailji, so in the infra space, which is again insulated from all those global vagaries, there are companies like Sangvi Movers, which provide capital equipments to the infra companies on these basis. So I think this is one such company which is positioned for huge amount of growth. Sangvi Movers in almost about the third quarter of last financial year put up a subsidiary in Saudi Arabia to capture the boom in the Middle East expansion region. And Saudi Arabia is doing a lot of work there. So they have put up a subsidiary there in order to, be there. Now, given that war has occurred there and there will be a lot of reconstruction activity, plus you will have the oil pipeline coming up from Fujiirao. So that's another opportunity where cranes could be deployed for them going forward. So I think that's one such company. The interesting point which I felt about Sangvi Movers was the kind of revenue to order book. So at any point of time at the start of the year, if the company has an order book of the last year's revenue numbers at about 50%, they end up doing double of that. So as I speak, the FY26 revenue numbers for Sangvi Movers were closer to 1,000 crores, and the order book at the start of the year was also closer to 1,000 crores. So when the order book is almost at par, the end of the year revenue numbers could be 2x of the revenue numbers at the order book at the start of the year. So I think that's interesting play that one can look at in terms of the proxy to the entire capital expenditure, infra, and all those, not only in India but also into the Middle East region. So I think that's one where one can look at investing from a point of time in future.
Okay,
That's
and we
another
are
one.
fortunate. We are fortunate that Sangvi is available much below its all-time high. We've seen 720 on this one. Of course, the correction has been pretty steep, but the last 3 months have been equally rewarding for patient shareholders. Be that as it may, again, this is on the Gulf boom. Now that the war has stopped, we need to sort of look at reconstruction theme. The other space, Sunilji, I was wondering if you have a pick on that one, is the auto ancillary space where lots of interesting stocks are moving around, whether it's because of the EV theme, or how are you sort of looking at companies there? Is there a favorite within the auto ancillary space?
Yeah, Shailji. So one of the ideas which I think can really make good numbers for investors is a company, SJS Enterprise. This is a company in the business of doing those logo work for the companies. You have those Audi logos and the BMW logos. They do a simple business in that category. The best part about the company is the margins that they enjoy. Despite being an auto ancillary company serving almost each and every OEM, they enjoy an operating profit margin upwards of 26%.
Yes.
Now that's something which struck me, that if a company is consistently generating this kind of margin, there has to be some USP for the company, and that is how I think this company is poised to grow. The other part is the content per vehicle. So if you see those high-end vehicle where a Toyota's Fortuner logo is embedded with light and chrome, and now going forward in the next 3 years, we will see that kind of logos percolate down to even the entry-level cars.
Yes.
So the content per vehicle for SJS looks very promising, and the company has gone on records to say that their content per vehicle in passenger vehicles is likely to inch up from 3,500 current levels to about 3 to 5 times from the current size. So those kind of ideas are there, which are maybe relatively low hanging fruits, and have a lot of growth potential, much higher than even the industry growth rate. Plus, you have operating leverage which plays in. So all those things one can watch out for. Maybe this kind of ideas even in the auto ancillary space. Yeah, Shailji. So that's another one to watch out for.
Okay. This valuation that we see on SGS Enterprises, most of the stocks, Sunilji, it's quite unlike you to discuss stocks which are at all-time highs. Apart from Sangvi movers, all the three that we've discussed are, stratospheric in terms of the kind of price action we have seen. Have you changed your thought process in chasing momentum rather than buying value?
Shall the end of the day, it's the growth that investors pay for in the markets. And I think this company is the kind of growth path that they have set out for themselves, or it's more of the tailwinds in the sector itself, which gives them that kind of growth. So the valuation look expensive if we look at on a trailing basis. If you're building the future growth into place, and you have all those checklist parameters of being debt free, of being high ROE, high margins, low working capital, the premium valuation will still continue. So I think even for the mutual fund investors, the mutual fund managers, they would want to be invested in such kind of companies where there is a reasonable amount of surety of business as well. And the SIP flows which continue, the price action will then happen because of the flow and the liquidity chasing such companies. So I think, yes, you need to have a blend of value and growth. At this point in time, if the quality growth is available, I think I would still try to play that as well.
Fair point. Your earlier two favorites, Shipping Corporation and Garden Reach, one was based on the sheer order book that is coming in, and we are obviously seeing many naval ships getting launched. Just last week we had 3. What is your understanding of Garden Reach Shipbuilders and Shipping Corporation at this point of time? Do they still offer value?
Yeah, Shailji, so when you talk about Garden Reach as a company, the order book of the company is now at about close to 18,000 crores. And you are, or the market, everybody is waiting for one such big order announcement of close to 30,000 crores. The company's management has indicated on various media channels as well that it's one of the last steps from the government side to sign on the papers and make the order announcement. So just question of time. It was expected to be done in the fourth quarter, but then we had the war situation, so that things have got a little bit delayed there. Structurally, there is no change in the business. The order is likely to fructify for the company, and that is when the next growth trigger for a company like Garden Reach will play in. So apart from that, again the F-17, the frigate, the P-17 Bravo, which is another 40,000 crores, is likely to be announced in somewhere in FY28. So the order book position will still strengthen from the current 18,000 to somewhere around 80,000 over the next 24 months. So I think that's how the company needs to be played out. It is in a consolidation phase as we speak, and the growth triggers as and when they come in, the price will also reflect that. About Shipping Corporation, the fleet size of the company is likely to be increased. Government has allocated close to 9,000 crores for them to really go about buying ships in the markets to strengthen their fleet. They have also set up a joint venture with all those OMCs, the oil marketing companies, to further strengthen their fleet size. So again, question of time. Again, Shipping Corporation is one stock which is available at a very low end of the price front in terms of evaluation, and can provide a good growth opportunity for long-term investors. So that's what it is on both the shipping companies.
So far, Sunilji, we've discussed fairly new companies, except for old world favorites like Sangvi Movers. What attracts you in the construction space? Any companies where you might be seeing a blue sky kind of an initiative or an opportunity, maybe in Mumbai?
Yeah, Shailji, so one another company which I think we like and we had attended the management's annual day as well was ITD Cementation, which is now known as Senpro.
Senpro,
Senpro, yeah, the earlier ITD Cementation. It's now owned by the Adani Group. And we all know the kind of capital expenditure program that Adani as a group is envisaging for themselves, whether in terms of building ports or roads or bridges or marine projects. This is one such company which can benefit out of the entire capital expenditure program of Adani Group. So the way in which historically this company was growing was at a decent pace, but now with Adani's execution capabilities and their requirement to really make the company move at a very fast pace, I think going forward, the numbers for the company could change dramatically. Having said all of it, the stock has really run up recently from in a very short period of time. It's given phenomenal return. So the investors, as I stated earlier in the comments, can perhaps wait out for the first quarter numbers results for market to give any such kind of correction opportunity to look at this kind of ideas. So maybe you can place it in the watch list or do things like that to add the stock at a comfortable zone perhaps. So that's a thought, Shelby.
This would also be a beneficiary, Sunilji, of the Adani Dharavi project.
Yeah, it's too early, but yes, certainly it could play that role. Now you have another company from the Adani stable, which is PSP Projects, which is doing a lot of construction work on the Adani Realty front. So it's going to be a blend of this and PSP, which could play the role in terms of the development of the entire Dharavi project. That could be the two from Adani's side.
Fair point. So, very interesting stocks, ladies and gentlemen. We've discussed right from electric two-wheelers via Ether Energy to construction and crane giants like Sangvi Movers and Sempro, auto ancillaries, SJS Enterprises, and of course, the value that is to be had in Garden Reach and Shipping Corporation. So far, so good, Sunilji. Have you connected all dots, or is still a good pick left that you may want to discuss?
Shailji, I think we have discussed a lot of stock ideas with a clear disclaimer that obviously all of these could be my portfolio companies and my clients' investments and the PMS companies. Yes. So everybody is requested to do their own due diligence before taking any decision on their own. There could be, I could have all the rights to change my thought process without any kind of intimation. So I hope I comply with those status and standards as well. So that's a thought, and Shaili, I think we have covered more than, and you extracted the real thing that you always wanted to be taken from me. So all more than happy to discuss everything with you.
Okay, fair point. So with that, ladies and gentlemen, it's actually time is over. Twice my PCR has told me to end this conversation, but it's very, very difficult to let Mr. Sunil Shah go, without discussing great ideas which can create multi-bagger returns. Sunilji, as always, it's such a pleasure, and we hope to meet in person in Mumbai soon. Thank you for your time, as also with such excellent and sensible thoughts on how to pick stocks and how to write them. Thank you for your time.
Thank you.
That, ladies and gentlemen, was Mr. Sunil Shah, fund manager at SRE PMS, talking about several of his holdings and, of course, how can they possibly pan out over the next couple of years. Thank you for your time. Stay tuned.
If crypto is going to define the future, I want to be mined, minted, and made in the USA. It's going to be.
He was already a billionaire, a real estate tycoon. Then he became the most powerful man in the world. But Donald Trump's latest financial disclosure shows something bigger, sharper, and far more controversial. A sitting US president with a vast business empire, a booming crypto income stream, active investment accounts, luxury properties, golf resorts, foreign licensing deals, and a financial footprint that now stretches from the Wall Street to blockchain wallets. The latest disclosure, running into hundreds of pages, gives a rare window into how Trump's private wealth machine worked through 2025, and why critics say the line between public office and private profit is again looking blurred. The first big number is not income, it is activity. According to the report data, the number of Trump-linked investments has exploded over the years, from fewer than 100 in 2017 to more than 6,000 in 2025. That is not a quiet portfolio sitting in a drawer. It involves quick transactions, profit booking, with royalties, licenses, digital coins, and real estate revenue thrown in. The headline figure is dramatic. Trump reported earning at least $1.4 billion in 2025 from crypto and meme coin related business. At the center of this new money trail is World Liberty Financial, a crypto firm whose co-founders include Trump, his sons, and Steven Witkoff, a top diplomat in the administration. Zach Witkoff, the envoy's son, serves as chief executive officer. Then comes CIC Digital, Trump's meme coin business, which generated about $636 million in income, mostly through royalties from a licensing agreement. In simple terms, Trump was not just holding crypto. The disclosure suggests he was earning from the ecosystem around crypto, from token sales, coin licensing, equity sales, and digital asset holdings. For context, this was far larger than the money reported from his famous real estate and resort properties. The old Trump brand was built on towers, clubs, and gold-plated lobbies. But the new Trump money story is increasingly digital: tokens, coins, wallets, and licensing deals. Trump's traditional business, especially golf course and resorts, also brought in hundreds of millions of dollars in revenue. Mar-a-Lago, the Florida club often described as Trump's political and social headquarters, reported about $77 million in revenue. His golf and resort facilities together reported revenue of just over $500 million. And 2026 is already off to a booming start for trader Trump. A separate set of filings showed another striking number: more than 3,700 trades in the first quarter of 2026, with transaction values reported in broad range from at least $220 million to around $750 million. The names included some of America's most powerful companies: Nvidia, Apple, Microsoft, Meta, Oracle, Broadcom, Bank of America, and Goldman Sachs. The filings do not reveal exact profits, exact prices, or the full strategy behind the trade. But the scale of the activity is what raised eyebrows. For a president, when even a routine stock trade can become a headline, the trades involving companies affected by government policy becomes a question mark. The concern is not simply that Trump or managers acting on his behalf bought and sold assets. The concern is the intersection. Nvidia depends heavily on US policy for the export of advanced AI chips. Boeing is deeply connected to defense, aviation, diplomacy, and overseas deals. Big tech companies constantly deal with antitrust, regulation, and government contracts. When the person at the top of the government has financial exposure to companies that need decisions from that same government, critics argue every policy move can start to look like a market signal. And that brings the story to the central controversy. Critics say the question is not whether every transaction was personally ordered by Trump. The Trump Organization says his holdings and independently managed by third-party financial institutions, that trades are made through automated process, that Trump, his family, and his company do not select or approve specific trade. But critics argue this defense does not remove the larger concern. Trump did not fully divest. He did not move all assets into a classic independent blind trust. His business empire remains linked to family-run structures, and many of those businesses operate in sectors touched by presidential power: crypto regulation, foreign investment, real estate, media, technology, exports, tariff, and corporate approvals. The White House and Trump Organization reject conflict of interest allegations. Their argument is clear: the investments are independently managed, the president is not choosing trades, the family is not approving market decision, and the administration's policies are made for the American public, not for private gain. There is no proof in the filings that Trump personally timed trade to policy decision, but ethics experts say this is not the only test. The test is also whether the public can trust those decisions being made without financial shadow. For supporters, his mega profits look like proof of Trump's business instinct. For critics, it looks like a warning sign. A president whose private finances sit too close to public power. Bureau Report, Business Today Television.
Bitcoin is going to the moon, as we say. It's going to the moon.
An 11-year-old boy left home for school, carrying his school bag, looking forward to another game of cricket after class. But he never came home. Today, his grieving mother sits holding Vihan's cricket bat, waiting for a son who will never again ask, "Can I go out and play?" This is India's financial capital, where parents believe a school bus is the safest place for their children. On Tuesday, that belief was shattered. A roadside tree crashed onto a school bus in Chembur. 11-year-old Vihan Shivastav never made it home. 5 other students survived with injuries.
During concretization, a little bit of digging is done, and at that time the root was found to be a little hollow, and that's the reason the residents say that they had asked the contractor to ensure that the tree is removed. However, the contractor, being someone who was actually only in charge of doing the roads, he did not take this seriously and went ahead and did the concretization.
Local residents claim they had complained the tree posed danger.
बड़ा था लेकिन पोकल हो गया था आधा, ऐसा लग रहा था गिरेगा कभी भी ये।
कंक्रीट वर्क जब चल रही थी, हमने उनको बताया कि हीट के वजह से रूट्स ड्राई हो गई है और ये डिग कर रहे थे कम से कम 1.5-2 फीट। तभी एक डाउट था कि कुछ ना कुछ होने वाला है।
Mumbai Mayor Ritu Taure has ordered a probe. The BMC has constituted an inquiry committee.
कुल मिला के 13 स्टूडेंट वैन में थे, उसमें के जो 12 स्टूडेंट है अभी वो आउट ऑफ डेंजरस है। एक जो बच्चा है वो एक्सपायर हुआ है। जो भी पालिका प्रशासन का उधर अधिकारी है, वार्ड ऑफिसर है, उसके ऊपर जवाबदारी निश्चित की जाएगी।
Even as Mumbai mourned Vihan, another tree crashed onto vehicles in Kurla. And in Navi Mumbai, 2 young women riding a motorcycle suffered electric shocks from an exposed wire near the Nerul LP bridge. Both are out of danger. The mayor has ordered an inquiry.
2 मुली कॉलेजवरून येत असताना इथं ओपन वायरवर त्यांचा पाय पडून त्यांना शॉक लागलेला आहे. नशिबाने त्या सुखरूप आहेत, त्यांना जास्त इजा झालेली नाहीये. नक्कीच अशा पद्धतीच्या घटना यापुढे घडायला नकोत. आम्ही MSCB असो किंवा इतर प्राधिकरण त्यांच्या माध्यमातून हे चूक झाली असेल तत्काळ दुरुस्त करण्याचे निर्देश देण्यात येतात.
A falling tree in Chembur, an exposed live wire in Navi Mumbai, different incidents, but the same uncomfortable questions about civic safety. The monsoon cannot be stopped, but tragedies caused by neglect can be. The question is, will this be another report filed away, or the moment those responsible are finally held to account? With Vidya and Mustafa Sheikh, Bureau Report, India Today.
Good morning, ladies and gentlemen. A warm welcome on Business Today Television. It's proving to be a good day as far as markets are concerned. The Nifty is now consolidating above 24,000, and of course, it's the IT index that's pulled out all stops. A very strong bout of short covering and value buying on many tech stocks has made them to be the top 5 or 6 stocks in terms of gainers in the top 15. Infosys up 5.2%, Persistent adding 3.3%, TCS 3.3% higher, and you have strength coming across the board in Coforge, Sonata Software, so on and so forth. Let's also look at the other parts of the market, assets which probably may have come off highs and are offering value to deep-pocketed long-term players. Joining us on the show is Mr. Kunal Shah, Head of Commodities Research at Nirmal Bang Securities. Namaste Kunal ji, a very warm welcome, sir.
Namaste.
A bit of a cool-off happening on silver and gold as also in oil prices. How are you watching the entire commodity space as far as precious metals and energy is concerned? Kunalji, your first thoughts here.
So commodity has gone through a significant correction in last 1 month because of three reasons. One, the rate hike narrative by the Federal Reserve. Kevin was pehle rate hike ke narrative. He was sticking to the rate hike narrative. Second, because the US inflation soared to 4.2% and US job market was very strong, that made market to believe that interest rates in US are moving up significantly, going to move up significantly, and hence commodity should go down. But the reality is completely different. Yesterday, Kevin was turned little dovish. He's saying that inflation will come down in months to come because whatever inflation rise we had seen in US, out of which 1.5% rise is coming from the energy inflation. So if energy prices are going down the way they are going right now, US में inflation will come down to 3.3, 3.2%. So in that scenario, rate hike is not warranted. So now the entire narrative is flipping, which makes me believe that commodity after this correction presents tremendous value to go long, especially bullion. We are bullish and we believe that 10 to 15% upside from here is very likely going forward. As far as the sharp upside from here, the likelihood of that is very high, but conservatively in next 3 months, the prices to move up by 10 to 15% is very high.
Okay, fair point. The other issue, Kunalji, that's also facing the commodity space is this inherent strength in the dollar. It's also moved in 3 digits above 100. How are you viewing this strength? Is this temporary?
Absolutely, it is temporary. Quite rightly said, the dollar index cannot strengthen significantly from here. 3 reasons. Because if the dollar index strengthens significantly, and it becomes very difficult. I mean, for dollar to strengthen, the rate should be higher. And if rates are going up, the US housing market can collapse or some other accident may take place. So I think dollar index should peak out around 102, 103, this kind of levels. And eventually, it should come down below 99, 98, that kind of level. So whatever upside we have seen is going to be short-lived. You saw the news yesterday. The Japanese government also likely to intervene. They intervene in the FX market. So
yes,
the yen is also going to appreciate from here. And the trend going forward for the dollar index is definitely going to be on the weaker side.
Yes, in fact, the USD yen pair actually is one of the most critical issues which is facing the market at this point of time. Let's see what's its value. It should correct USD JPY is what I'm looking at. Yes, this is the one. 162. Yes, this is something that needs to come out. What could be the possible 2 or 3 reasons why the USD JPY pair could show signs of coming off, Kunalji?
Well, if the yen continues to depreciate the way it did, it creates problem for Japan because all the imports of Japan becomes very expensive and the inflation will move up and that should lead to a much higher interest rate. Same problem, Japan's debt to GDP ratio is more than 130%. So Japan cannot withstand aggressive rate hike from here. So any which way, they have to curtail down this yen's depreciation. And the central bank yesterday intervened, and I think yen also have peaked out in near term, and the likelihood of it going to 155 is very high.
Yes, the last time you saw this pair was in September 1986, ladies and gentlemen. So you can see the weakness of the yen, which is creating this artificial dollar strength too. So this should peak, and once these two come off, you'll also see a positive impact on gold, silver, oil, as also Indian markets. Final set of questions, Kunalji. How are you now watching the physical market of gold and silver. Last time we had met, you had specifically mentioned that demand in the physical market of silver has outstripped absent supply. So that market is just getting to be empty and possibly will move to a premium.
So yes, silver market right now is in a premium, and with imports not coming in, the scenario is pretty dicey right now. But the fall in the silver prices is mainly attributed to the macro reason. It has nothing to do with the Indian demand and supply scenario. The Indian government, whatever restrictions they have imposed on the silver imports, I think the supply side is getting squeezed in the domestic market, and hence we believe the physical stock in India is pretty high, because the import what we saw in the month of October, November, December, and January were pretty high. So that's why there is no issue of availability. So I believe that going forward, silver, the supply scenario to continue to worsen.
Okay, fair point. But when will this start reflecting on the physical price of silver? At the moment, we've had a 50-55% correction in prices from what they peaked at somewhere like 421, 422, 422 per kilo. What is your prognosis on the silver price?
Silver fundamentally doesn't look very bullish, but in line with the gold. I mean, $55 seems to be the bottom for silver right now, and the possible upside from here immediately doesn't look very likely, considering what is happening in the metals. But I believe that there is a deep value. The moment prices goes towards $56, $57 in India, towards 210,000, I think one should start accumulating it.
Okay, fair point. And what's the prognosis on gold? We just saw a fairly strong correction coming into gold prices as well. How are you watching the physical market in Zaveri Bazaar across Indian jewelry scene? What's the feedback you are getting from the physical buyers of gold?
Gold looks quite positive. Gold, I'm optimistic. Trading bounce is expected 1.5-2 months down the line, and from here, 5 to 10% rally is very much a likely outcome going forward. So gold, I'm pretty bullish.
Okay, take care. Perfect. When would you think this bullishness would start reflecting in prices?
I think you have to understand the macro narrative that rate hikes are myth in US. Any major rate hike is not sustainable. So whatever fall what we saw lately was because of the strength in dollar and the rate hike narrative, which is not going to stay. And hence I believe that there is a tremendous value in gold. And like you saw Bank of Poland coming up with a statement, they want to accumulate 100 tons of gold. So central bank buying will continue to dominate going forward. So we believe that fundamentals of gold are still not bearish for next 2 years.
Okay, fair point. But these prices will consolidate at current levels?
It may consolidate, it may not move up aggressively, but the next leg should come on the upside rather than on a downside.
Okay, fair point. And the elephant in the pack, which is the crude oil prices, now firmly below $70 a barrel. When do you think the Chinese strategic reserve will start to rebuild, Kunalji? What is that level that the market is watching at?
Brent shifting below $70 is a great sign. It's a great time for all of these G7 economies and China to refill. Even country like India, each and every nation would like to refill their inventory, and Brent going below 70 would be the right time for them, because the same Brent was trading at 120 2 months down the line, and now that is drifting towards $70. So I think that they should not wait. They should gradually start filling their reserve with every fall in the price from here.
Okay, fair point. And the agri space, Kunalji, the lack of a monsoon has sort of revisited agri bulls. Where are you seeing price build-ups?
I think a soft commodity like something like turmeric or coriander or even sugar, cotton, all these commodities are going to do well from the price hike point of view. And the super El Nino impact will be felt post-August very badly, and that is the time. So August. So I think the possibility of winter crop getting affected because of super El Nino is higher than the summer crops. So commodity like cotton and sugar, they should do well going forward.
Do you have any long positions in any agri commodity?
No, I mean I don't do trade, but there are no bets on our side for agri. I mean, we are not having covering a lot of agri commodities. We used to, but now we don't.
Fair point. For your clients, where are they long in terms of the commodity space on a net basis?
So we are recommending right now to accumulate gold, and our clients are long in gold and really outperform from here. That is my highest. Second, we are also recommending with the current fall in copper prices around $12.50, $12.60 on 12.50, 12.60 rupees on MCX. Copper is also a good value buy. So these are the two commodities which are our top picks.
Okay, so copper and gold is where long positions are being advised by Nirmal Bang Securities for their HNI clients. Any short recommendations in the commodity space?
Only oil. Only oil looks weak. Rest all commodities are likely to do well going forward.
That's an interesting point. A lot of people actually whom I speak to, many of them are your friends as well. They're looking at about $65 to the barrel as something where probably some short trades will unwind. Would you agree to that assessment?
Exactly. $65 looks very likely. Another $3 to $4 downside is the most likely outcome going forward.
Okay, fair point. In terms of other energy assets such as natural gas and all, has the bull market unwound there?
No, I think it's still time, because this is the time when the inventory in US starts getting built, and from September, October onwards, you start seeing a gradual draw, and November, December is a peak drawdown season. So right now, natural gas prices are not going to go up. They will remain under pressure in near term. The inventories will be higher, the production will be higher. So this is not the time to see upside in natural gas prices.
Okay, and what about other spaces in the market where you see this bull market taking shape? For instance, money is moving out of gold and silver, it's moving out of oil. Where is it going?
I think the rotation of money, what we are seeing is the AI trade is unwinding right now. The commodity has unwinded right now.
Yes.
Right now, it's a very difficult time. If you see, there was a rebalancing by US pension funds 2 days back, and major money is seen moving in the fixed income market going forward. So whatever is happening in the world right now, the biggest beneficiary of all of that is the fixed income market.
Rightly put. I think that's a space worth watching. Thank you so much, Kunalji. As always, it's such a pleasure listening to a very evocative part of the market, which has been doing very well in the past. Thank you for joining us. That, ladies and gentlemen, was Mr. Kunal Shah. at Nirmal Bang Securities, the top man of the commodity space. Thank you for watching. I'll be back shortly.
Hello and welcome. You're watching Business Today Television. I am Sakshi Batra and this is our special edition where we're going to be decoding for you everything that you need to know before you file your ITRs this season as well. Remember, the ITR filing season is officially here and millions of taxpayers, it's time to get your paperwork in order. But along with this season, it comes a lot of confusion also comes. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can file.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
ICFA University, building tomorrow's leaders today.
Good afternoon, dear viewers. You're watching the Business Today show with me, Sakshi Batra. This is where I get you all the closing action on Dalal Street. But first up, let's take a look at what's hot in the corporate and the financial world. The Street extends its winning streak for the second straight session. The Sensex surges nearly 600 points to around 77,500 mark, while the Nifty climbs 180 points to now trade at 24,200. IT stocks have led the rally today, with metals, consumer durables and chemicals adding to some more gains. Adani Group and Abu Dhabi's IHC have formalized their $11.5 billion aluminium project in Odisha. The integrated venture will span the entire aluminium value chain, create over 53,000 jobs, and rank among the world's largest aluminium ecosystem investments. More upbeat auto sales numbers are rolling in. On the second day of the June sales announcements, we've seen TVS Motors report a 47% surge in two-wheeler sales. Bajaj Auto's total sales have also climbed 28%, while Porsche Motors has posted a 24% gain. Carlsberg is reportedly tapping India's booming IPO market. The Danish brewer has confidentially filed draft papers to raise up to 6,600 crores through an IPO of its India unit, likely via a secondary share sale. India's second largest brewer holds around 22% market share, and the listing could hit market later this year. India and Japan strengthen business ties. Prime Minister Narendra Modi says the latest round of talks will now bring in $10 billion of investments. Deals signed for AI, economic and energy security, and even bullet trains. We'll straight away look at how the markets are trading at this point in time, viewers. We have moved up as far as the market sentiment is concerned. You're looking at the day's high point and a 0.7% surge as far as the Nifty is concerned, 24,172. It's clearly the IT stocks that have pulled up in the session after 4 days of losses. 4.5% kind of an increase on the IT stocks today, along with real estate. That's up by 1.5%. You're also looking at the broader market sentiment improving. Barring PSU banks, that's down by about 0.3%. Rest all of the sectors have pulled up. It's a broad-based buying action that you're witnessing on the markets. A lot of top gainers on the Nifty pack are from the IT pack. Anywhere between 2 to 5% gains can be seen on individual IT names. A lot of them are large cap names, like Infosys is up 5.5%, and you see the rest of them follow suit as well. We're also looking at some of the large cap finance names up and about in the session today, along with the IT names like Bajaj Finserv up by about 3%. Let me now welcome our guest on board. We have Abhishek Basu Malik, the co-founder and fund manager at Sri Rama Managers PMS, joining in to share with us a fresh take. Good afternoon to you, Abhishek. Good to have you. How are you looking at this change of market mood? We are into the second half of the calendar year. Right at the very beginning, it seems like the markets are starting off with a lot of optimism, of course, backed by a lot of positives on the global macro front. We have cooler, crude oil prices. We also have easing tensions as far as geopolitical concerns were seen. And now we are looking at how will things pan out in the second half for the markets.
So I will not, say the cliche that the second half of the year is going to be better than the first half. But I genuinely believe that, the second half or the fourth quarter especially would actually be better. The first quarter of the year probably will have, the results which will start coming in will have some impact of the Iran-US war that we'd seen. So expecting some margin compressions, some lowering of sales growth. But in general, I am pretty optimistic that over the next 2-3 quarters, results are going to get much better. We have, like we discussed last week, our corporate results have started getting better over the last 2 quarters, expecting that trend to continue. Maybe this quarter would be a slight, aberration, but going forward, I think things are likely to get much better.
Okay, let's move forward and talk about the very important news flow we've been showing you since morning on both India Today and Business Today television with regards to both India and Japan taking their strategic global partnership to the next level now following wide-ranging talks in New Delhi. Prime Minister Narendra Modi and Japanese Prime Minister Sanae Takaichi have unveiled an ambitious roadmap spanning AI, defense, energy security, even semiconductors and the next generation mobility with fresh investment commitments over $10 billion. The two countries are now looking to deepen the economic as well as strategic ties. Let's listen in to what Prime Minister Narendra Modi had to say right after the talks.
Friend, आज के अनिश्चितता भरे युग में भारत और जापान दोनों इकोनॉमिक सिक्योरिटी और एनर्जी सिक्योरिटी का महत्व अच्छी तरह समझते हैं। इसी दिशा में आज हमने इकोनॉमिक सिक्योरिटी के लिए एक ज्वाइंट रोडमैप तैयार किया है। इसके माध्यम से हम सेमीकंडक्टर, क्वांटम और एडवांस मटेरियल जैसे स्ट्रेटेजिक क्षेत्रों में सप्लाई चेन रेजिलियंस को मजबूत करेंगे। एनर्जी सिक्योरिटी के क्षेत्र में भी आज हमने कई महत्वपूर्ण निर्णय लिए हैं। जापान की प्रिसीजन टेक्नोलॉजी और भारत की सॉफ्टवेयर क्षमता, इसका संगम वैश्विक एआई विकास को नई गति और शक्ति देगा।
And viewers, when it comes to your own retirement planning, a major change has come into effect in the Employees Provident Fund system. The EPF contributions above 1,800 rupees a month are now going to be voluntary, while the mandatory contributions remain capped at the wages up to 15,000 rupees statutory ceiling. The change definitely gives employees greater flexibility in deciding how much they want to contribute towards retirement. But what does it really mean for your take-home salary, your retirement corpus, as well as your long-term financial planning? Let's try and decode that. We have an expert with us, Ketan Das, our business head at FinRight Technologies, to break down the new rules, the impact on the salaried employees. First up, Ketan, give us an understanding this new change that has come about that makes any contribution above 1,800 rupees by salaried employees as voluntary. What does it truly mean? Is it a good thing or a bad thing?
So, Sakshi, first of all, these rules had already existed in the 2014 mandate. It's just that now it has been carried forward and rephrased. Earlier also, if you look at it, employee and the employer had to sign and voluntarily contribute above the 15,000 limit. So right now that clause is still there. The employees can still contribute along with the employer as per their actual salary, actual basic salary. So whether or not this time they will enforce this. See, earlier the enforcement was lacking. People were able to contribute as per their actual basic salary. So the enforcement, if this happens, if they clearly state and the EPFO clearly states that you cannot contribute above 1,800, you have to give it in writing. If that is being enforced, then it really changes the employees' contribution significantly. And like you mentioned, right, if the contribution by the employee is limited to 1,800, the employer will also contribute 1,800. And as a result of which, you can renegotiate your salary and get a higher in hand every month. Right? Because if you calculate 12% of your basic salary, and it was a significant portion that was being deposited into PF, and the employers did not really give you an option to choose whether to stay at 1,800 or contribute as per the actual limit, right? But now with the new rules, if they mandate that the 1,800 limit is mandatory and employee has to explicitly sign if they want to go beyond that 1,800 limit, right?
Right.
So that
Ketan, I think a lot of people will have this question. How should one go about restructuring their own salaries now? Can they increase their voluntary contributions? How much can they increase it to? And whether that will be a good idea? We do know that EPF contributions attract an interest of 8.25%. So how much of the voluntary contribution should be made?
So see, technically you can voluntarily contribute up to 100% of the wages that is declared in EPFO. So if you're contributing as per your basic, you can contribute up to 100% of your basic salary. The one thing that you need to keep in mind is it should not exceed 2.5 lakhs per year. If your contributions exceed 2.5 lakhs per year, they will become taxable, as a result of which the 8.25% interest benefit that you're getting goes away, right? So in any case, if you're planning to contribute, keep it under 2.5 lakhs. If you want to stay with the minimum contribution, stay with the minimum contribution. This was always this was always an option. It's just that the awareness about it was not there with people. Right now, with the new rules coming in explicitly stating that it is capped, people can always go back to their HRs and negotiate that the contributions be limited to 1,800. One important note is, earlier, if you were contributing on a higher basic and suddenly switch back to the 1,800 rule, then employees would start getting rejections stating, why this sudden decrease in contributions? Can you please clarify? So you had to submit a clarification letter of sorts. So right now, we don't see any confirmation of any sort of forms being floated by EPFO where I can voluntarily now go back to the 1,800 contribution. So we'll have to wait on the implementation of this.
Yes, absolutely, Ketan. I think the last question would be to understand from you for our wider audiences, is it better to have that flexibility on my own and take a decision as to how do I want to really spend my finances, whether I want to contribute to a retirement planning platform like an NPS, should I invest that money in a mutual fund or a direct stock market equity which gives me, of course, higher risk, but also better reward kind of an opportunity. But at the same time, if higher pay in hand salary will mean also higher tax outgo, how should I be deciding that?
Correct. So definitely, you'll have to consider taxation point of view, right? If you're in the higher tax slabs, asking for a greater in-hand salary would also mean that you're getting, in fact, lesser because you're paying out taxes right now. And EPFO is a good triple product that gives you government-backed guarantee on 8.25% interest, which is, so in the short term, if you look at it, right, EPF definitely beats the equity markets in terms of, at least there's no volatility, there's a guaranteed 8.25% return. And the important point is people lack discipline. In India, how many SIPs get stopped as soon as the markets fluctuate, right? So EPF by design is a product that brings in discipline into an employee's life. And that's why the retirement corpus in EPF tends to be quite significant, right? If that option goes away and NPS at the same time is a great product. If you want to invest in NPS, there's a good taxation benefit. If you think that if you don't have discipline, then opt for a minimum contribution in EPF. At the same time, ask your employer to contribute in NPS because you'll get a good tax benefit out of it. And unless you are very confident about your discipline and your investments, then definitely you can stay at 1,800 and take the money and invest it yourself.
All right, Ketan, thanks for getting us all of those insights. Of course, this begs a longer, deeper discussion with all the FAQs answered, and that will happen on Business Today with Ketan tomorrow morning at 10:30 as well. But let's look at another breaking news coming in, viewers, and this is with regards to the banking committee. The centre is likely to set up banking committee now. This is what sources are telling Business Today television. High-level banking committee could be formed before the monsoon session, and the banking reforms are back in focus. The committee is awaiting right now the PMO nod, and sources are already talking about how the committee is going to be charting the banking sector roadmap as well. Let me go across to my colleague Karishma Sudani, who's been getting us more details on this. Karishma, what are you hearing from your sources when it comes to the formation of this committee? Why at this point in time is it essential right before the monsoon session, and what will be on top of the agenda for this committee?
Sakshi, if you remember right, it was during the budget for 2026-2027, just about a few months ago, that Finance Minister Nirmala Sitharaman had announced in the Parliament about the formation of a high-level banking committee that will overlook and oversee reforms pertaining to the banking sector in India, particularly with a specialized focus on PSBs. Now, post this announcement, what also, of course, came as not so pleasant surprise was the West Asia crisis, which derailed the formation of this committee a bit. But now we are picking up from sources in the Ministry of Finance, in Government of India that government is very soon going to constitute this committee. The terms of reference have been finalized by the Department of Financial Services. They've been submitted to PMO. The PMO has given a green light, but what has not yet been decided is the members of the committee and chairperson of the committee. Likely, it's going to be former DFS Secretary, Mr. M. Nagaraju. His name is one of the suggestions that has come in from senior PMO officials, but things are not finalized yet. But once this committee comes into being, actually, it's going to be very important to try and get deeper when it comes to reforms pertaining to India's banking sector. We know that government has been wanting to go big when it comes to consolidation in PSBs or even bring in increased FDI limit and to make Indian banks more recognizable at international scale.
Yes.
So all of this will be individually studied by this committee.
Right. Thanks a lot, Karishma, for getting us all of those details. Let me quickly go across to our guest, Abhishek, to take a view there. Abhishek, the banking space has, of course, always looked at, from top market experts as an important part of the core portfolio of stock market investors. There's nothing that you can do without the banks and the financials having formed, a core part there. We're already looking at, how the FI investments, have a large constitution as far as the banks are concerned. We're now looking at the government looking at elevating the role of Indian banks and making them competitive on a world scale. And that's perhaps what this banking committee is yet to do. How are you looking at the banking sector as a whole right now? Do you think there are lots of reforms in the making, and therefore is it, attracting you at this point in time as a market call?
So I think one of the points that were being raised earlier was some sort of a merger of some of these banks, the Bank of Baroda, PNB, etc. Although they are by themselves fairly large, there were discussions that, do we need to bring them together to match the scale of the largest banks in the world? So that is definitely one thought process that is going to probably be at the top of the agenda for these banking, committees. The rest, we'll have to wait and see what the agenda that is laid out for them. It could also be that, foreign holding could be increased, or it could be that there are, some other regulations that might be brought in. So overall, I think we need to, wait and see what are the terms of reference for this committee before we can actually take a call.
Okay, got that. Let's now also shift focus to the Adani Group, which has formally unveiled its biggest metals investment yet. Adani Enterprises and Abu Dhabi's international holding company IHC and the Odisha government have signed an MOU for $11.5 billion integrated aluminium project that is expected to generate 35,000 construction jobs, 18,500 operational jobs as well. We're also looking at how this could be meaningful when it comes to the India's metal story and the growth prospects there. What exactly is your thought process, Abhishek, as far as the metal space is concerned and the Adani Group betting big on that story?
Again, the Adani Group has been known for its foray in the real assets sector, whether they've got into cement, they're in infrastructure, in terms of ports, airports, all of them. So these are all sort of logical extensions or backward integrations of what they are doing. So not too surprised that Adani is stepping into yet another field within the real assets space. So that's one part. I think overall metals and real assets, whether it's steel, cement, aluminium, copper, real estate, etc. All of this is going to be in demand for the next few years, at least, because what we've seen is there's tremendous amounts of uncertainty that's there across the globe. So whenever we see heightened uncertainty, we see a flight towards more less uncertain or more tangible asset classes. So I think that's where a lot of money is going to move towards. We've already seen a very sharp run up over the last 1.5 years, 2 years in gold and silver. Now that is tapered off. So now I think the next logical move is towards more of metals and these kinds of hard assets.
Absolutely. Well, let's also listen into what Karan Dandani had to say about this MOU, the investment and the plans at large, although the Adani Group as a whole has been reacting positively to the news flow.
With a proposed investment of USD 11.5 billion, or translating to nearly 1.08 lakh crores, this is among the most significant aluminum ecosystem investment anywhere in the world. And we are extremely proud that we are doing this venture along with our trusted partner, IHC. But its true significance lies not only in the size of the investment, it lies in the depth of its impact. This project brings together the full aluminum value chain in one integrated ecosystem. It envisages an alumina refinery of nearly 4 million tons per annum, an aluminum smelter of nearly 2 million tons per annum, and a downstream aluminum park of nearly 1 million tons per annum. It will be supported by a captive power plant of about 4,000 megawatt and a green energy component.
All right, viewers, let's also shift focus to the big story that we've been tracking, and that's as far as the IT stocks and the rebound there is seen. Of course, after 4 days of consecutive fall, we are seeing the IT index back in flavor, 4.7% higher. Most of these stocks that had hit a 52-week low in yesterday's trading session, Infosys, TCS, Wipro, LTIMindtree, and after having fallen 50% from their peak, these stocks are rebounding again. Is it a dead cat bounce? Is it something that one has to look at as a considerable structural revival, revamp of sorts, and one has to look at it? Let's try and decode that with Abhishek. Abhishek, we've been discussing the IT space for a really long time with you. Of course, the kind of disruptions we've seen from the AI, that has been an issue. We've seen how the weak guidance given by the earlier, quarterly guidance that met with a lot of impact on the market sentiments was seen. This kind of a rebound is happening just about a week before the next set of earnings come in from the IT pack. And this is despite the fact we have seen Accenture from the global arena also give a cautious stance when it comes to the earnings outlook. We've seen even select IT pocket stocks like KPIT Tech that dragged the entire IT space yesterday with the guidance that they had given. What do you think is the reason behind this rebound? Are people bottom fishing right now? Is it a good strategy to have? And how are you looking at the IT stocks?
So in short, I think I'm not very positive in the very short term. I'm very positive in the medium to long term. So my rationale here is short term, the news flow, etc., will continue to be very choppy, very uncertain. One day you will find Anthropic releasing something and all these stocks will be down again. But over the medium to longer term, which is say a year to 3 years hence, I don't see a situation where any global enterprise is going to sort of revamp their code base or enterprise code base just by sitting, hiring a few engineers and letting them on with Claude or any other LLM. That's not going to happen. Ultimately, they are going to come to these IT services companies. Most likely, all these IT services companies are going to rebrand themselves as AI service companies. And that's how it is going to be. Ultimately, they will need consultants. They will need domain experts. The immediate near future, the challenge is you have to show productivity gains, and that thereby your revenues will get sort of capped, and your margins might get hit a little bit. But beyond that, medium to long term, business wise, they look very, very good. If one has a long term horizon, I think, if you start sipping into even the IT index, that might not be a bad idea.
Might not be a bad idea. Let's quickly look at now how the markets have shut shop, viewers. Of course, top gainers are from the IT pack, and the Nifty has ended about 0.67% higher, 24,166 odd levels, near the high point of the day. And along with the IT names, it was Bajaj Finserv that formed the gainers part. We're also looking at the Nifty advances at 2,094 vis-a-vis declines of 1,045. So 2:1 kind of the ratio as far as the gains and the losses are concerned. We're also looking at several other stocks like real estate names. Prestige Estates also moved up in the session today. We're also looking at several other stocks like Electronics Mart that moved up about 7.7% higher. We're looking at Zensar Technologies moving up in the session, almost 10% kind of a trading move is what we've seen there. CE Infosystems about a 9% move. Exide Industries, Sona BLW Precision about a 7% rally that we have seen in the session today. These are the stocks that are higher by anywhere between 5 to 7 odd percent, and the broader markets also managed to gain about half odd percent in the session today. The mid caps up by about 0.46% and the small caps slightly better off too. The market breadth has definitely been positive. Let's see how things really pan out for the remainder of this weekly session as well. But let's now take some questions of your viewers with our guest now. We have Abhishek with us, and Abhishek, the first question coming in your way from our viewers is from Vivek Bharadwaj from Bengaluru, who says, is it the right time to invest in PSU stocks for the long term? Well, they've been out of visibility for some time now. What's your sense?
Not really. I mean, so first of all, we need to understand that PSUs are not a homogeneous basket, right? So public sector enterprises are there from, defense to shipbuilding to steel to, pretty much everything. It's not in one particular sector. So you can't sort of take a sectoral call on this. But if you go at look at individual companies and then take a call, that's a much better way of looking at it. So PSUs, per se, I don't have a view. But if I look at, from individual sectors, PSU banks, a lot of them look very interesting. Defense, again, very, very good. Capital goods, manufacturing, power, again, some of them look very, very good. So you have to be very specific in terms of which sectors and which stocks you are looking at, just not, looking at the ownership structure.
Rishabh Singh from Lucknow has the next question, and he wants to know about the auto space. Is it electric vehicle companies or the traditional automakers? Which one offer better investment opportunity at the current stage? We've also seen the EV policy rollout from the Delhi government, and more states might follow this, looking at the environment needs there. But how are you looking at it as a market participant? EV-specific focused automakers or traditional ICE vehicles, even though they're also focusing on hybrid and EV space too?
So I would actually prefer playing it through the auto ancillaries, because then you are not specifically looking at whether EV wins or hybrid wins or ICE engine wins. You are looking at at ancillaries which are suppliers to all of them. So that's one. The other side is, if I have to, have to play, the auto companies, I would prefer the EVs or ones which are focused on EVs, because especially EV two-wheelers, the EV two-wheeler ancillaries, because what is happening in Delhi is more likely to be replicated in other states sooner rather than later.
Right.
So that would give a good opportunity.
Right. Thanks a lot, Abhishek, for being with us on the show and for guiding all our viewers there. Viewers, in case you too have any questions about your investments in stock markets, your mutual fund queries or gold-related queries, then send them to us on the number that's flashing on your screens. With that, it's a wrap on the Business Today show. Thank you so much for watching. Stay tuned in.
Presented by
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
कोई दिसता जहांगीर तो यार बिहारियां पीछे चलते यार बहुत ही कसम है.
Pakistan continues to support cross-border terror in India. Continues to back terrorists who bled India. But that has not